corporate pricing power. Do you see that as well?
So it's a great point, Matt. You know, I have noticed when we read through earnings call transcripts, if I go back to the calendar first quarter when we were getting the 4Q prints, the company commentary about inflation was just really, really hot. And it's not so much that the pricing commentary was really hot, but we did see corporates really being pressured by those inflationary prints. And we saw, you know, a decent amount of evidence of some companies trying to cling to that pricing power. As I got to this last reporting season, I will say that the complaints about input cost pressures really seemed like they died down a bit. They weren't completely gone, but they weren't just as hot as they had been in the prior one. And we have noticed, you know, just in recent quarters, if we go back, you know, what we've seen the last few quarters versus what we've seen the last few years, the pricing commentary just isn't as strong as it's been in the past. So I think that's probably a pretty fair comment just based on what I've seen bottom up.
Lori, great to get your take this morning. So happy we could have you on. Lori Calvasina there is the head.
check, mic check. Mic check, mic check. Mic check, mic check. Hey everybody, welcome to Trading Capital's daily live stream of the market open. Today is currently June 12th, CPI day and Federal Reserve FOMC interest rate policy day, so a whole host of volatility. Today we have the CPI pushing. We have the markets pushing on the back of a lighter CPI. So right now, the equity markets are pumping to new all-time highs. You can see the QQQ trading at 472.35. Russell getting an astonishing gap up. Take a look at that move. That is quite something to behold and witness. But right now, what's very, very interesting is you have the equity markets ripping. You have yields collapsing on the 10-year down 2.4. You have the dollar getting obliterated down 0.8%. And the markets are set to rally off of this, and certainly we're seeing that in the pre-market. But believe it or not, I think that there's a scenario where we're actually going to get faded off of the open, and then potentially a trend day into FOMC. So I'm very curious to see how we actually, if we hold these gains into FOMC, or if people move more defensively. I'm actually looking at fading this market off of the open. I do think that there's a chance we get some sort of a profit-taking pullback. And what's very, very interesting about this price action in the market is as you see the inflation expectations lower, going down to now 3.3%, the question is this rally in the market justified when we've had just a tiny disinflationary pressure for the month of May? And what I find phenomenally interesting is the CPI barely budged when you had oil in a very strong downtrend looking like it was breaking down. And as central bank policy is now sniffing out cuts, and you're seeing the Bank of Canada, the ECB, look what oil's done. It's made a strong reversal, not just a 1 or 2 day candle, a huge weekly reversal on the chart, and now pushing for basically the high end of this range. So as we get into this disinflationary trend and central banks think they can take their foot off of the gas, we're seeing commodities starting to reverse. You have oil pushing today. You have gold and silver pushing. You have copper up a couple percent. So I do think that there's a scenario where the markets can actually get faded here off of the open. I'm also looking at a long trade on uranium. I do like uranium, but oil right now is putting in a massive reversal that's going to impact the next month's CPI. Again, CPI is always 1 month delayed. This is the month of June, so we're getting May's data. And when you look where the start of May on oil was, it was this impulse red candle down. And for the whole month of May, pretty much oil was in a little bit of a declining trend till the end of May, which was right around this candle here. So you had oil putting disinflationary pressures on the CPI. Now you have it re-accelerating. So we run into a scenario where you have nat gas, which has been phenomenally strong over the last several weeks. You have oil putting in a big reversal. Copper might be trying to put in a reversal here. Gold, silver ripping. The market is still forward looking, and I do think at some point it's going to have to start pricing in probably a stronger oil, because it's looking like oil is trying to break out today of this falling wedge pattern, which, believe it or not, gives us a minimum upside target of about 83, 84 bucks, and could be even higher. So I still think that there's a fading opportunity here in the equity markets. It's just kind of a hoorah pump. Now, what I could see happening today is a fade off of the open, and then a bounce intraday to take us potentially back to the highs. And then I think Powell could actually clobber the markets back down. So I'm looking for a couple different opportunities here. I'm looking at uranium. I might be entering some longs on uranium in the energy front, because the energy complex is looking quite strong today on the back of oil. So I'm watching uranium very, very closely. I know solar stocks, some of the names that we were holding yesterday, absolutely ripping. Sunrun, Enphase, SunPower, Maxon Solar, they are flying today. So I do think that they're areas of opportunity, but I'm waiting for pullbacks on those names because they're a bit extended here in the pre-market. But nonetheless, I mean, it's good to see that some of our longs are now starting to participate, likes of Adobe, ACN, Intel, trying to firm up here. I'm still interested in accumulating net short this market. I do think that with the Qs now officially hitting the upper range of this parallel channel in an extended fashion, I do think provides a very, very high lucrative risk to reward ratio. So I'm looking at fading this market off of the open just to see what we get. I would love for it to push back to pre-market high. That would be the best entry, but we'll see what we get on the Qs. Let's just see what we get on the Qs. But again, as central bankers start to let their foot off of the gas and they think they have a grip on inflation, that's when commodities start to flip it on its head and say, I don't think so. So again, oil skyrocketing again, up 1.27%, but didn't we just have lower inflation? Makes you scratch your head a little bit. Nevertheless, we will just trade what's in front of us today. I'm also looking at the SOXS. GME right now is weak in the pre-market, so that one's coming in a touch. What I find interesting, guys, okay, is Apple. Apple is negative in the pre-market. So even with the strength in the market, Apple's seeing some slight negative price action. It's getting a little bit of a bounce off of the lows right now, but it's still looking a little bit extended here and into major resistance. So interesting to see that Apple's not positive despite pretty much every other mega cap showing some strength today in the pre-market. So very interesting. I think if you're looking at fading a individual QQQ stock, Tesla makes the most sense. You know, there's a scenario where obviously Tesla rips on lower yields, but Tesla's triggered a bit of a bearish formation. And out of the QQQ components, I do think that since we have a bear formation triggered, that if Tesla pushes up into this, call it 173 area, 173.70 today, I think that's a bit of a fading opportunity. So I'm watching Tesla very closely because I do think that that name has been technically weak. Obviously, it's not been putting in highs with the market. It's actually been putting in some lower lows. So I do think that this is one that I'm watching this prior day low to see how it reacts off of that area. Okay? And again, we will have an insane amount of volatility, guys. We will have extra volatility throughout the session. Good morning, everybody. So just be patient with this market. I do think that there's a scenario we see a big pullback in the equity markets at some point, whether it's today on Powell, maybe it's next week, but I do think these markets are extended beyond belief. And honestly, from my personal opinion, again, this is just mine, it could be wrong, the decrease in the CPI of 0.1%, does it really justify this type of rally? And that's the question you have to ask yourself, right? Do you see Inflation continuing to remain sticky around this area. I mean, you look at oil, and I would have expected the CPI to come in a little bit lower than just 0.1% decrease, because now where are we going to get the decrease from when oils looks like it's put in a nice little low? So these central bank policymakers are going to have to engineer some sort of a decline to really get us to break that 3 handle on CPI. With the economy remaining strong and the labor market remaining strong, I don't think there is a scenario where we break the 3% handle, which is obviously a problem. Now the Russell, look at the Russell. What a rip on the Russell. Crazy. We are seeing the Qs come in a little bit here. So we have 1 minute till the open here. Get ready, guys. Get ready for the market open. All right, here we go. Markets are open. QQQ coming in a touch here, guys. QQQ. Seeing the Qs getting faded here. Tesla has already gone negative. Tesla's already negative. Amazon's gone negative already. Look at the market being faded here, guys. Everyone should be ready for this. The market is slowly coming in. QQQ really coming in here. Russell's coming in. We're still seeing some strength in solar stocks. Energy stocks still performing well. Nat gas taking a bit of a hit. Nice to see that our first entry on the short trade is working out well. Yeah, a recession is needed to break inflation. There's no way we're going to be getting below 3%. Apple's pushing to new highs here. So Apple's green, Microsoft being faded, Tesla slightly being faded here. QQQ staying somewhat okay. Uranium's pushing, guys. URA, oil, new high. A lot of green sectors. The strongest sector today is regional banks. Go figure. They were your laggers. NVDA up a couple percent. GameStop down 5. SOX is being slightly faded here. Tesla's getting a really sizable rip. Qs are firming up here. All right, guys, I'm going to look to short the Qs. I'm short the Qs here. 472.20. This is a 1/4 entry. 1/4 entry. 472.20. I'm just with common shares. 472.20. You got a nice little 2-minute hanging man candle there. Let's see. Come on. I'm short the Qs, 472.20. I will add to the position basically every 50 cents. So around 472.75 is my next entry. You could play QID. The Qs are still staying elevated here. The Russell's seeing a little bit of selling. Strength in Google, Microsoft, Apple. Tesla's getting wrecked here. Amazon struggling. We're seeing NVIDIA pushing here at 124. Skyrocketing. Uranium coming down a touch here. Guys, I just added my second entry there on the Qs. Second entry, my average is now sitting at 472.49. Third entry's at another 55 cents higher. Russell's still remaining elevated here. Uranium looking for an entry on URA. GameStop's trying to firm up. Adobe's still looking strong. GameStop's seeing a little bit of momentum. QQQ still trying to press here a little bit. Still trying to press on the Qs. Nat gas still struggling. Oil's still ripping. Again, solar stocks are absolutely flying today. Again, guys, we still have FOMC. You better leave yourself some dry powder. FOMC is still set to take place. Apple starting to rip higher at 209.57. Google's astonishingly strong. Apple is just a monster today. Google's seeing a little bit of selling. QQQ coming down. We're now green on our QQQ trade. We are green on our QQQ trade. Guys, I would fade the Russell. Let me just see where our pre-market high on the Russell was. Just go to the extended hours here on the Russell. Okay, so our pre-market high, I would look for a short on the Russell at pre-market high. I'd fade that opportunity. Solar stocks are just a monster today. They are ripping higher, guys. They are ripping higher. So solar stocks are ripping. The dollar's trying to put in a little bit of a local low here. Obviously, your high short interest names are squeezing across the board. You have a lot of green on the screen. Upstart up 9.6, Nova up 13. I mean, wow, these solar stocks are just monsters today. Max and Solar up another 8. Wolf pushing. Very, very interesting price action here in the shape of things. And I'm still remaining short the equity markets for now. All right, guys, Tesla's coming into an area of opportunity. I'm looking to fade Tesla as well. I did see a nice little reversal. I'm going to wait. Until it pierces. All right, guys, I'm short Tesla. Short Tesla off that pre-market high. It did pierce that area very, very quickly there. Next ad on Tesla is going to be about 60 cents higher. So again, I'm short at 173 pre-market high. QQQ still trying to press here. Again, my average on Tesla, 173, 1/4 position. QQQ next ad level, 473.25. Qs are still seeing some strength. Apple's just ripping. NVIDIA's trying to firm up again. Amazon's struggling. Yeah, it's definitely a long day for now, but you have to price in. There's a lot of... The markets have moved up quite a bit already. Obviously, they're taking full advantage of the weak yields. Apple trading at 211. QQQ coming into my next ad level. GameStop's trying here. Still short Tesla, short the Qs. Seeing a lot of momentum today. A lot of momentum in the market today. NVIDIA up 2.2, GME slightly negative, still Apple up a couple percent, BMR up 42%. Tesla's up 1.19, Oracle up 11, strong earnings there. AMC just turned green, Rivian strong. Dixie's starting to put in a little bit of a bottom here, guys. Dixie's starting to put in a bit of a bottom here. Tesla's falling now. Again, we said let's pick on Tesla because it has triggered that little bit more of a bearish formation. And it is. All right, guys, I just added to my QQQ short there, 473.26 fill, 473.26 fill. My average is now sitting at 472.79 on the Qs. Average on Tesla 173. Apple's a beast right now. NVIDIA's still strong. GME's trying to break out to the high of day here. Alright guys, I'm going to take a stab at uranium long. URA long at 29.44. I just got filled at 29.44 on a uranium long. URA 29.44. This is a 1/4 position. High risk trade. High risk trade on uranium. My stop loss on this ticker. Sorry, let me just flip to the regular trading hours. QQQ pushing up here. My stop loss on uranium is going to be below this 29.27 area. And I will add one more time to uranium if we fall to about 29.33. QQQ still pushing. Tesla's above our area. QQQ seeing a little bit of a reversal. Going for pre-market high. Still seeing Meta starting to see some downward price. Qs are still very, very strong. Tesla's next ad level on Tesla's at 173.60, guys. 173.60. It is above pre-market high, looking a little bit more bullish at the moment. QQQ still relentlessly strong. Apple still relentless. NVIDIA pushing in. Amazon struggling here. Alright guys, Tesla's coming into the next ad level. QQQ's also coming into the next ad level. Alright, I just got filled on Tesla at 173.61. 173.61. My average is 173.30 on Tesla. Uranium starting to catch a little bit of a bid here on the long side. QQQ almost at my next entry. You have the Q's up 1.2, the Russell up 2.86. All right, guys, QQQ, I just got filled there, 473.77. My average is now sitting at 473.16. I am down on the trade slightly, but that is my position that I've accumulated now. So we're holding a long on uranium, short on Qs, short on Tesla. Tesla, we're basically flat. QQQ, we're down a little bit here. Uranium starting to push a little bit. Tesla's coming in a touch here, guys. Qs are still relentless. They're trying to keep their momentum. Qs are still continuing to press. Strength is through Microsoft now. Meta looks like it's being faded here, almost going negative here on Meta. Meta rolling over. Qs are still ripping. Tesla's still stuck. Look at the monster push on the Qs. My oh my. What strength in the market. Alright guys, I'm going to start moving my stop loss on uranium into the money. Here I'm just putting a 29.45 stop just in case that this ticker wants to see a little bit of a quick sharp pullback. I'm putting an in the money stop just to buy 1 penny on URA. Still holding Tesla at the moment. Tesla at the moment is also seeing a bit of sell side, retesting that pre-market high. Our average is 173.31 on Tesla. QQQ still relentless at the moment. Yeah, I'm seeing Meta weakening, Google's being faded, Amazon's gone negative. So I mean the likes of Amazon and Tesla affecting the XOY consumer discretionary sector, I think those could see the most downward pressure today. Obviously Meta is struggling right now, pulling back quite a bit. Still green on the session, but definitely pulling back. Uranium continuing to press. Guys, I'm going to move my stop up on uranium another couple cents to 29.47. 29.47. I just raised my stop on URA. Look at URA ripping, guys. Look at URA ripping. Here we go. Nice little move on uranium, guys. Nice little move on uranium. My profit target on uranium is just before double top. But again, I'm raising stops. Alright, I'm going to push my stop up on uranium to 29.54. 29.54. It is starting to rip. Tesla's coming in a touch here. Uranium's just a monster right now, guys. Alright guys, I'm exiting uranium here. 29.64. I'm all out. Beautiful little trade on uranium. Beautiful little trade. I'm out. 29.64. Sold uranium. Sold URA. Day trade scalp complete on URA. All out of uranium, guys. Nice job. Let's look at Tesla again because that one's coming in. And we're nicely in the money from that 173.30 area. Target on this name, I think Tesla could actually try to retest its EMA 113 here. Especially if the Qs pull in here. Alright, uranium pulling back a little bit there. QQQ still staying phenomenally elevated here. Yeah, Mike, where's the applause? I know. It's I haven't hooked up all my streaming gear. I was a little rushed this morning. Had to house sit for someone, so I wasn't actually in my own home. So I was a little bit rushed this morning, but it's just a matter of plugging one cord in, which I can probably do a little bit later once we've closed some of these day trades out. But the Q is seeing a little bit of minor pressure at the moment, still trading above pre-market high, which is technically bullish. You know, I am seeing aspects of the market trying to pull back a touch here. You know, the likes of Meta pulling from the highs. You do have some weakness in the market, guys. Staples are negative, utilities are negative, healthcare is negative. So this is not a broad market rally. This is repeated. It's not a broad market rally. There is some weakness in the market. DraftKings closed gap. SOX is getting crushed. Yep, SOX is getting crushed. Apple's just soaring. Ram saying SOX making my heartbeat run faster than Bolt. Pretty funny. QQQ going for another new high. Look at the Qs now up 1.3%. The Russell's almost up 3% on the session. Huge, huge moves. Solar stocks are seeing a little bit of sell side coming into the tape here. Just a touch of sell side pressure. Guys, I do have another entry on uranium, but it has to make a new low of day. It has to make a new low of day off of its gap up. So I do have another entry on uranium that we can play, that I'm kind of interested in. But yeah, we need to make another low of day. Qs are still pressing, guys. Tesla diverging. So really the strength is coming from Apple, Microsoft, and NVIDIA. Meta lagging, Google lagging, Amazon lagging, Tesla lagging. But as of now, the Qs are still saying, hey, we want to go higher. But your utility ETF, your staples ETF, and your healthcare ETF is lagging quite immensely today. Take a look at Redfin pushing up. Nova, I mean, wow. Look at these high short interest names just ripping today. Ripping. Apple up another 3% on the session. That's quite impressive to see. Oil still holding 79.20. Scanning through some other charts here. Nat gas still down a couple percent, 3%. So our KOLD is doing nicely. Our cold is doing nicely already. So that's good to see. Qs are still staying very elevated. Very elevated in price. Bitcoin trading at 69K. Crypto stocks are strong today. Qs are pushing, continuing to push. No pullback in sight just yet. No pullback in sight. We do have that negative divergence intraday chart on the 2-minute chart. Let's see if we get any sort of a pullback. Let's take a look at this regular trading hours. Again, your pre-market high is at 473.50. Now you can see that the Qs are starting to peel away a little bit here. If we just do a fib retrace from this low to this high, at some point the market will put in a little bit of a top and profit taking zone. I'm doubtful that we're going to keep rallying all day into the Fed. Yep, home builders are ripping higher. Again, it's all because of low rates. And I mean, if you look at it, is a 0.1% decrease just in the CPI justified? I mean, that's what I think. I still think that the interest rates have a scenario where they can keep popping up and down. It's like we're oscillating between this short-term narrative of seeing a minor decline in the market, in the inflation expectations. But again, a 0.1% decrease is really not that impressive in my eyes, but we'll take it as it comes. Sorry, I'm just seeing one of your comments there, Michael. Tease your thoughts with equity markets loving on AI. I'm thinking money flow from NVIDIA to Apple. Yeah, there's that. That's the case, right? There is a case to see money flow out of semiconductors into Apple. When you think about how big the semiconductor market is, if you just go through the SMH or the SOXX and you add up the market cap of all of the semiconductors combined, it's a shitload of equity. That's a lot of equity. So, I mean, it doesn't take much rotation out of those names to pump up other sectors. But again, I still think these markets are a little extended, or very much extended. 3% handle, still way above the 3% handle on inflation. We're not going to get a cut just yet. I know the market is pricing in some cuts this year still, but things can change next CPI. And I'm just looking at oil, I'm just looking at copper, I'm just looking at some other inflationary aspects to the consumer. And you look at what I find interesting is you look at what stocks are struggling today in the market in terms of your mega cap. You have Amazon and Tesla. Really not. I mean, Tesla's up 1.5%, so I guess it's not struggling that much, but Amazon's barely positive on the session. Meta just turned negative. So, I mean, you look at things, and the consumer discretionary side is still vulnerable, especially if oil starts to push higher here. Dixie trading at 104.40. 10-year yield is down 3% now. Getting a nice little bit in the SOXS. Still short Tesla and the Qs. Qs are still pushing us and ripping our face off a little bit. Apple's just a monster, up 3.7% again. Where's this liquidity coming from? At this rate, did Apple just surpass Microsoft? It might have just surpassed Microsoft with this rally. Let me see its market cap, 3.29 trillion. And whoa, Apple's the biggest company in the world now, guys. It recaptured its spot after this rally. 3.29 trillion market cap. Microsoft sitting at 3.26. So Apple's now the biggest company in the world again. After everyone was discounting Apple, it's now recaptured its throne as of today. So congratulations to all the Apple holders and Tim Cook there. So nice job, Apple. Meta's gone negative, guys. So communication stocks could be under pressure. If Meta starts to lag, you could probably fade Google, guys. I'm going to short Google here, 179, guys, 179. I'm short Google at 179. I'm short Google. This is a 1/4 entry. I'll add every 40 to 50 cents on Google. I'm short Google now and Tesla and the Qs. We've already taken that one trade on uranium, which paid us nicely. Uranium's still trying to hold steady in the face of things. But with Meta going negative, it should apply some pressure to Google. It should apply some pressure to Google. Next ad on Google is around 179.50. So I'm short Google, short Tesla, short the Qs. And again, we're picking on Google now because I'm seeing Meta rolling over. So that communication ETF XLC is heavily dominated with Meta, and it should apply some downward pressure on the whole entire communication sector. Meta is continuing to roll over here, guys. GameStop is trying to firm up around the $30 area. I'm seeing oil making another new high of day. Solar stocks are getting faded. The likes of Max and Air, which was up 8%, is now gone negative. The likes of SunPower has been faded from the highs. Tesla's trying to firm up here in the near term. QQQ still trading at the highs, up 1.33% on the equities. Guys, I'm seeing small caps still consolidating at the highs. Meta really coming in. Tesla's coming into my next ad level here, 174.20. I will add to Tesla, 174.20. Google's trying to firm back up. QQQ is coming in a touch here. Microsoft's still phenomenally strong. Google and Tesla are still trying to firm up. Seeing some green in the marijuana stocks today. They're performing well. Amazon starting to look to go potentially negative here. Microsoft still holding steady. Meta's really suffering here. Yeah, GME is looking a little bit weak for sure. But I mean, if it let me just see what I have here in the pre-market on GME. You know, GME is still above its pre-market low, which, you know, you want to give it the benefit of the doubt. As long as it remains above its pre-market low, it could still keep pushing. You're looking at, and guys, sorry, I just got filled on that Tesla at 174.21. That's my third entry there. My average is now sitting at 173.55. My next and final entry on Tesla is at prior day high, 174.75. Prior day high, 174.75 will be my final entry. Google's starting to come in a touch here. Google's starting to come in a touch. You got another back test of that 174.21 area on Tesla. Seeing a little bit of sell side coming back into Meta again. NVDA starting to peel down a touch. Mullen swing long looks interesting. What do we think? Let's take a peek at MULN. This is a high risk trade. Just understand it's a dog shit company, dog shit stock. So any sort of swing position is very, very risky. This company just dilutes their shareholders day after day after day after day. This is going to make one more low. I think it makes one more low. The way the divergence is shaping up, you do not have a positive divergence just yet. It should make one more low on Mullen. Now, if you want to try to bottom ticket here because the equity markets are strong, I have no problem, but just use this stop loss. This wick low is your stop loss. But I'm not entering it here because I think it makes one more low, and this type of name is negative when the market and small caps are ripping. So right now, it's not really showing the greatest price action, but again, if you want to bottom ticket, just keep a tight stop loss on it. But I do think on a daily chart basis, it makes one more low. Hopefully that helps. Tesla's pushing for that next pre-market high. QQQ still staying elevated. Google's starting to come down a touch here. Looking at the Qs again. Qs are still phenomenally strong in this region. They have not given up much price action in the face of things. Tesla's starting to go for that prior day high. Google's starting to come in. Get ready to add to Tesla. My final entry. Alright, guys. I did not get filled on Tesla. It missed me by 2 cents. It missed me by 2 cents on Tesla. I repeat, it missed me by 2 cents. QQQ trying to put in another new high of day. Quite extraordinary. Alright, there's Tesla, guys. I just got filled there, 174.80. 174.80. My final entry on Tesla brings my average up to 174.10. 174.10. Alright, Google's starting to fall here. QQQ still very strong. The Russell's getting slightly faded. Again, Russell getting slightly faded here at the open. Seeing energy stocks like XOM getting faded completely. So that's kind of interesting. You have XOM going negative when oil's just strong. So bit of an arbitrage opportunity here on XOM, guys. There might be a long entry here on XOM. Keep XOM on a window. Open up a window on XOM, because with oil up a couple percent, or 1.37, I mean, XOM should be seeing some strength here. Very, very surprising that it's not. That's quite surprising. Whoops. I'm looking at an entry on XOM at the prior day low, 111.31. Google's getting faded here. QQQ still at the highs. QQQ still at the highs. Nat Gas is catching a bit of a bid here. Dixie's starting to see a bit of reversal. Here comes Tesla, guys. We're now flat on Tesla. QQQ still at the highs, still holding my Q short. Google coming in hard, guys. Google looks like it wants to go negative with Meta. So I'm going to ride this puppy into the ground, because I think Google, if it loses this impulse green candle here, it's all downhill for Google. It's all downhill for Google after this. I mean, we're in the money nicely. Tesla's starting to get faded. I'm not trimming my Google just yet. Members, I just sent out another new alert for another position that we have been managing. Qs are still staying elevated through NVDA, Apple. They are all strong right now. GME trying to firm up here. Google really coming in. Michael saying the Qs will have another $30, 30 minutes of buying. Let's see. Let's see. Let's see. Let's see. Oil still strong. XOM looks very interesting on the long side here, guys. XOM does look quite interesting. Google coming down. Come on, Google. Drop it down. QQQ. Let's pull up that QQQ chart. Again, guys, don't be surprised if this market turns into a distribution day where we actually see a pretty decent sized sell-off. Remember, we still have a big FOMC meeting. Let's quickly take a peek at some of these market movers here on the session. Let me just make sure that this is the refreshed list on the market movers. Just give me 1 second here. I'll refresh that page. Qs are still staying strong. Bit of a 10-minute topping tail on Tesla forming. So that's good to see that that trade is working out well. Google's still coming lower as the Qs are trying to press. I'm still holding short Google and Tesla. Look at those names coming in, and the Qs really haven't even seen any sell side yet. I repeat, the Qs have not seen any sell side pressure yet, despite those. Look at this. We're deep in the money on both trades now, but looking for more. Meta trying to bounce. Tesla's really coming in, guys. Nice 10-minute reversal candle on Tesla. That's a beautiful candle formation to be short off of. The Dixie's starting to firm up. So are the yields. Yields are catching a minor bounce. Just be very careful here if you're net long. Alright, guys. I just covered half of my Google. Half of my Google down here at 177.92. I'm moving stop to break even. Okay, half of my Google I just covered, still holding my Tesla. Have not covered any bit of Tesla yet. But 177.92, beautiful little trade there. Nat gas possible head and shoulders pattern on the 5 and 15 chart. RAM, FOMC is today at 2 and 2:30. 2 o'clock interest rate decision, 2:30 Powell. So keep some dry powder. Keep some dry powder, guys, because my expectation is to see a sell-off into before the Fed, or at least some sort of profit taking. I still expect some profit taking ahead of the Fed. If we get a really big dip in the market, I do think it obviously will get a bounce at some point. But I'm seeing a lot of weakness in some important stocks here creeping back in. Amazon negative, Meta going negative, Google's breaking down here, Tesla's reversing from the highs, and this is all happening while the Qs are still up about 1.26%. One thing that I don't like, when you start seeing the heaviest weighted stocks in the XL sectors like Meta bolsters an over 20% weighting in the XLC. When you see that stock negative, despite the Qs are up 1.2, the S&P up 1, and I mean, I don't think there's any fundamental news that has hit my wire. Paul's out of VSCO. Beautiful job on VSCO. Nice job. 1896. And honestly, I mean, for a day trade, that was an excellent trade. I still think that this one can probably bounce VSCO. I still think it can probably bounce. Let me just pull up the chart here for you guys. But again, I'm still holding my 1850. But I see this one bouncing to this previous pivot at 1948. So I'm looking for a move to 1948 personally. I still think this name's more oversold, but I'd put a break-even stop in this name. Obviously, Paul's selling. He's going to collapse the stock on us. Don't be Paul's exit liquidity. No, I'm just kidding. There's enough volume behind it. But nice job, Paul. That was your play that we took the other day off of that gap fill. We watched it patiently all day, and that gap worked out quite nicely. All right, guys, back into the swing of things here. Let's pull up that Tesla chart, which we are still managing this trade on the short side. Google, again, we took half of the position off of the table. You can see Tesla, we're already up about 50 cents or so. We're up more at the lows. But I still think that there's a target on Tesla down to this EMA on the 1 minute chart. QQQ getting a really big stick to the upside here. Qs are getting a really sizable bid to the upside. What a rip on the Qs. NVDA new highs. So NVDA now lifting the market as a whole. NVIDIA is just a monster right now, pushing up 3.7%. You have to wonder where all this liquidity is coming from. Amazon's gone negative. That's still falling. Nat gas still down a couple percent. Crypto stocks really ripping right now. Bit of a potential head and shoulders on Tesla forming. Potential. Your neckline is observed through this trend line. We'll see if it wants to negate it by getting a new high of day. QQQ still staying strong. NVIDIA is a monster. And Amazon coming down lower. Initial entry in the UVIX at 557 for Chris. Hoping to buy NVDA at 215. Okay. Oil seeing a bit of weakness. GameStop rolling over a touch here. Apple seeing a minor touch of selling at the highs here. Sorry guys, my cat's going crazy. Tesla pushing right back up. Google's still remaining a little bit weak here in the session. Let's flip back to the Qs. QQQ right back to the highs. And obviously putting what looks to appear to be bullish consolidation. You have Microsoft now starting to weaken here. Microsoft seeing some sell side. NVIDIA is just a monster, guys. Up almost 4%. Wow. Quite extraordinary on NVIDIA. NVIDIA is now at a double top. NVIDIA is now at a double top. QQQ trying to make a new high. Qs did just put in a new high of day there, guys. QQQ is ripping through NVIDIA. NVIDIA is lifting. The semis are lifting everything. XOM seeing a little bit of a rally here. QQQ still insanely strong at the moment. No sell side pressure in NVIDIA. It's just one positive candle after another. Meta's trying to firm up. Apple's going back to the highs. QQQ going through a bit of a squeeze here. Now up 1.45%. Apple's up 4%. NVIDIA's up 4%. Wow, what a monster day for some of these mega cap names. What a monster day. Google's still lagging in the face of the market. Still holding my Tesla short. So the QQQ trade is obviously ripping our face off at the moment, but that's okay. I still think that at some point we should see a bit of profit taking. That's the prudent thing. If we look at some of these top movers in the S&P 500 markets, you can see Oracle, obviously its momentum off of earnings there. Home builders, you can see that. Some of the weakness in the market. Your communication-based stocks really kind of trading with how Meta's trading. So communication stocks are really under pressure today. So they're probably the better sector to fade. XLC is only up 0.18%. Still have 3 sectors red on the session, but your XLK is just a monster today through the Qs. XOM seeing a nice reversal off of 112. That's getting a fairly sized bid. Nat Gas is seeing a nice rally back up to the high side. Nat Gas is pushing here. Tesla pushing for potential another new high of day. Nat Gas trading, cold trading at 34.80. Tesla's going for another new high of day. See, this SOXS is getting extremely oversold down here, down 8.97% at the moment. All right, guys, I'm going to go long SOXS here, 2190, 2190. Long SOXS, 2190 on the day trade front. 2190. Tesla just made a new high of day, trying to get above the prior day high. Retesting that 10-minute topping tail that it did put in. NVIDIA is going higher here. So NVIDIA is now up over 4.36%. Getting back into the $3 trillion boys club. NVIDIA is now back above $3 trillion with sheer conviction as of today's price action. Google still remaining weak here, guys. Google still coming down. NVIDIA is still a monster at the moment. Solar stocks are reversing a touch here. Yeah, she is going higher than NVIDIA. Yeah, my cat's in heat, so she's still a kitten. Haven't got her spayed yet, and she's just talking up a storm. Michael's saying it's been a while since I've had a 5K red day. Well, the day's not over. The day's not over. We still have a whole host of volatility. A whole host of volatility. I mean, we've already taken a nice win on Google, a nice win on uranium. You know, are we down on the Qs? Yeah, we are down on the Qs a little bit, but the day's not over. Qs are still extended. If you're thinking NVIDIA and Apple are going to hold the majority of their gains while you're seeing weakness in Meta, weakness in Amazon, I still think that this market has a decent sell side correction in front of it. But whether or not it's in the next hour or a few days, and again, I'm still holding my QQQ short. I'm still holding Google short. I'm still holding Tesla short. And the SOXS. Let's look back at Tesla again, since the Qs are still holding steady. Tesla trying to consolidate above that prior day high. Tesla could want to push up to 176.30 in an extreme bull move. We'll see if they want to push these Qs up even more. I know there is quite a bit of shorts trying to be squeezed out here. Gold is looking interesting here. I mean, nat gas is obviously in a bit of a downtrend on the session today, and gold is getting a nice retest of the 3478 area. NVIDIA still trying to push. Tesla still trying to push. We're seeing nat gas continuing to bounce here. Nat gas is trying to bounce. Meta kind of struggling at the moment. We're still seeing NVIDIA at the highs, Tesla at the highs, Google, Meta struggling a touch, Apple near the highs, Amazon's trying to perk back up, Bitcoin's trying to get through 69.7, S&P up 1.2, Russell up 3, QQQ up 1.43. NVIDIA is your strongest mega cap today, with Apple your second strongest, Tesla your third strongest. Dixie's trying to soften up a touch more here in the face of the market. I'll add to my SOXS at 2176 if need be. Oil taking a tiny breather here. Oil is taking a tiny breather. Still no breather in NVIDIA. Sorry guys, flipping back to the charts there. Tesla's pushing, Qs are still at the highs. QQQ new high there. QQQ new high. Again, the strength is now coming back into play. Bitcoin starting to push. Amazon catching another little bid. Tesla's starting to rip higher here. Russell's trying to get above its pre-market high in the near term. Cold is coming down, so Nat Gas is trying to firm up here, only down about 1% now on Nat Gas. Google's still struggling. That one's still in the money. Tesla were down slightly. Qs were still down. Really no pullback yet in the indices. So, I mean, we're just sitting patient here. Seeing the SOXS trying to catch a minor little bid off of the lows here as the Qs are still trying to press higher. So you're seeing a bit of sell side coming into the semiconductors despite the Qs are trying to hold steady. Obviously NVDA still hasn't even taken any sort of a breather or consolidation since it opened. And NVIDIA is still trying to press higher here. QQQ still just blistering, going through a bit of a short squeeze it appears. A lot of shorts are probably covering, getting nervous down here. And we still have Jerome Powell, which we will be live streaming the FOMC event. Very curious to see. I mean, the risk to reward basis here, if we hold all of this market structure and strength into the Fed meeting, I mean, it does, there's a bit of risk here going into the Fed with this much liquidity sloshing around in the equity markets. What's interesting is even though the Qs are pushing higher and higher and higher, you are seeing the VIX bouncing off of the lows. I mean, the VIX is still down, but the VIX is definitely showing a bit of signs of accumulation off of the lows here. So some downside protection is being accumulated into the Fed. It's probably just some hedging. You know, it doesn't necessarily have to mean anything. It's probably just some hedging. I'm going to add to my Tesla position one more time if we hit above 176. I'm going to add to my Tesla position around 176 Pierce if we get up there. Still have strength coming back into the equity markets. Paul's saying we'll go SOX instead of NVD. Yeah, NVIDIA's just in a world of its own right now. I mean, I know you have other performing semiconductors today with the likes of AMD up 1.6, AVGO, Broadcom up 1.5, ARM is up 3.87, but another day where NVIDIA just outperforming pretty much every aspect of the semiconductor market. It is outperforming every aspect. QQQ going for another new high of day. Tesla's still ripping. Now up 1.55%. Qs are still absolutely flying here. Flying to the high side. Again, 176 Pierce on Tesla. I will add. Taking the position to a 5/4 position. QQQ I'm not going to add. That's a little bit too big. XOM ripping off that level. Cold. Nat Gas trying to flip to the positive. Still down about 1%, but it is trying to firm up here. NVIDIA, another new high of day. Microsoft's trying to firm up a little bit more in the face of things. Markets are still continuing to press here. Again, every sector green except for XLP, XLU, XLV. So this is just a tech-based rally. Again, guys, I'm seeing the SOXS is trying to stabilize at the lows here. Trying to. All right, Dixie at the lows. Tesla, I just added to my Tesla there at 176.04. 176.04. It is even piercing that level as we speak. All right, guys. So now my average on Tesla is just sitting right at that prior day high, 174.71. Qs are still relentless. Members, I did send out another alert regarding semis, and we are accumulating now a very, very large position. We have one more entry on the semis. And Michael's saying NVIDIA will call it a top at 5%, potentially, right? It's up 4.62, pulling back a little bit here. Google trying to float back up. QQQ still staying relentless at the moment. We are still seeing the SOXS trying to firm up here in the face of things. Tesla's now up 3.39% and pushing. NVIDIA seeing a little bit of minor selling. Meta's still coming down a touch here. Again, you're seeing the semis trying to, the bear ETF trying to firm up off of the lows here, but the Qs are still staying relentless. Cold coming down. Cold has now had 1, 2, 3, 4, 5, 6 10-minute down candles in a row, guys. I'm looking at an entry on Cold, which is a fade on nat gas. I mean, we're already holding a swing, but I do think that Cold is at an area here, guys, for a swing, sorry, for a day trade long. I'm going to enter Cold here, 34.64. Starter position on Cold, 34.64. I just went long cold, KOLD. I will basically add a double bottom to this day trade. All right. Still holding an SOXS, still holding Tesla short, which is Tesla's ripping our face off. Potential 10-minute or 5-minute engulfing candle on NVDA. That could signify a high pivot in the market if that comes to fruition. Oil is getting wrecked, guys. Oil seeing some hard downward price action. Don't know if inventories just came out on oil, but it saw a hard gap down there. Crude oil inventories may have just come out, and it is seeing a fairly sizable down candle at the moment. Let's look at this NVIDIA chart. Pulling back from the highs just a touch, but very extended in nature. Very extended. So we have a SOX position on the go. We have a cold position on the go. We have a Tesla and a QQQ. So 4 little day trades on the go. We are seeing cold trying to firm up here, guys. So KOLD is firming up here. QQQ seeing some minor selling. Nat gas is down about 1.32% at the moment. Just want to pull up. Oil still seeing a bit of distribution at these highs. Tesla's still ripping higher here. Wow, Tesla's making a potential little bullish reversal here on the weekly. Obviously the day's not done, but Tesla's still ripping here. Gold is starting to make another little move. Still holding Google with runners. Come on, Qs and SOX. In terms of my target on cold, I'm looking for a, let me just, it's a 3-to-1. In terms of my target for the day trade on cold, right into this little micro gap on the 1-minute chart. So we're looking at a 35 area. I do think it could even go higher than that, but I'm just looking for a conservative day trade target here. Qs are starting to roll down a little bit here. So 30, just above 35 is my target for the day trade. Obviously we know I'm in a swing as well. SOXS is firming up nicely here, guys. So again, we're long off that 2190 area for the day trade position. And we are still pushing. Again, my target for the SOXS is, sorry, just give me 1 second, 2243. 2243 is my first profit target. Gold is starting to move higher here. NVIDIA coming down a touch. Google Meta still selling. Apple still at the highs. Microsoft still at the highs. SOXS seeing a nice little push here. Gold is also seeing a good push. You're seeing a really big stick in the semiconductors as NVIDIA is starting to peel away. Yeah, UVIX still catching a bit off of the lows there. Semiconductor bear. Look at gold, guys. It's coming into target very quickly here. I love these trades that just work out very quickly and instantaneously. So again, I'm looking to exit gold above 35 bucks. Come on. Come on. Let's see if we can get gold. All right, guys, Qs are starting to roll. SOX is looking well. Google, look at our Google runners, guys. Look at our Google runners. Look at Google go. Everyone, I'm going to adjust my stop loss here. I'm going to put a stop loss on Google at 178. 178. Qs are falling sharply here, guys. This is what we're looking for. SOXS is now coming up into my target again. I'm looking for 2243 as my first trim on SOXS. NVDA coming in hard. QQQ coming in hard. Tesla still holding steady. Nice little win. Come on. 2243 is our first target on SOXS. Let's see what we can get here. Nice little move down on the Qs. Still holding my share short on Tesla, Google. Still holding long on cold, long on SOXS. Really big stick there to the upside. And now we're shaping up for a potential retest of the 473.72 level on the Qs. And again, where do we get that level? 473.72 is our first Fibonacci level, and it also kind of coincides with the top of that previous daily chart channel. Look at the SOXS, guys. Go. Guys, I'll cover my Google. If Google flushes into, just give me 1 second here. I just want to see it here. If Google flushes into 177, I will cover it. 177 is my target on Google. I will cover that trade, okay? So we're still seeing our stocks do well off of the lows. Cold is still trying to firm up here at the lows. So nat gas seeing a bit more distribution. QQQ still seeing a bit of distribution at the moment. NVIDIA backtesting 125.70. Qs are getting another little bid here. Really big bounce in the Qs. Apple's still at the highs. So what's interesting is that sell-off in the Qs was primarily semiconductors. Apple didn't sell off. Microsoft didn't sell off. Tesla barely sold off. Amazon barely sold off. So it was really just a semiconductor downtrend there that taking some profits in NVIDIA and the likes. XLE sector just is also now negative, so you have 4 sectors negative in the S&P 500. 4 sectors, I repeat, are negative in the S&P 500 here. Look at cold, guys. Cold's coming into target here. Cold is coming into target. I'm going to sell half, move stop to break even on the day trade as soon as we hit 35.09. Okay, I'm going to sell half, move stop to break even. We are seeing nat gas coming down some more. GME's trying to firm up here, guys. So GME's now gone green and putting in a bit of a bull flag on the short. All right, guys, I just sold half of my cold there. Beautiful little trade. Beautiful little trade on cold. Moving stop to break even. Nice little win there on KOLD, guys. And we got more in the tank. So I'm putting a break-even stop now on the day trade. Let's just manage now the other trades that we have on the go. We still have a SOX long. We have a Tesla short. We have a Google short. Google's just looking like a bit of a dumpster fire today. Coming down lower and lower again. 177 is my target on Google, guys. 177. QQQ potential intraday 1 minute head and shoulders about to trigger. Take a look at this. Take a look at this, guys. We are now starting to see some of these positions really firm up in the face of this market decline. We're still looking for a QQQ to go back at least to our break-even point. Still riding this SOXS. Google just made a new low of day, guys. We are seeing Google continuing to press lower. QQQ breaking down here, guys. Here we go. NVIDIA, Apple still not seeing downward pressure. This is where things get interesting. Cold pushing up for us, guys. We are seeing a lot of these positions. If Tesla can just fall now, this is going to be beautiful. Google really seeing some sell side pressure here. Now NVIDIA, Amazon coming in, Microsoft coming in a touch. Come on, let's go. So Fed swaps fully priced in a November cut, guys. Fed swaps are fully pricing in a November cut. I'll just tune you into Bloomberg here. Just give me 1 second.
Be the MOVE index, which should be a pure play on Treasury market volatility. However, when Treasury rates fall and the MOVE moves up, it's telling you what's going on in BCY, that there's a credit event rumbling somewhere under the surface. Because if Treasury rates are falling, then Treasury volatility should fall. When they move in the opposite direction, there's a lot of tension in the system. That typically starts to flag, you know, there's issues with the banking system or lending. And what are we seeing? We're seeing commercial and industrial lending contract right now.
Should the Fed have already been cutting?
Likely, right? We're 11 months in to the.
Guys, look at our cold position starting to push even higher here in the face of the QQQ dump. Again, I'm going to now put a stop loss, an in-the-money stop loss, right at our previous profit-taking zone. So 35. Actually, I'll give it a little bit more room. I'm going to put a stop loss around 35.05 on cold. So an in-the-money stop loss. And if we push back up to high a day, I will cut the position and take profits on cold. So the trade is now protected. The trade is now protected.
More closely resembles a cliff. You have essentials inflation at QI Research. We parsed them out, running at 4.7% year over year. It also happens to be completely out of the Fed's control. Pure discretionary inflation. It used to just be a goods deflation story. But what we saw this morning was goods and services that are discretionary in nature. These are things that households want to buy but do not need to have. That's at 0.1% year over year, at the cusp of falling into negativity. We've got hotel rates falling, car rental rates falling. Airfares are coming down. So the services inflation.
Seeing a huge buy, the dip coming back into the Qs. Apple just made a new high there. Google seeing a bid. Tesla pushing. Amazon pushing. Really big bid into the market. Nat Gas seeing a nice decline again. So Nat Gas is seeing GME is trying to get above its prior day high. So GME is looking like a bit of a momentum trade here. It is trying to push higher in the face of things. Guys, I'm going to take a stab at GME here. It's looking quite interesting, getting some volume. I'm going to wait for a back test to prior day high again. So my entry is going to be $30.92 on GME. I'm waiting patiently. I may not get it. I'll let you know if I take the trade. They are trying to squeeze it. I'm not even in yet. Don't squeeze it. Qs are still fighting and pushing higher and higher. Microsoft catching another big bid here. Meta's still struggling, putting in a bit of a bear flag. Bart saying thoughts on MSTR. Markets are going to rip higher going into November. So that's mindfulness. Let's take a look at MSTR. So obviously Bitcoin's strong today along with the whole crypto sector. The equity markets are strong. So you have MicroStrategy pumping, right? MicroStrategy is still trying to break out of this inverse head and shoulders and kind of front running a bullish pattern, which suggests a move to about 2,500. Now the thing about it is that Bitcoin has tried breaking out on numerous attempts today. And basically, BTC is just right back at its 69,000 resistance where you saw a really big breakdown. So I'm still bearish on Bitcoin at the moment. I mean, we've had a softening in yields. We've had a softening in the dollar, which is why you're just getting a technical bounce. But you're just back in this bear flag pattern here. Just right back in that bear range from yesterday. So really nothing has changed in terms of the Bitcoin price action. You're just seeing a bit of strength today. Alright guys, I'm going to push my cold stop up a little bit more. My KOLD stop up a little bit more. I'm going to now put it basically at 35.15 stop on cold. And I just picked up some GME shares, guys. High risk trade, 30.92 at that prior day high. I'm long off of prior day high. We got the wick down. And you know what? I might just keep a tight stop loss on this trade. I'm going to keep a tight stop loss at 30.73 on GME, but I'm long at 30.92. Target on GME, guys, 3180 is your pre-market high. 3180 is your pre-market high. And if we get through pre-market high, this name could potentially try to squeeze to... Let's just see, I have $35 in sight. Just give me 1 second with this name. Qs are seeing a really big downward sell program there, guys. Really another big downward candle. Guys, cold just hit my stop loss. KOLD hit my stop loss. That's another trade that we have closed. Another trade that we have closed. Again, we're long GME, still short the Qs, long SOXS, still short Google, still short Tesla. Cold, I got stopped out for a nice in the money stop there, guys. So KOLD hit my stop loss there. I still think it has room to run, but I'm just taking the profit. So right now, let's summarize things. We have a Tesla position. We have a GME long. We have a Google short running. We have a QQQ short. And we have an SOXS, which are up about almost 2% on the day trade. So right now, we still have a lot of action in front of us. And we still have the Fed decision that is set to take place. Again, guys, I'm looking for a target on GME to the pre-market high, which would be about a 2.88% upside move. Again, let me flip back to the regular trade or the extended hours. I'm looking at a target 1 on GME, pre-market high sell. Pre-market high, okay? My stop loss is in place at 30.73. If we clear this pivot, the high of day on GME, I will move my stop loss to break even. I repeat. We're seeing Tesla now coming in. The SOX is trying to firm up even more. I got out. Gabby, I got out of cold already for the day trade. I got out of cold already. But for the swing trade, I'm just holding. The target is nowhere near. And I don't even know if it's going to go lower to accumulate more. We just took an entry yesterday, right? So there's still quite a ways away from NatCast hitting the swing trade target. But I'll discuss that in my members video. But the day trade target, I hit my target already. 2% basically the target was on watch there. Alright guys, so we're still in this SOXS pushing up. GME, guys, is breaking down, so be careful. That might hit my stop loss. Again, it's right back down to that entry. Right back down to prior day high. That's my entry off of that 30.92 area. I'm still looking for a pre-market tap. Still holding SOXS. It's going for pre-market low. Guys, I'm going to trim SOXS at 22.43 and move stops to break even. Tesla's now coming in. Google's breaking down. Does look like the Qs are going through a bit of sell side here. A bit of sell side pressure. Bitcoin's still remaining quite elevated and firm. Come on. Push it lower. Push the Qs lower. Back below that little neckline. Still seeing NVDA, Tesla breaking down a touch. Again, guys, it's been a nice little session between Google, cold, uranium. If GME can firm up, we almost got wicked out there on GME. And if the Qs can come back down to our entry here, that would be beautiful, because that would mean that all the trades we have taken today have gone in the money. And then obviously Tesla is still lagging. We're down about our average is 174.71. So right now on Tesla, we're down about 0.9%, $1.58. So, between Tesla and the Qs, those are really the ones that are struggling for us at the moment. But I still think that we could see a downward shift at some point. A couple things that I'm noting as well in the equity markets, a lot of those solar stocks that were squeezing higher have actually rolled over. Some of them are starting to roll over, which is telling us that some people are starting to trim and take profits. You also have XLC. So the XLC communication sector has gone negative. I was telling you that whenever Meta is struggling and you have a positive equity market in the Qs, that's a bit of a bearish sign. That's a very bearish sign just because of how heavy Meta is weighted in that sector, over 20%. When Meta's not seeing money flow in a massive QQQ day, it would also be like Microsoft not seeing money flow in a massive QQQ day. It's just a very rare phenomenon when an equity, a stock, has an over 20% weighting and it's struggling. And Meta was struggling really since we hit that 9 a.m. high, pre-market high. Meta sold off. And then when you hit the open at 9:30, Meta sold off despite the Qs continuing to march. So that was a bit of a bearish signal to me. Tesla finally starting to show some weakness off of its resistance. A potential hourly topping tail may be forming on Tesla. GME is starting to wake up here again, guys. I'm going to move my stop loss now to slightly in the money on GME, guys. Start moving stops up, guys. Start moving stops up. Target 1 is coming, pre-market high. I will trim half the position there. But now I have a 31.10 stop loss in the money on GME. I repeat, 31.10 stop loss on GME. Sorry about the craziness. It's just been exceptionally volatile. How's everyone feeling about the tiny little window, the Bloomberg window? I know I don't have the volume going on, but I can quickly interchange the volume back and forth. But how does everyone feel about that little pop-up window? I know there's some interesting things that people discuss on Bloomberg, so I'd like to tune you guys in if I think it's worth noting. And it's just good to see some of the headlines that come across the board in these names. QQQ still breaking down here. Cold still holding steady. Guys, GME target 1 coming up very closely. Again, I'm selling half at pre-market high. I'm selling half. Okay? Still long. Again, it's light shares in this name with an in-the-money stop in place. And now we're shaping up for an even larger head and shoulders potential breakdown on the Qs. And this is kind of how I've been forecast. I was expecting a pump, then a dip before the Fed, then a potential rally into the Fed. Guys, GME target is coming in. There, I just sold half, guys, moving stop loss up to 31.50. Beautiful little trade there. Beautiful little trade. Nice job. Nice job if you caught that. Beautiful little trade. All right, I'm going to keep adjusting my stop loss, guys. I'm going to adjust it to 31.76 on GME. Everyone should have caught this. Everyone should have caught this, guys. This is now squeezing as the Qs are falling. So this is what a short squeeze is made of. Whenever you start to see GME pushing and the market is falling, that's telling us that shorts are getting nervous. That's telling us that maybe there's a roaring kitty quote coming along or tweet. Beautiful, 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 guys. SOX is still looking constructive. I'm still holding that. Come on. Still holding my Google runners. Guys, I just covered my full Google position. Covered Google position. 177 target hit. Pre-market low hit. I'm all out of Google. $2 on the gain. Beautiful little trade there. Beautiful. All right, let's move back to GME. So that trade is now done. GME is still trying to press here, guys. GME is still trying to press. We're going through a bit of a squeeze potential. Next sell side point on GME for myself is basically at 35 bucks. 35 bucks and change is my next target on GME. All right, we're really starting to see the Q's coming under pressure through some individual mega caps. Look at the SOXS. It is trying to consolidate right under pre-market low as if it's going to make an impulse move through that area. That would have to correlate with the Q's triggering this little head and shoulders that's potentially developing. It hasn't triggered, but you can obviously see if it does trigger, it takes us back down to this 382 fib. Okay. Guys, GME, my stop loss is at 31.72. Even using pre-market high as a stop loss is a very, very wise decision. All right, so right now we're still just watching Tesla and the Qs. Those are the trades that have been struggling today. Those are the trades that have been struggling. Guys, I'm going to keep adjusting my stop loss on GME. I'm going to now put a stop loss at 31.90. 31.90. And again, if we spike to 35, I'm just going to market sell the whole position. If we spike to 35, but 31.90 stop on GME. All right, there we go, guys. The stop loss is hit. I'm all out of GME. Thank you very much. Look at the sell side candle there. Whoo-wee. That's why you have a stop loss there. That's why you have a stop loss. All right, let's quickly move along now to some other things. Let's look at Tesla, because Tesla is the next trade that I want to see come back to our level. That's kind of just been crushing us here in the near term, but it's really been trading with the Qs. So my average on Tesla 174.71. Obviously kind of in line with our QQQ average. Still holding our SOXS position, which is nicely consolidating. Again, we're still holding this one at 21.90. 21.90. And now we have potential signs here for, if this can break out of this inverse head and shoulders, you know, you're carving out a right shoulder potential here on the semis, the semi-bear ETF. If this triggers, I mean, then we have a nice little move higher in the semiconductor and a potential, you know, sell the news in the market. Keep in mind, guys, too, that NVIDIA is a now cheap stock that I do believe institutions are pumping up here and unloading. I do think institutions are unloading and dumping in NVIDIA for the last... Since NVIDIA has gone through its split, what I have found really interesting is its volume trends. Like, since NVIDIA has gone through its split, you know, you're trading at 117 million shares right now today. It's a big amount. So it's telling us that there is some players, although it's pushing higher, there's some players certainly selling in this name, which we have to be mindful of. Google going even lower, guys. Google's almost about to go negative on the session, joining Meta in the communications ETF.
Advisor to staff ratios, small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about our consultative support and technology. Consumer Price Index this morning, which excludes food and energy, up 3.4%, cooling to the slowest pace in more than 3 years. Reaction to the CPI print from Francis Darnold, Global Chief Economist at Manulife Asset Management.
As exciting as this is this morning for a few hours, I'm more interested on the CPI print that comes out September 11th, just 1 week before the Fed's September cut. That number may end up being much more important than this one. So we'll take it as a win. It's good news for consumers, for markets, for all, but it's one print.
FedEx cutting as many as 2,000.
All right, guys, we're seeing the Qs trying to test that little bit of a neckline zone. It is trying to firm up here. Tesla's still trading up nicely on the session, 3.3%. NVIDIA is still up strongly, over 4%. Apple up over 4.76, trading at 217. I mean, my oh my, Apple's a monster. My oh my, Apple is just a monster. Apple's just a prime example of, I think, a short squeeze in a mega cap name that is unfolding before us. I think so many people piled in on the short side after that WWDC conference, and Apple's just making a short squeeze. Google trying to firm up here.
The president recently left Washington to head to the southern boot of Italy. We heard from the State Department and the Treasury Department expanding the scope of sanctions, really going after third parties, whether it's third party banks that allow Russian banks to use, and they use their Russia version of SWIFT, the financial messaging system, or it's going after third parties, most notably a lot of companies in China that still sell either U.S. branded or that uses U.S. technology when it comes to chips, and that Russia is using in everything that they're trying to use in their war machine, like missiles. So we just saw the expansion of some of these sanctions on the margins. We see the U.S. are trying to close some of the loopholes that Russia has been using. But overall, the big deliverable and what the Biden administration would like to see get over the finish line is, of course, the ability to tap into the mobilized Russian assets. It's 300.
As a quick little update here, we are still seeing the VIX showing signs of accumulation. The VIX is still moving up off of the lows.
Only about maybe $3 to $6 billion a year. What the United States would like to do is have a long line of liquidity about the future interest payments of these assets. And that is really where the discussions are right now. We've seen a draft communique, and notably missing was the language on how the plan on how they would be able to do this.
Anne-Marie, what's Anne-Marie, what's the policy outlook for the G7 as it relates to China these days? What would they like to get a message out regarding China?
Well, we've already heard that they want to send a signal to China, and I think these sanctions that we have from the Treasury Department and the State Department really relay that message, is that they want to make sure, and they said in the communique, that they want to call out China, which they believe and is enabling Putin in his ability to fund this war and get the supplies he needs to fund this war. So that's the message to China. What's so interesting as well, of course, is that as the leaders start to descend upon Puglia, we already had the European Union in a separate probe that they had with China regarding electric vehicles actually increase the tariffs on some of these Chinese manufacturers. So it does feel like those trade tensions are really starting to ratchet up as we head into this G7 meeting.
All right, Anne-Marie, thank you so much for your reporting. Anne-Marie Hordern, chief political correspondent and anchor of Bloomberg Surveillance, joining us live from Puglia, Italy, for the G7 summit, which will take place this weekend. Markets on the move here. The S&P 500 up 1%, the NASDAQ up 1.8%. Let's see where the action is under the hood. We check in with Nora Melinda. She is equities reporter for Bloomberg News. Nora, what are you looking at?
Well, I mean, of course, we can't stop looking at tech stocks this morning. It seems as though the market has a mixture of a risk-on appetite, but as well as flocking to the safe haven sector, interest rate sensitive sector, real estate. But as we look at tech stocks, there's a lot moving here. But I mean, I really do want to point out Apple. As we mentioned, it is seeing some extensive gains, of course, coming off of that Worldwide Developers Conference earlier this week. But actually, Apple did overtake Microsoft in market cap on an intraday basis today. And this, of course, has it regaining its title as the world's largest stock. Now, it still has not closed above Microsoft since January, so we're going to have to see where this shakes out as we head into the close and, of course, going through this Fed meeting. But definitely something interesting to point out here as we look at the tech space.
And speaking of the tech space, let's go to U.S.-listed China EV makers. I made the leap there, tech to EVs. So there's like something.
I followed.
Thank you. So what's up there?
Well, I'm watching these U.S.-listed Chinese EV makers because the EU said that it will impose additional tariffs on EV cars shipped from China starting next month. This should go into effect around July 4th, if I'm not mistaken, but this will take levies to as much as 48%.
This is huge. I mean,
massive.
Yeah.
I mean, this is definitely going to escalate the trade tensions and, of course, the cost to buy an EV. So we're watching a lot of names like BYD. Apparently, tech.
Laura's asking if I'm taking stops on Vale and Valero. No, I'm not. Not quite yet. I mean, Vale is interesting. I'm actually considering adding here at this vicinity. Valero, I mean, it looks like it's breaking down here and trying to go a little bit lower in the overall trend. But I still have a fairly small position in Valero. I am interested in accumulating a bit more. If we go a touch lower, my next entry on Valero is coming up close, but it still needs to go a touch lower in the near term. Again, my next ad level on Valero is coming around that a Pierce of 147. A Pierce of 147, and I'll show you why. But a Pierce of 147 on Valero gets me interested. Even Vale down here is quite interesting. So let me pull up this Valero chart. Obviously it's been crushed. So Valero still could be putting in a bit of a falling wedge pattern, but the area I like, if you throw up, even in this vicinity, if I actually tighten this up a bit, looking for one more little dip below 147.60. So if you do a fib retrace from your high pivot on Valero all the way down to this low pivot zone here, you can see Valero's coming up into that first major Fibonacci level. And again, this is selling off. It's actually hitting that level right now. I thought it was a little bit adjusted, but it's actually into the next ad level right now. I thought it was at 147, but yeah, right here, right now is a decent area on Valero. You can see I just got my alert on my screen. I'm just going to wait to see if the market wants to settle out, but this is technically where I would be adding to my VLO position, right at this 148.37. That's a nice falling wedge pattern on VLO. It might go one more little pierce of that area, especially if we see any sort of a profit taking in the equity markets. But I'm watching Valero closely. Nat gas taking a nice little dump. Anyone still in cold, guys? Good job. It's spiking to the upside on cold. The only reason I haven't added to Valero and cold yet, sorry, Valero and Vale, is just because of the market right now. I think that we should still see a little bit more downward pressure on the session. And if we see a dump, obviously if the markets dump, you know, it could affect all stocks. But technically speaking, I'm just waiting to see how we settle out here after FOMC. But Valero and Vale are into the next technical ad levels. Alright, Tesla's still managing to hold some structure here. NVIDIA, when we look at NVDA, that's actually starting to come in a touch here. Apple finally starting to see a bit of a red candle. Microsoft had a bit of a double top. Nat gas really falling, guys. Take a look at cold. Beautiful little spike up on cold. Anyone still in that wonderful, wonderful job. QQQ still staying strong. Guys, the Russell's triggering a bit of a head and shoulders potential here. The IWM testing a neckline break right now. Again, that's a pretty big head and shoulders. QQQ starting to come in. GME going for another new high of day. I'm still long SOX. Still short Tesla, short the Qs. Obviously QQQ we're down. We've taken nice chunks off of Google, uranium, KOLD, which is the nat gas short. GME, that was a nice little win. GME's spiking here, guys, still going through another new high of day above its pre-market high, and this is happening again while the Qs are all falling. And again, guys, the Qs right now are on watch for a very large head and shoulders trigger. Very large. And what's interesting is the Russell's already triggered that same head and shoulders by breaching the neckline. QQQ seeing some hard sell side. Here we go, guys. This is where things get very interesting because now you have the SOXS trying to trigger this inverse head and shoulders that we discussed. And again, if this breaks out to the upside here, we're looking at a nice little move back into the $23 range on SOX. So this is shaping up to be very likely. Look at the Qs, guys. Look at the Qs. Come on down. Come on down. Sell side in Microsoft putting in a 10-minute engulfing. Tesla still strong. NVDA seeing some sellers. Dixie's trying to hold support at 104.30, down 0.9% on the session. 10-year yield still down 3.11%. Wow, crude oil has just been hit very hard. After it was strong on the session, green, now getting rejected and going negative, falling below 78. But what's interesting is crude oil is now potentially setting up a 4-hour inverse head and shoulders. Even on the daily chart, you could make it out to be. So we'll see how it wants to firm up, play out here. Qs are right back up. Valero catching a little bit of a bid off of the lower boundary support. GameStop is squeezing here. Hey guys, just a quick update here. Qs are actually trying to break out and trigger a little mini inverse head and shoulders here that takes us to a new high of day, which pushes us to about 475.90. Probably hits 476 since that's the next strike zone. But QQQ on watch for a little bit of a bullish attempt at a breakout here. We'll see if it comes to fruition. The only thing that's I think is hindering is the fact that small caps are trying to break a head and shoulders. But right now you are seeing the Qs trying to press a little bit and continue to try to make a new high of day. Now trading at 475 on the Qs, up 1.49%. So QQQ on watch for a little bit of more of a continuation bid here. Really taking full advantage of the yields. Oil going negative. Nat gas falling today. But a big push coming back into the QQQ market. You have the semis being sold into here. Guys, I just took a high risk trade, 472 put on the Qs, 472 put on the Qs. Size for loss got filled at 80 cents. Got filled at 80 cents. 472 put, this is size for 0. But a 472 put at 80 cents. I will add if we push to double top. Okay. It is sized for 0, but I will add one more time at double top on the Qs. The Russell's still trying to come in here. So Russell 2000 is kind of diverging from the Qs at this point. Qs are trying to continue a bullish move when the Russell's trying to break down here. So a little bit of liquidity coming out of small caps. Risk tolerance is narrowing here ahead of the Fed. You have had the VIX come in a touch. Some leading financial stocks are interesting. They've kind of been faded. The likes of Goldman Sachs, still positive on the session, but definitely come in from the highs. So it's really just a matter of mega cap tech kind of holding the majority of their strength today, whereas a lot of other individual stocks haven't really pressed higher in the face of the market continuing to grind. So again, I'm in a 472 put now on the Qs at 80 cents. I will add one more time at double top to the contracts, but it is sized for loss. Still riding this SOXS at 21.90. We still have a lot more action to take place with the Federal Reserve, FOMC interest rate policy decision. Consensus is for a hold, but now you're looking at a potential November cut. But again, that can change just as fast as it changes on one way, it can change another end. Qs are still trying to press here a little bit. Apple's still chugging along. Meta's trying to firm up. Tesla new high of day. GME's still trying to squeeze a touch here in the near term. Dixie's trying to firm up off of the lows here. Apple's still chugging along. Meta's still chugging along. QQQ still trying to press. Seeing NVDA seeing a little bit of selling here. Meta again trying to peekaboo up. Meta's turned green now. So it's lifting the communications sector back into positive territory. NVIDIA is seeing some sell side pressure, which is hindering the Qs at the moment. Apple still at the highs. Google coming down a touch more. Microsoft still trying to press. Tesla still maintaining high of day. QQQ coming down a touch here, guys. So our contracts are now trying to move a little bit in favor. Here we go. GME getting sold into. Nat gas going lower as cold marches higher. The Russell still has triggered that little bit of a bearish formation. A name like SunPower has basically gone back to the flat side. So SPWR sold into back to the flat side after it was up tremendously. Tesla's still surging. Amazon catching a bid itself. Bitcoin still chugging along nicely here.
U.S. aggregate bond index. So that strategy, that combination of leaning towards large cap growth on our equity side, ultra short, high yielding, zero duration risk in our bond funds, ETFs, bond allocation, it has continued to work very, very well.
And David, you know, you mentioned the U.S. Ag bond index, the Bloomberg index, down 0.9% year to date. But are you surprised that the U.S. corporate high yield is actually up a couple of percent here and has been outperforming really over the last couple of years, given concerns about a recession? Are you surprised that the high yield market's done as well as it has?
Yeah, I mean, credit spreads are tight, and you know, we don't want to be high yield with long duration, right? We're talking about where we're holding high yield,
just still
where we're
trying to hold this
bank loan, where we're holding
level.
Floating rate.
We're seeing
I'm talking about an income portfolio or a credit debt portfolio with a duration of about 0.1, not 5 or 6 or 10, right?
That's
so we want to, you know, in each of those categories, we don't want the duration risk. We're not ready for that yet because Look,
through that head and shoulders, which likely means that the Qs could also see a bit of selling. So again, we're writing a 472 put. Still have my common share short on the Qs.
Because they're
Still have my
nowhere
long
near
on
target,
SOXS
or
at 2190.
they're still far enough away on the target.
Still have my
We
Tesla
had a slight
short, which is
improvement,
ripping my
you know,
face off.
in
I'm
this
down
in
about
this release.
450 bucks.
But they've got a
on my
long way to
shares.
go unless they change their target to get to 2%.
I know this is sacrilege, like a couple hours before
taking
the
profits
Fed,
on
but what about
Google,
ex-US? With the
profits
ECB
on
having already
gold,
cut, but the politics
profits on
situation there is
uranium,
really upended in
profits
France.
on GME today.
And also the UK. Anything
And we're looking
overseas
for some
that
other
strikes your
trades
fancy?
to come into fruition.
Yeah, a good question. You know, when we look.
Sorry, guys, I forgot to mute that. So QQQ starting to fall a little bit here. Again, I'm riding that 472 put with one more entry at a pierce of double top. I'll add to the cons. Thank you, Gabby. Thank you, Laura. Gabby's saying you don't like the window. Okay, fair enough, fair enough. So we've kind of had mixed consensus with the Bloomberg window. A couple people like it, a couple people don't. So we're still seeing the Qs just consolidating here. Some good suggestions there. I can make it smaller for sure. On the next stream, I can look to make the window smaller. That might be a good option. We will be live streaming the Fed decision here later on. Let's just take a quick peek at some of these market movers again. Oracle still holding steady. Equifax, Builders, Skyworks, so that's one of Apple's suppliers, Skyworks. Caesar Entertainment, Autodesk, Stanley Black, Intuit, Blackstone, Pulte Group, Citizens Financial. So a lot of the home builders. And then some sympathy trades in Apple. Some weakness, again, your communication-based stocks. Dollar General, General Mills, Kroger, some staples. So a little bit of a mixed bag here across the board in the equity markets. If we take a look at the NASDAQ components, as the Qs are selling off here, guys, now our put plays are basically flat. Our 472 put is flat on the cons. Let's see if we can get a nice sell side candle. If the contracts go to $1, I will sell half of them there. We're seeing the SOX trying to perk up. Still a potential inverse head and shoulders on the SOXS trying to firm up. But again, looking at the NASDAQ components here, Trade Desk, Autodesk, Intuit, Apple, Tesla, On Semiconductor, Mongo, NVDA. And weakness in the NASDAQ, you have Lululemon, Monster, T-Mobile, Excellent, Kraft. I guess what's funny is, I don't know if it was a gag gifter, but I guess Kraft and Kit Kat, Nestle, announced a Kit Kat that is ketchup flavor. I mean, I'm a big Kit Kat fan, but a ketchup flavor. If that's real, I mean, that's just downright nasty. All right, guys, we're seeing the Qs come into a little bit of a decline here. And the Russell continuing to break lower. So sell side pressure coming into the Qs from Apple at the moment. This is technically where the bulls want to defend this little inverse head and shoulders on the Qs. But you never really confirmed the breakout on the Qs, which is why I think it was just a bit of distribution that is occurring in this range. At the moment, Qs are still holding steady. Russell breaking lower. GME still trying to move. Nat gas trying to bounce ever so slightly. We're still seeing the Qs just oscillating in this range. A bit of a theta burn. Apple coming down, NVIDIA peaking up. So it seems like a bit of rotation of liquidity in and out of Apple into NVIDIA, out of NVIDIA into Apple. So it's kind of like those names are just, as Apple's selling here, NVIDIA's catching a spike. So really there's no net selling in the Qs at this point, but we'll see if it results in that. And that Russell is definitely telling me that there should be some downward pressure, but mega cap tech still maintaining strength. So again, guys, we still have the FOMC rate decision at 2 p.m. and then Powell at 2:30. So there's going to be two opportunities for extra volatility. Again, the game plan in the Fed, generally when you get the interest rate decision, you want to basically, often there's a high likelihood that the first move is the wrong move. That's what the trend shows with, I believe, a 96% accuracy. A 96% accuracy is that typically when they get the FOMC, if the markets dip, you want to buy that dip. If the markets rip, you want to short that pop. So we're going to be two opportunities to trade. Once the policy rate comes out, algorithms will digest it. They'll either spike the market or drop the market, and then you're going to get another wave of volatility through the Q&A panel of Powell and his little testimony. I mean, the markets could still push higher here. They're definitely extended in nature. Definitely extended on kind of all time frames right now. But it doesn't mean they can't get a quick little pop higher in a final little short squeeze push. But I'm still positioned a little bit short going into this meeting. SOX is seeing a little bit of buying pressure. Qs are seeing a little bit of selling through NVIDIA, Google. Tesla's still ripping. Apple's coming in from the high. Microsoft curling up. Google curling down. Meta's teetering basically back to the negative side. Anyone buying calls on AVGO earnings today? The way the semiconductor market is, I mean, probably gets a gap up. But I can't trade that yet. CGC may be a good entry, good short here. Oh, CGC on a good short trade, eh, Chris? You're never really on the short side of CGC, but I'll take a peek at it.
Nine-tenths of 1%, 23.36 the ounce, and West Texas Intermediate crude up 0.2%, 78.09 for a barrel of WTI. The Consumer Price Index this morning showed no change in May, the tamest showing in almost 2 years. And with more, here's Bloomberg's Vinny Del Giudice.
Price increases moderated across the board, and that could be a pleasant surprise for Federal Reserve officials looking for signs that they can start.
Guys, Google's seeing a bit of a breakdown, Meta going back to the negative side. Bitcoin's also selling off here from around that 70K level. Just missed the 70,000 level intraday, and it is seeing rejection there. So some weakness could creep into Coinbase, MicroStrategy if Bitcoin sees a bit more profit taking in the near term. But we are seeing the Qs trying to come down, still trying to consolidate in a sideways range here. I'm still holding my put option at 80 cents. Now my 472 QQQ put. Still holding common shares short. Still holding my SOXS long at 21.90. Not really looking to close that. Look at the Qs. Let's see if we can get paid on these contracts. Again, my plan for the 472 put on the Qs, guys. As soon as contracts hit $1, I'm going to sell half and move stop to break even. So if contracts hit $1, we're currently sitting at 84 cents. We're about 16 cents away. I will sell half and move stop to break even on the put play. Going to remain short with my common shares on the Qs. I still think that there's a rather large head and shoulders formation triggering here. If we look at the semiconductor ETF, it is trying to break out yet again of that inverse head and shoulders. So the upside target off of this lower boundary breakout takes us to about 22.90 and change. 22.90 and change. So QQQ contracts are 5 cents per econ right now. Looking for more though. Dixie's trying to curl a little bit. Microsoft's still strong. Again, the sell side's coming from your communications ETF. Back testing the neckline for the Qs. This is where the bulls want to defend price action. If this inverse head and shoulders is true, this is where the bulls should defend, but we'll see if they break the neckline. All right, QQQ still trying to breach that neckline. Guys, take a look at nat gas breaking down here. Natural gas getting clobbered again. Holy cannelloni. Beautiful to see. Finally, our nat gas entry off the hop is working well. Look at that breakdown on nat gas, guys. Going for a new low of day. A new low of day on nat gas. This could be down, 5-6% easily. Looking at the nat gas chart, clear hourly chart head and shoulders formation, guys. A clear hourly chart head and shoulders formation. Testing the neckline right now. You break that level, and I mean, nat gas can complete this measured move down today in one session. It would be an extreme exogenous move down to 294, but don't be surprised. It can do that. Nat gas moves crazy. So again, our entry on cold yesterday is working out nicely so far. But we don't want to get too excited with nat gas yet, because again, it can be down 3-4% in one day and up 10% the next day. That's certainly within the ballpark of how that commodity moves. Still seeing the SOXS trying to catch a little bit more of a bid. We had an opportunity to trim this position at the highs off of the day trade 2190 level, but again, looking for a little bit more. What's interesting, guys, is the IWM continuing to break lower, getting faded off of that neckline. Take a look at that. Downside target on the Russell is 205. 205 on the Russell. Breaking down. Look at nat gas fall, guys. Natural gas is just collapsing here. Collapsing quite sharply. A lot of stocks are actually being sold into, especially those high short interest names where people just ran to at the open to catch that momentum. You are seeing a lot of those high short interest names freezing. Now, Microsoft just made a new high of day, up 1.5%. So very tough for the Qs to break down if Microsoft's continuing to show some strength. And what's interesting is even though MSFT is ripping here, going for a new high of day above pre-market high, Qs are still struggling here. Net selling coming into Amazon, Meta, Google, Apple. NVDA seeing some minor selling. Dixie's trying to curl up. Still up slightly on our 472 put on the Qs, up slightly, but look at Microsoft go. MSFT, another new all-time high. Take a look at the resistance we're into now. Huge long-term trend line. This is a short area from Microsoft. I have enough exposure on the QQQ front, but this would be a short area for Microsoft up around this 439.50 range. For a swing trade. This is an entry just on the swing trade front. Alright guys, NVIDIA is starting to break down a little bit more. That should help our SOXS. I repeat, NVIDIA is starting to break down more. Notice has anyone noticed the volume trends of like the higher volume stocks being traded. I mean, NVIDIA has been on the top of the list for a number of sessions, and it really was never at the top of the list unless it had like an earnings or a massive news event. But NVIDIA consistently being in the top 5 volume traded stocks since it's gone through its split. And that's telling us there is distribution. There's definite distribution. All right, guys, our QQQ put is up to 91 cents. It hit a high there of about 94, 95 cents off of the dip. I'm looking for my first trim at $1 per a contract. I repeat, $1 per contract, which is coming into play very, very closely. I will be looking to sell half. All right, guys, there's the QQQ, 96 cents. Get ready to trim our first little bit on our QQQ put. Again, I'm trimming my first half at $1. Come on, Qs, keep going. Let's see if we can break this little neckline on the Qs, which triggers a head and shoulders. The Russell's triggered a head and shoulders. Tesla's still strong. Google at the lows. Meta's forming a 10-minute chart bear flag. Adobe's still trying to peekaboo higher here. Still seeing that gas kind of just holding that little neckline zone. Come on, Qs. Come on, Qs. What is happening here with TradingView? Chris is saying put ASTS on radar. Interesting chart. Let's take a peek at ASTS. I don't know what's wrong with my TradingView right now. It's getting a little bit glitchy. Wow, Reddit is going through a bit of a squeeze here. RDDT going through a bit of a squeeze. ASTS, yeah, that one's at the highs of the session, 959. Trying to break a bull flag here. But again, all strong stocks have had the market backdrop being strong. You know, the equity markets have been phenomenally strong, so. GameStop looking like it wants to push a little bit more. Valero catching a little bit of a bid off of the lows. Nat Gas getting a little bit of a bounce. QQQ starting to come lower. Long KOLD. Crazy low volume. AVGO calls too expensive. It is an expensive stock. What is it trading at? 1480. You know, that's another one that's probably going to announce a split at some point. Unless they keep one semiconductor expensive just so that institutional players can play alone without any retail action. There's that possibility. QQQ still trying to potentially break down here. SOXS has triggered a little bit of a neckline breakout, but it hasn't really moved up yet. Again, I'm still looking at a dollar target on the QQQ 472 put. Amazon's really falling sharply. Same thing with Google. Tesla's continuing to push. And we will be live streaming the FOMC here. We will live stream the press conference from YouTube so that we can hear Powell's tone, see what tie he's wearing. I think we're a little bit more interested in the tie he's wearing. Alright, QQQ falling, guys. Get ready. The profit target on the Qs is $1. I'm selling half of those cons at $1 if we flush. And then I'm going to move my stop to break even. Come on, just give us a little bit of a breakdown here. Yeah, I don't know what the heck's going on with TradingView and these little power surges almost. Really odd. Just give me 1 second here. I'm just going to refresh this TradingView link because it's going a little bit sideways and wonky here. I don't know why it's cutting in and out. Just give me 1 second here. I'll fix these charts. It's almost like there's a Qs are still trying to firm back up here. Microsoft is now lifting the Qs. Amazon still pulling in from the highs. A little bit of a bigger push coming into the equity markets here. Alright guys, so Tesla trade is going against us right now. Definitely down on the position sharply, but I'm probably going to have to take a loss on this trade in the day trade. I'm going to wait for the next little dip. I think we could dip back down to 177.30. I may have to take a cover around that area. 177.30. Which would be about a $2.60 loss per share. But we'll see if it wants to give us any sort of a pullback. Microsoft finally seeing some selling. NVIDIA is still trying to press. Let's look at those SOXS. That one obviously coming in a touch here. GME giving up a lot of its price action. Valero Vale trying to bounce here in the near term. Amazon really looking heavy here. Some people might be trying to rotate out of Amazon, putting it into Tesla. Meta is still negative. Alright guys, I'm short the IWM as well, 206 short. Look at the Qs starting to come down. QQQ contracts are starting to move in favor. Again, $1 target on the 472 put. I repeat, $1 target on the 472 put. I will be looking to take a trim, and then I'm going to move stops to break even. We're about 8 cents away from target. We're about 8 cents away. Come on, just break this range, Qs. You can see how the institutions are just chopping people up and out. You know, there's a scenario where we may not break the range. We'll see. Come on, Qs. Give it up. $0.95 on the Qs. Come on, we're almost there, guys. We are almost there. Here, of course, we're bouncing off of the low channel there. Seeing Tesla finally coming in. Google new lows. Meta still negative. Amazon coming in. We're right on the cusp of triggering a head and shoulders on the Qs. We're right on the cusp. Right on the cusp. Guys, we're getting close to pulling some of the profits out of the 472 put. Very, very close. $0.96 on the Qs. Come on, we're up 16 cents a con. Let's break this level, guys. Again, I'm looking for a $1 target to trim. We're almost there, guys. We're almost there. Qs are being defended, though. They are trying to defend this. They're trying to bounce it a little bit here. Microsoft getting gobbled up, NVDA, Tesla getting gobbled up. Google still at the lows. Google is now negative on the session. So nasty, nasty candle, daily chart candle on Google, guys. That's a nasty daily topping tail on Google. For it to make a new all-time high and then reverse to the negative side, that's nasty. Amazon about to go negative itself. And again, that's had the backdrop of Tesla and the XLY being strong. They're bouncing the Qs here. Amazon continue to trickle lower. Same thing with Meta. Google still coming down. Come on, Qs, break that key area. Still just waiting on the Qs here, guys. It's like watching paint dry, but we're getting very, very close to a potential little technical breakdown in the Qs. The Russell's trying to firm up here. The Dixie's trying to hold 104.30. Bitcoin trying to hold 69.7. Google's selling off pretty sharply. Tesla's still rallying. Crypto stocks across the board still rallying. Nat gas down 3.3%. Tesla up 5. SMCI up 2.9. AMD up 1.5. NVDA up 3.96. Apple up 4.44. QQQ up 1.4 on the session. S&P up 1.11. Russell up 2.7. Still holding a short on the IWM that I took at 206. 206 entry on the Russell IWM short. I would add to the Russell about 50 cents higher, maybe 40 cents higher at 206.40. But we are trying to actually trigger a little bit of a reversal on the Russell here. Little intraday 1 minute chart pattern. No, the narrative around the headlines here is that inflation softening, encouraging sign for the Fed.
For a lot of people, that where we have seen so much of the inflation pressure in the last couple of years has been from services, and that's where we finally got to see services prices coming down. Car insurance was a big one that has been, like we said, going up for so many months, and we also saw airfares come down. That was significant. Some other travel-related expenses as well. Well, the next one that we're really all waiting for and that economists are getting more conviction is going to show up in next month's report is that long-awaited slowdown in housing inflation. That has still really yet to materialize, so we're hoping that the June CPI is going to be the first real look at that.
So core CPI up 0.2 from April. Market expected 0.3.
So we're basically back to the flat line on our QQQ puts. Back to the flat line on our QQQ 472 put. Qs and Russell trying to firm up in this region. Again, strength coming back in from Tesla. Google getting bought up at the lows. Apple, Microsoft, NVIDIA still holding the majority of their positive gains.
Rounded down, and that's really significant because let's try to annualize that rate. 0.16 multiplied out over 12 months is a 1.92 pace of inflation. That's under 2%. That's the magic number that we're looking for.
That's why I would have copied off of Molly's homework in high school.
Couldn't you do that one in your head? I didn't either. I did it before I came here.
Well, you've got a terminal, by God. Connect the dots for me on this Fed meeting. Molly, they're not making decisions today, I'm sure, based on this alone. But in the grand scheme, when we talk about the dot plot, how does this factor into it?
Right. Yeah. I mean, this was already, we were wondering about how the dots were going to shift from the March quarterly projections to now. And after we had seen all of those really hefty inflation prints at the start of the year, and that's when the Fed was thinking there would be 3 rate cuts in 2024, everybody's thinking, okay, that's now got to be down to 2. This report really helps solidify that, like, there are probably 2 rate cuts that could happen this year, and investors in the market reaction today even more bullish that those could start to come sooner. So right now, the first fully priced Fed hike would be in November, which is consequently 2 days after the election.
Consequently, and we're told they don't play those games, right? If it's too close to the election, that might be part of the factoring in, although the Fed wouldn't acknowledge that, I'm sure.
Correct.
But that's
yes, I'm
hard
sure
to
that
ignore,
would come
isn't
up in Jay's press conference today, and we will all be very much listening.
Michael McKee's in there crafting a question that I'm sure the chairman will have to stop down and think about. And Molly, it's great to have you. We appreciate your joining us. Molly Smith, Bloomberg economics editor, spends more time on Bloomberg Radio than I do. She's that good. There's a Very important day in Washington tomorrow that you might not have heard about, maybe if you're not inside the Beltway here. An important thing called Seersucker Thursday. It's happening on June 13th this year. And I bring this up because if you're with us right now on YouTube, you can close your eyes if you're listening on Bloomberg Radio or in satellite radio. The great Lester Munson is prepared for Seersucker Thursday. You're a day early.
YS wondering why Meta option is so expensive? What strike and date you're looking at there on Meta? Going long sock sell here, looks ready to break out again. I don't think so. You know, the risk to reward, equity markets have had their huge push on the CPI number. Huge push. I mean, if you want to take that, by all means, but it's risky. The risk to reward does not favor the longs here. I mean, I'm still remaining short this market going into the Fed. I mean, there's a scenario where, you know, I mean, I don't really think the inflation report was that good, personally speaking. But the market obviously has taken it well. We were to catch a few longs here. Nat gas going lower, guys. KOLD still pushing here. A new high of day on cold, guys. A new high of day on cold. Beautiful to see. We're already up about 7% on the swing, guys. A little under 7. A little under 7%. So that's already a nice winning trade on cold already. Alright, QQQ. I'm still holding that 472 put. Came close to taking profits at $1. Still have that same $1 profit target in mind. $1 profit target in mind. And again, as we approach the Fed meeting, I think that the risk to reward certainly favors the shorts. And I think a lot of people, I mean, you look at the outsized moves that have occurred in individual names. It's very, very strong rally today that has occurred. So if you really think that the market's going to get more liquidity than Apple being up 4-5%, NVIDIA up almost 4-5% of the session, Microsoft up 1.3%, Tesla up 5%, Qs are up 1.4%, Russell's had a 3% move. Markets are into a ton of resistance here. A ton. Doesn't mean they can't go higher, but we'll see. What I don't like is, you know, you look at some of those names that were performing in the pre-market, likes of those solar stocks, SunPowers of the world, Enphase, Maxon Solar, Sunrun. They've given up the whole price action. And then you look at the Russell, and the Russell's triggered a bearish formation. The Russell has triggered a little bit of a head and shoulders here. Intraday, that should take us down to 205. But I don't like the fact that a lot of these stocks that were pumping in the early morning got faded. ENPH faded. Again, this is just the solar group, but a lot of these names give you insights as to where risk is being placed in the market. When these names are pushing, sorry guys, just having a technical glitch here on my computer. Sorry, I'll be with you in 1 second.
Go grab them. We are nations of laws here in the West,
yes,
which is our wonderful asset, and occasionally it's a bit of a problem. In this case, it might be a bit of a problem.
Give me 1 second, guys. I'm going to put things back in order.
Weapons, that is the big development, I guess, most recently, but it's isolated around Kharkiv for the most part, where it appears that Ukraine has been on the ropes. There have been interesting comments we've heard from the likes of Emmanuel Macron and others to say, hey, maybe you want to use European weapons. And in some cases, Ukraine has been taking them up on that. Are we on the same page with our European allies, and are we going to see a widening?
Guys, can you still hear my mic? Can I get a mic check here, please? My computer that I'm streaming on just restarted. I don't know what happened there, but can I get a mic check just so I can keep providing audio? I know Bloomberg is still going, but can you still hear me? Mic check, mic check. Okay, perfect. The mic is still good. I still have all my other charts going here, so I'm still watching the trades we're in. But the main streaming laptop that I lost just had a bit of a restart there, so I'll let you know I still have that same target on the QQQ put. If we hit $1, I will be trimming it. Just for now, I'm going to queue in Bloomberg again while I get things resituated here on the charts.
Some nimbleness and get the Europeans to show they're supportive of him. Can they hold off the specter of, if you will, of kind of an ascendant right wing in both Europe and the United States? They're going to have to look like they've got energy and they can solve problems. Can they win in Ukraine? Can they get to a negotiated settlement in Gaza? Can they show results for their efforts? If not, people are...
Guys, we're seeing Bitcoin breaking down here. QQQ testing that neckline again. So again, get ready for a potential head and shoulders trigger here. There is a head and shoulders coming up. Our contracts are up to 88 cents. Let's see if the Q's want to break down before the Fed meeting, which is in a couple hours. Again, Bitcoin seeing some selling. Google seeing some selling. Tesla finally coming in. That's also been the leading stock in the mega cap land. Tesla seeing a hard reversal right now. Still trying to get my charts back up, so bear with me. QQQ is breaking that neckline, guys. But give me a second. My computer's just restarting. I don't know what the heck happened there. Lost my whole stream there. QQQ sitting right on that neckline. Our cons are at 88 cents, up about 8 cents per contract. Tesla seeing a little bit of a 10-minute bearish engulfing candle. 10-minute bearish engulfing candle. Still 3 minutes left in the candle. Russell's going lower. So again, we're short off that 206 area on the IWM. And that's starting to peel away lower.
Talking to you, and Senator Risch kind of holding his feet to the fire saying, all right, I'm going to slow down some of these other things until we get this thing resolved. This is the hot item. This is what both parties care about. And poor Senator Cardin has to kind of defend this little bit schizophrenic policy of the White House.
Is it bipartisan?
It passed House with a lot of Democrats. There's several Democrats in the Senate who want to move this thing.
So this could see the light of day.
I think it will at the end of the day in some form, whether it goes through the committee on some sort of compromise or they attach it to something else. There's just a lot of energy in Congress. It's playing out in other committees on other legislation. Congress wants to support Israel. They see Israel as very much the victim of Hamas and the positions of Hamas as utterly untenable. They're going to continue pushing until this thing is over.
We just got a minute with Lester Munson, but I have to ask you, with that said, about Benjamin Netanyahu paying a visit. Yeah. That's going to be quite a day in Washington with some very...
Almost there, guys. We've almost got the charts coming back up. Still hanging on here. Still seeing the Qs fighting that little neckline. Just trying to cue some things up here.
Yes.
Speaker Johnson and the minority leader in the House, Hakeem Jeffries, and Schumer and McConnell. So this is a bipartisan, bicameral effort. Yes, it'll be a little bit controversial, I think, particularly for progressives. There may be some on the far right.
There's no ceasefire by then?
That really is the big question, Joe. Like, can the Biden administration get to a place where whatever's going to happen happens before the address? That will make it much more successful. And if that doesn't happen, then I think we are looking at a real hot topic.
We'll be curious to see if there's a White House visit and if there's gloating when he goes home, because that's a big score for Benjamin Netanyahu to do.
There should be a White House visit.
The layup here, yeah. We'll talk more about it then. Great to see you. Searsucker Thursday. He's a day ahead. That's how they play it on K Street. Lester Munson at BGR Group. Of course, our good friend here, often a panelist, and great to have a long-form conversation with Lester. We'll have much more ahead on Balance of Power. This is Bloomberg.
Alright guys, we got our charts back up and going here. Sorry about that little minor glitch. We are all good again. Don't know what happened there. Alright, so you're seeing the leading stock could be telling us that the Qs may want to break this level. Tesla finally coming in here in pretty sharp fashion. So whenever the leading stock starts to give up some price action, that's telling us that maybe the Qs want to break down here a little bit, but still holding on to that neckline ever so carefully. Still holding that 472 put. We're up about 5 cents. Could have taken more profits, but still looking for a bigger move, bigger directional move to the downside. See if the SOX can work out at all. Has broken out temporarily, but it needs to confirm on a little bit of a higher time frame. All right, guys, here comes the neckline test. Here comes the neckline test and break. Russell's triggered its bearish formation. Qs are about to trigger its bearish formation. Cons are up 10 cents here. Let's see if we get the break. Again, dollar per a share. I will look to trim. Head and shoulders on watch. Come on. $1 per share. I will look to trim on the Qs here, guys. Amazon still looking a little bit weaker. Bitcoin looking a little weaker at the moment. Microsoft, Apple pulling in from the highs. NVIDIA still trying to curl up here. So NVIDIA isn't looking too bad on a technical standpoint. Ram saying, any suggestion for someone holding SOX at 29.62? 29.62. Whoa. Ram. 29.62 is all the way up there. Oh, I guess you didn't take the sell. You see, that's where I trimmed. I took a loss in that position a couple weeks ago. Just a minor loss of about 3% on the SOX, and that proved to be the right decision. I mean, what are you down right now? 29.62. Let me just work out that average here. So you're down about 30, 33-ish, give or take. 33% or so, which is, it's a triple, so really you're only down about 10 to 12% on the SOX, which obviously is a fairly sizable pullback that's needed to occur. But it's not unlikely. I mean, if you have the ability to withstand and weather that storm, I would hold it. All right, guys, cons are coming into $1 here. I'm getting ready to trim very shortly here. Contracts are coming into $1 on those QQQ 472 put. Come on. Hit $1 and I will trim. If we hit $1, I'm trimming half of the position, moving stop to break even. Come on. Head and shoulders now on watch and is triggered, guys. I repeat, head and shoulders on watch. It has triggered the Russell breaking lower. QQQ breaking lower. Yeah, you can buy SOX calls for sure. Way to average. Alright, guys, contracts at 96 cents. Come on, Qs. Give us a nice little flush into this 474 area. 474 is on watch. Again, Apple seeing some pretty hard selling. Come on, Qs. We've been patient with you. We've been patient. I mean, if you can somehow work your average down, but again, it's a tough one being down that much. In a triple, I mean, again, semis are definitely the bright spot of the market, so the pullbacks are going to be bought, at least in the near term. Still seeing cold very strong on the session. They're still saving the Qs here. If you're looking for an options play on SOX, I mean, at least 2 months on the clock. At least 2 months on the clock. Like, the semis aren't going to crash and burn. They're not going to crash and burn. There's way too much hype. If anything, if any decline comes into the semis, it's going to be I think a decline that has a lot of bullish bounces. So it's not going to be a one-way shot decline on the semis if they do see any sort of sell side pressure. So that's the only thing. So that's why time is your best friend or your worst enemy. And if you're looking to pick up additional shorts where you're already under on the position, you don't want to be getting crushed on the common shares and getting crushed on the options. So it's a tough one. In your position, definitely give yourself ample time. Ample time. Even 3 or 4 months is probably better. QQQ still trying to hold steady. The Russell as well is trying to move a little bit lower. Dixie's trying to firm up in this region. Apple's looking a little bit heavier off of the 215.50 level. Micron looks weak. Thank you. I'll pull that up on my other screen. All right, we're still up about 14 cents on the QQQ put, 472 put. Still looking for more. Head and Shoulders has triggered on smaller time frames, but again, we'll see if they want to negate it and push it back up. Apple still looking a little bit more heavy in this region. Bitcoin seeing some harsh declining sell side pressure, guys. Bitcoin really coming in now. Look at Coin, MicroStrategy, they're still up 6% and respectively, they're still holding a lot of their gains. All right, guys, I'm going to take a stab at a short on Coinbase. Let's see Coin. Coin's still holding steady. Looking at a short on Coinbase just because Bitcoin, but I mean, I'm surprised that Coinbase hasn't really declined much with the sell-off in Bitcoin. So I'm going to stay away from now. I'm going to stay away from it now. I'm watching it on some other screens here, but maybe just stay away. QQQ, just give us that dollar target. They do not want to drop this Q down. Oh my goodness. We haven't even had a first minimal Fibonacci retrace of this move today. The Russell's still trickling lower here, guys. The IWM still breaking a touch lower. Alright, this might be the next flush in the Qs. Let's see. Let's see if we get another little break. Again, a dollar target on my QQQ put. A dollar target. And they're still keeping us pinned. Apple seeing some more selling. Bit of a bear flag on the 1 minute chart here of the Qs shaping up. What could happen here is a quick dip and then a buy the dip bounce. So just be ready to trim. Be ready to trim on these options if we fall. Natural gas coming into some support. Thanks, Paul, for the update there. Yeah, it's trading at the $3.04. There is some support here, you're right. There is. But I still have it priced in that nat gas has triggered an hourly head and shoulders pattern. Here comes the Qs, guys. Get ready to trim these cons. Get ready to trim some of these cons. Coinbase actually coming in now. Google, Amazon still struggling here. They're looking fairly weak. We have 2 hours till Fed meeting. Market is still staying fairly decent here in this range. Come on, break this little bear flag. Give us another downward move in the Qs. They keep trying to save it here. They keep trying to bounce it and save it. Russell 2000 is almost trying to make another new low. Yeah, Nat Gas trying to bounce here. Nat Gas bouncing sharply here, Paul. Qs are bouncing sharply. Look at that. Wow. And there's your little back test of the neckline. Russell's trying to catch a little bit of a bid here. So we're still seeing the equity markets being saved here. Big bounce in Meta and Apple. Russell getting faded here off of that initial impulse candle. Let's see if the Qs follow suit. Tesla could be putting in a little bit of a minor 5-minute bear flag. NVIDIA is actually trying to trigger a bit of a bullish inverse head and shoulders here. So now we're running into a scenario where NVIDIA is trying to actually break out again. Oh my goodness, NVIDIA. And that upside target is a new high of day. So here comes NVIDIA. Let's see if it gets stuffed at the neckline or if it's a true little breakout here. But NVIDIA is shaping up to lift the Qs here. What a push on NVIDIA, lifting everything as a whole. Big reversal back down in the Qs. So despite NVIDIA's strength off the breakout, you're seeing some selling now in Microsoft. Amazon, Google trying to stage a bit of a bounce here. Again, 5 sectors negative in the S&P 500 despite the rip-roaring rally that we've had today. 5 sectors negative in the market despite the roaring rally. NVIDIA is still trying to hold things firm and steady here. Contracts were still up 10 cents on those 472 puts. And I'm still thinking the Qs are going to get rejected here and go a little bit lower. Russell's back down to the low, so that short is still working out well. Again, I still have a dollar target on the options, Here comes the Qs, guys. This is going to be the flush here. All right, this is where our cons are going to start printing. We're up to 95 cents again. Come on. The Qs are likely going to break this area here. This is likely going to be the flush here. Come on, Qs. Break it, break it, break it. NVIDIA is still trying to hold the markets firm here. Sell side pressure coming into Microsoft, Apple, Meta seeing a little bit more. Oil's catching a little bit of a bid here. New lows on the Qs, guys. New lows on the Qs there. Guys, I'm getting ready to trim here. I'm getting ready to trim. NVIDIA is seeing a bit of a decline. Get ready, guys. Get ready to trim. Russell 2000 breaking a little lower. Alright guys, the trim is coming in here. Very close. Come on, one more little flush on the Qs. Just doesn't want to give it up. They just do not want to give it up here. They're bouncing the Russell as well. Amazon looking like it wants to go lower. Can I check SPY? 542.36? Sure thing. So I mean, if we look at SPY, it's very similar to the Qs. You know, whether you want to use that as your neckline, it's triggered a little head and shoulders. If you want to use that pivot as your neckline, it's also triggered a head and shoulders. So right now it looks like SPY is probably going to retest its pre-market high. Likely get a bounce there off of pre-market high. I do anticipate that. The IWM still actually trying to maintain bullish structure here and firming up. NVIDIA is starting to rip higher here, guys. NVIDIA is starting to rip higher. IWM getting rejected there in the near term. Still seeing strength in NVIDIA, weakness creeping into Apple and Microsoft. Again, if the Qs break down, I'm obviously short the Qs. If the Qs break down, and obviously the SPY is going to break down. Right now the Qs are more relatively strong than the SPY. And you do have 1, 2, 3, 4, 5 sectors negative in the S&P. NVIDIA is still trying to press higher off of that inverse head and shoulders break. I'm going to take a little bit of a break here before the Fed meeting at 2 o'clock. Get some food into me so we can come back recharged, refreshed, and ready to go. The only thing about the QQQ 472 put at this point in time, I would mark a break-even stop loss at 80 cents. Do not let the QQQ put go against us because we're already losing on the common shares. I do not want to let the QQQ put go against me. So I have a break-even at 80 cents, still looking for first trim at $1. Okay? Guys, look at NVIDIA ripping here. NVIDIA is lifting the Qs and remaining strong, triggering that inverse, trying to press higher here. Guys, I maybe stopped out on the put play. It is coming up, back testing that similar neckline on the Qs. NVIDIA is just too strong right now, pressing higher and higher. Back up to 4.41%. Stronger than Apple at the moment. This is a big level for the Qs. You can see the neckline retest is occurring at this vicinity. So a really sizable level. So NVIDIA is still the strong horse right now, putting the market on its back. Oil making another bullish move back to the high side. Guys, the QQQ put options just took a break-even stop there at 88 cents. Or sorry, 80 cents. 80 cents. QQQ put is closed for a break-even. What a frustrating trade there. Came so close, pennies away from our first target, but never quite hit it. Pretty crazy. Tesla's still coming a little bit lower. This is primarily just Meta and NVIDIA bolstering the Qs at this point.
Las Vegas Strip, you won.
Pretty big decline coming into the Qs again and the Russell. Weakness in Tesla, Apple, Microsoft still trending, Amazon bear flag, stocks are seeing some distribution. Guys, I'm going to take a little bit of a break here, refuel ahead of this Fed meeting. We have just over an hour until the rate decision, so I'm going to grab some lunch here. And if anything crazy happens, I will let you know. But I will be live streaming the FOMC. I will be live streaming the FOMC as well as the actual press conference at 2:30 from Powell. All right. For now, I'm just going to cue back in Bloomberg. I'll keep you abreast of anything else that changes.
That's what's making this so tough. Not to mention, we're once again seeing in the Sun Belt, Donald Trump is doing better and Joe Biden is doing better in the Rust Belt. And of course, in this case, the union in the Sun Belt states are a problem for Joe Biden at the base level.
Well, this is really interesting because tomorrow Donald Trump is coming to Washington. He's not only going to be visiting with politicians, and he's got meetings in the House and the Senate. He's even going to apparently be in the same room as Mitch McConnell for the first time since 2020. That ought to be something. But he's going to be sitting down with the Business Roundtable, right? This is corporate America, 90 top CEOs in the same room. Apparently going to be interviewed by Larry Kudlow, so a friendly Rick. Donald Trump's message on business here. We're talking about the influence of the economy. We started this hour talking about CPI today. We're going to be going into Fed coverage coming out of our conversation next hour. How important is it for Donald Trump to convince that room for him to be a viable contender or to keep, in some cases, his lead over Joe Biden?
Yeah, I'm not sure how election impact this speech will be, but it will certainly have a way of opening up doors to money. And we, of course, have seen Donald Trump really working hard to get some cash in the bank because his campaign has been behind on its fundraising activities. And so whether it's small dollar donors coming in after the convictions or really large dollar Wall Streeters coming in, this is really going to be the primary focus. But it's going to be on issues, and he's going to talk about making those Trump 2017 tax cuts permanent. He's going to want to talk about reduction in regulations. To be honest, this is the sleeper issue, I think, of this election, because Joe Biden has not seen a regulation he didn't like, and his cost of regulation is over $1 trillion taxes to corporations. And Donald Trump actually reduced the amount of money that regulations have to commit to be able to maintain regulations during his presidency. So it is a stark contrast, and I think felt by corporate America, and probably will resound very well in his comments to the Business Roundtable.
Well, Jeannie, after President Trump appears, or I don't know what order they're going to go in, White House Chief of Staff Jeff Zients is going to be speaking to the group here on behalf of Joe Biden, who, of course, is on his way to the G7. Apparently, he'll be in a conversation moderated by one of the CEOs, not a former staffer in the case of Donald Trump. Is there any point in even going? What's he going to say?
I think, first of all, the statement the Biden campaign, or the White House, not the campaign, released today on the inflation numbers is the best one I've seen so far from them. And I think they're starting to finally, maybe a little late for some of us, coalesce around a message, which is to stop trying to convince people that what they've done is good and they should be given credit for it, but to meet people where they are, which is prices are too high. And then to say, who are we going to be here for? And that is the middle class. And who are we blaming for prices, and who are we taking on? Big oil of the kind that Donald Trump was down there saying, give me $1 billion. I'll get rid of all these, regulations and all these environmental steps that Joe Biden has taken. So I don't know how far Zients will go in the roundtable making this case, but that is the case that the Biden team needs to keep making. They are finally starting to see that they can't talk people into liking how the economy is. but they can meet them where they are and say they know how to move forward, and that pin Donald Trump down as a friend of billionaires, CEOs, Wall Street. So I think Trump's visit there tomorrow is one the Biden team, at least the campaign, will want to highlight and say, look, this is who he is going to see. And thankfully, Joe Biden is out of town doing the work of the president, so he's not going to be attending.
Rick, I don't want to set you up. We've got less than a minute here, but does anyone in that room care about deficits? Will that be part of the conversation tomorrow?
Yeah, I think that it's a growing concern. I think that as we come out of all these impacts of things like COVID and there's some stabilization of spending, that there's an expectation by groups like the Business Roundtable to start cutting back on the rate of growth of the deficit. I think they see never-ending deficits as a potential problem for the country long term.
Well, we're going to talk a lot more about this with our panel in our second hour, because this visit will reignite the debate over making the Trump tax cuts permanent. And we have a special guest with us in studio next hour. Former Congressman Kevin Brady of Texas, used to chair the Ways and Means Committee, will be sitting down with us coming up next. Stay right here on Bloomberg.
the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Next comes the fight over taxes. Welcome to the fastest show in politics. As Washington prepares for the return of Donald Trump, a visit tomorrow, and the grand debate over potentially making the Trump tax cuts permanent. I'm Joe Matthew alongside Kaylee Lines in Washington. Welcome on Bloomberg TV and radio. We're just a day ahead on this one, Kaylee. It's going to be a big debate that starts tomorrow.
Yep, a meeting with first House Republicans, then Senate Republicans, and then a meeting with the business leaders, essentially, here in Washington. So he's going to be making a full court press, if you will, here in Washington to talk about things, including his tax agenda. But that's all tomorrow. We also have to talk about the news of today, which was cool CPI, Joe, ahead of the Fed, which is just an hour from now.
Yeah, pretty remarkable. Our special coverage starts in 30 minutes here on this Fed Day, CPI Day as well, and that means a busy one for the markets, Kaylee.
Indeed. So let's get a check on those now. Charlie Pellet has a look at that from New York. Hey, Charlie.
Thank you very much, Joe and Kaylee. One word for you: record. Dow, S&P, NASDAQ, all advancing right now. Records certainly for the S&P and the NASDAQ Composite Index. 1 hour to go, just under an hour to go until the big event, the Fed decision. 90 minutes from now, the bigger event, Jay Powell's news conference. Yes, we got you covered on Bloomberg Radio and television. Stocks climbing to records as that broad cool down in inflation spurs a plunge in bond yields. 10-year, 4.25%. 2-year, 4.67%. Equity markets ripping higher across the board. S&P up 59 now, up 1.1%. The Dow up 48, up 0.1%. Tech stocks, the big story. NASDAQ up by 308 points now, up 1.8%. NASDAQ 100 index up by 1.4%. The Russell 2000 index of small cap shares, the outperformer by far, surging now by 2.6%. Spot gold up 0.9%, 23.37 the ounce. West Texas Intermediate crude up 1%, 78.69 for a barrel of WTI. Apple surging to a record today, up another 4.1%. Also at a record, Oracle shares up now by 12.2% after last night's earnings report. So lots going on. Recapping, stocks higher, S&P up 71, up 1.1%. Balance of Power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet with a pre-Fed decision check on the markets on this CPI day. Pretty remarkable to see stocks at a record. But of course, Joe, interest rates are still high and they will likely stay high after the decision today. And often we talk about here in Washington the political implications of that. But there also is a fiscal question around the very high level of borrowing costs and an incredibly high level of debt. And as we get ready to see former President Donald Trump meeting with congressional Republicans tomorrow, addressing the debt, also addressing just the ledger, how much money's coming in versus how much money is going out, definitely going to be on the agenda.
Yeah, that's right. And of course, there's going to be a big drive for Donald Trump supporters to reinstate or make permanent, is a better way to put it, the 2017 Trump tax cuts. They are set to expire next year, Kaylee, and this is a big push in Washington. We're already hearing a lot about this, and it's at a time that frequently the concept of debt and deficits can be forgotten in a campaign season. But it's obviously an issue that Washington needs to get its arms around pretty quickly.
Especially when you consider the potential impact that could have. I actually spoke about this last month with Philip Swagel, who's the director of the Congressional Budget Office, and he talked about how much it would cost realistically to keep those tax cuts intact in 2025.
That's right. That important parts of the 2017 Tax Act expire at the end of next year, at the end of 2025. Those are not in our fiscal projections in the sense of, the taxes revert to the pre-December 2017 law and there's more revenue. So extending the parts of the Tax Act that expire would cost upwards of $3 trillion over 10 years and really closer to $4 trillion, including the interest service.
$3 to $4 trillion. We're talking big money here. And it's going to prompt a conversation about spending as well as taxation while we're at it, Kaylee. And that's where Kevin Brady comes in. With us at the table today, you know him as Congressman. We call him former Congressman now, former chairman of the House Ways and Means Committee. Kevin Brady is now spokesman for the Alliance for Competitive Taxation. And we're lucky to have him just in time for the annual congressional baseball game. It's great to see you. Welcome back to Bloomberg
Thanks
TV
for
and
having
Radio.
me.
What a treat to have you at the table here. This is going to be part of your cause. So what do you have as a response when you hear about debt and deficits as an answer to making these tax cuts?
Yeah, so one, you have to ask the question, what happens if they don't extend it? So, putting a $3 to $4 trillion tax hikes on families, Main Street businesses, on American competitiveness has real consequences for lower paychecks, much slower growth in the economy, U.S. less competitive at a time China's super aggressive. You know what I mean? They want to dominate our industries and technologies. And so I think it's going to be crucial for both parties to find a way forward to extend those tax cuts, especially for those families, Main Street businesses, and our competitiveness. You may remember the reason we did it was that for a decade before 2017, the economy was slow growth, less than 2% for a decade. Paychecks have been flat, and every other month we saw another U.S. company move overseas. So we had to modernize the code in a big way, lower rates, but we did it in such a way we created code built for growth of jobs and the economy and paycheck. We wanted to make sure we were the desirable location for new plants, innovation. We did that. We wanted one of the most competitive economies on the planet. We did that. And as a result, paychecks, the thing I think I'm proudest of, in the first 3 years after tax reform, paychecks, inflation adjusted, went up 9%, the highest level since we began keeping records. So people were getting ahead in a big way. That's really the legacy of those cuts and why Congress has to find a way to extend those or make them permanent.
But people were getting ahead. At the same time, the deficit was growing. So if you, as you say, businesses and consumers actually need these to stay in place, how do you make it fiscally responsible?
Yeah, so the good news is there's ways, and here's why. People remember the tax cuts is costing $1.5 trillion, even though we've seen record revenue. Like corporate rate revenue today is higher at 21% than it was at 35% because of the growth. So we've seen good growth. But bottom line is the actual cuts were $5.5 trillion. We paid for $4 trillion of it. Reforms to lower the rates, to modernize the code, and to grow the economy in a big way. So lawmakers, as they extend the tax cuts, will also extend the reforms that help pay for it. That won't cover all of it. It's a good, solid step. So depending on the party, depending on in an era where deficit and debts really matter, both parties are going to have to decide, so do we pay for all of it? Do we pay for most of it? What does that good policy look there? And so they're going to have to be looking at similar type reforms as we did in 2017 going forward for that very reason, to make sure we're not adding, significant amounts to the debt.
But you're sitting down there in Texas looking up at this crowd now. And we can hardly figure out a budget to pay for the government, never mind deal with a debt ceiling that's going to be looming. Do you trust the people who currently serve in Congress to do what you just said, extend the tax cuts and find a way to pay for it?
I do. And here's why. I think there's a middle class in Congress, people you don't see or hear about often. They are very solid, trying to do the right thing, serious lawmakers. And they're going to be the ones to be putting these packages together.
Are they on both sides of the aisle?
So I believe there is. And I think that they can, because sort of like 2012, when we saw the Bush tax cuts expire, both parties had a lot at stake, in that. And they do again in 2025. The thing is, my point is, don't just extend or make permanent, keep improving the tax code. We can be more pro-growth. It can be simpler, especially on small businesses. Things have changed, because of China so super competitive. AI has changed things. Innovation should be, especially for our U.S. companies, the country that wins the innovation race wins the future. And ACT's top priorities are keep America competitive, make us the most desirable place for those new plants to innovation, keep incentivizing innovation in the U.S. And I think those are policies both parties, can embrace.
Well, it's going to be one party, or at least the majority of the parties in both chambers, meeting with Donald Trump when he's here in Washington tomorrow. to what extent is he already influential on this conversation, knowing that there was a bipartisan tax bill that passed the House with massive bipartisan majority that ended up going nowhere in the Senate? And some people were telling us it's because it's an election year. And if you expand the child tax credit, potentially Biden gets credit for it. It becomes political. I wonder what you think of that narrative.
Yeah, so I think, one, President Trump's very influential, certainly among the Republican Party. These drove his economic agenda that is so popular with the American people. So he's got a big stake in extending that. And the corporate rate cut, for example, that drove so much of the paycheck wage growth was his signature achievement. So he's going to play a big role. I think some of the dynamics of this year's tax bill will still be front and center in 2025. You know, you're going to have businesses, you know, Republicans that want the middle class cuts, the small business cuts to remain in place, and want America to be super competitive. Democrats are going to want a child tax credit that looks like the COVID era credit. They're going to want to defend the green energy subsidies, Inflation Reduction Act. So you can already see sort of the battle lines being drawn. But 2025, with the prospect of $3 or $4 trillion of tax hikes, it's going to focus leaders in both those parties, tax writers, who are already beginning their work.
We're still waiting for the tax code to fit on a postcard. Wasn't that going to happen?
You know, I tell you what, in the House, we did exactly that. Our version was 13 lines on a postcard that 90% of Americans would use to file. I still dream about that. Because,
I'm sure there are many others.
Can you imagine you and I looking at a postcard and saying, this is how I'm taxed, and more importantly, that's how my neighbor is taxed. There's real power to simplicity. So I'm, you know, if you ask me things I dream about, I wish we could have actually achieved, you know, the postcard, and that fairness from that is certainly one of them.
On the subject of what could be dream and what could be achievable, we had Donald Trump over this past weekend in Nevada floating no taxes on tipped income.
Yeah.
Do you think that is actually something workable, knowing he would need congressional approval to actually do that in a second administration? Or do you think that was just kind of an idea that was thrown out there given the audience?
No, I think it doesn't surprise me. And here's why. Because during tax reform especially, you couldn't be at the White House that he wasn't asking, what are we doing for the little guys? What are we doing for the blue-collar workers? I mean, that is part of who he is. I don't know tons about the tip thing, but here's... So full disclosure, I'm one of those people. I want fewer tax provisions for some, lower rates for everyone. I think that's the fairness here. But I think there's two impacts. One, if you tax less of something, you get more of it. So I think there'll be more wages sort of redesigned on the tip model. Secondly, those are industries that really have trouble hiring people and keeping them. You know what I mean? Those service industries. So you may see more young people. I was a waiter and a bartender. I've lived that tip life as well. And so you may see more people drawn to some of those service industries that traditionally, you know, it's been hard to cover those tables.
That's for sure.
Yeah. All right. Well, sir, great to have you here in our studio. Thank you so much for joining us, Kevin Brady.
At the ballpark tonight.
Yeah, good day. It's going to be great.
Indeed. Beautiful night here in Washington. Absolutely. Former chair of the House Ways and Means Committee, now spokesman for the Alliance for Competitive Taxation. We appreciate you joining us. We want to turn now to our political panel as we look ahead to the perhaps non-tax related discussions that will be happening on Capitol Hill tomorrow between former President Trump and congressional Republicans. Rick Davis and Jeannie Shanzano, our signature political panel contributors here at Bloomberg, are joining us now. So, Rick, do you think that there's actual items on the agenda for these meetings, or is most of this about optics and the show?
Yeah, well, first of all, you can't get away from the optics in the show, right? We're right in the middle of a presidential contest, and I think that part of what Donald Trump's message is going to be is, hey, our boat floats with me at the top of the ticket. Anybody who thinks that they can do better is crazy. Everybody needs to rally around my candidacy. It's going to be all about how the top of the ticket is going to drive the outcome of the election. And that's the political message. I think that when you get into substance, I think that Donald Trump's going to make sure nobody goes out there with an agenda that somehow puts either his campaign in a bad light or the Biden administration in a good light. Certainly the untold message, he won't say this specifically, I would assume, but you never know with Donald Trump, is that don't do anything that's going to cause me any problems between now and November. That is probably the most important thing, because there are various elements of the House and the Senate who have agenda items that could cross-pressure his campaign, and he doesn't want any of that stuff happening. So it's almost like play along with my campaign, do what I tell you to do. We're all unified around me, and don't do anything between now and November that's going to cause a problem for my campaign.
Mm-hmm. Jeannie, you just heard the pitch from none other than Kevin Brady, who used to chair the House Ways and Means Committee, with a strong argument on making the Trump-era tax cuts, as we call them, permanent. This is going to be a big debate that makes its way onto the campaign trail. What's Joe Biden's answer?
Well, first of all, I love the 13 lines. I remember a good postcard, and I love that. So I wish Kevin Brady would come back and fulfill that. I think what is going to happen, or what should happen in a serious discussion, is to look back and look at the reality of Donald Trump's record. You know, he promised cuts, and he delivered those cuts for billionaires, for the very wealthy, and for big corporations. He reduces the corporate income tax to 21%. He's the first president since Herbert Hoover to leave with less jobs than when he came in. And of course, he had the pandemic to deal with. So I will cut him some slack on that. And the budget deficit has soared under both him and Joe Biden. And we're now over $3 trillion. So, you know, I think he likes to hype his record, but I think real serious questions have to be asked about both his record in the past and what he wants to do now. If he wants to grow our military, for instance, how is he going to do that if he is cutting revenue? You know, in a way, this isn't complicated, right? If you're going to spend more, you got to tell us what you're going to cut. I don't suspect we hear any of that tomorrow, by the way, but I think those are the serious discussions that have to be had. And I think on Joe Biden's part, he's got to say, we haven't reached where we should. We still have very high costs in this country, but we are moving in the right direction. And I am going to take on all of those corporate billionaires and the corporations that Donald Trump has been delivering for and continues to promise to deliver for if they give $1 billion to his campaign.
Well, Rick, to Jeannie's point on if you are going to reduce revenue, you also need to reduce spending. We all know how big the slice of the pie is that you can actually reduce, because the mandatory part of the ledger is just so much larger than everything else. There's very little discretionary that you can actually cut. The problem is when all of that, or a big chunk of that, is entitlements, neither Joe Biden or Donald Trump can touch that politically, right?
Well, certainly they're not going to touch it between now and Election Day. They've both been very clear about their lack of interest in reforming entitlements. The real question is, both of these guys, regardless of who wins, this will be the last job of their political career. And so they have an opportunity to then sit back and say, you know, in order to reform some of our fiscal house, we have got to start to get these entitlements under control. Because as you point out, Kayleigh, I mean, there is no such thing as cutting a budget without touching the entitlements. The rest of it is just optics. And so that's the question, is do they have the political wisdom and courage in the last 4 years of their political career to try and put the country on the right track when it comes to this excessive entitlement spending that's going to bankrupt the country at some point if it's continued to go unchecked?
Our great panel, Rick Davis and Jeannie Sheehan Zaino, our signature panel on Balance of Power. Many thanks to both of you for helping us distill all of this. We're going to be talking a lot more about it, of course, tomorrow when Donald Trump makes his visit here to Washington, D.C., meeting with lawmakers on the House and the Senate sides. And coming off of our CPI data this morning, Kayleigh, we're looking ahead to special coverage here a little bit later on this hour as we prepare to hear from the Federal Reserve. Two big shots today on the economy in Washington.
Yep. First inflation data, then a decision and a press conference from Chairman Powell. And we're going to talk to the White House about these things coming up. Heather Boucher of the Council of Economic Advisors will be joining us in just a few minutes right here on Bloomberg TV and radio.
1:21 on Wall Street. We do check markets all day long here at Bloomberg. We're looking at records on this CPI Wednesday, a Fed Wednesday as well. S&P now at 54.37. Stock market pushing higher. S&P right now up 1.2%. We've got NASDAQ up 323 points, up by 1.9%. The Dow up 0.2%, up 66 points right now. Perhaps the big stock market story, the surge in the Russell 2000, up now by 2.6%. Bottom line here, stocks hitting records as a broad cool down in inflation spurs a plunge in bond yields. 10-year 4.26%. The 2-year 4.68%. Spot gold up $22 the ounce now, $23.39, up by almost 1%. West Texas Intermediate crude up 1%, $78.68 a barrel. Apple has overtaken Microsoft in market cap on an intraday basis. Apple shares at a record, up another 4.8%. After earnings, Oracle at a record, up 12.7%. And a deal in the energy industry to tell you about. Oil producer Matador Resources buying assets in the Permian Basin from a portfolio company of NCAP Investments for $1.9 billion in cash. Matador down now by just about 0.8%. Again, recapping, minutes away from our Fed coverage, S&P up 63, a gain there of 1.2%. Balance of power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet up in New York. Thank you so much. I am Kaylee Lyons alongside Joe Matthew here in Washington, where we're just as busy as New York is today with this double dip of big economic events. A Fed decision coming up in just over half an hour, Joe, after cooler inflation data this morning. On the headline monthly CPI figure, we get a 0.0%.
Yeah, kind of amazing. Markets love it. White House likes it, but treading carefully, as we see in the statement here. Prices are still too high, writes the statement from the White House, but today's report shows welcome progress on lowering inflation. Let's go to the source, and a great opportunity just moments before our special coverage begins here on today's Fed meeting to speak with Heather Boucher, a member of President Biden's Council of Economic Advisors. She's with us from a beautiful North Lawn today. And Heather, it's great to have you back. As I read the statement from the White House, which is clear, as I read at the outset, prices are still too high. I also wonder if you're thinking inside about how far we've come.
Oh, we have come so far in so many different ways. You know, I think about the economy that the president inherited and so many challenges, how we got unemployment down, how we got people back to work. And yes, prices went up, but we have seen prices come down by about 60%. And certainly good news today with the flat increase in prices overall. So this has certainly been giving, as the president likes to say, families a little bit more breathing room, and is good news for American families. And of course, good news for American workers today, as we saw yet another month of wages outpacing inflation. That marks 15 months for the 80% of the workforce that are production and non-supervisory employees, where their wages have been outpacing inflation. So that's great news for workers and their families.
Well, Heather, even as we talk about a flat figure on the headline, there still is a bit more happening beneath the surface that shows some stickiness in certain areas, including shelter prices. Up 0.4%, owner's equivalent rent, similar. How can that realistically be addressed at this point when there are arguments being made, including by members of the Democratic Party like Senator Elizabeth Warren, that this is something that high interest rates are actually exacerbating because it costs more to borrow to buy a house? How can you be confident, as long as rates remain high, that the shelter price pressures are going to come down?
Well, let me give you two answers to that question. First, a technical one and then a policy one. So first, CA, the Council of Economic Advisors, we've been tracking this for quite some time. The way that shelter is accounted for, you build in rents from leases that were signed a while ago. So you have a good sense when you look at real-time data how this might shift over time. We have been estimating that these numbers will come down as the prices of new leases come down. And certainly that's what we've been seeing in general. Now, granted, we certainly want those to come down more, but that's taking up a larger share of the monthly increase in price changes. On the second point, though, in terms of policy, and the president's been acutely aware of the challenges in housing. He has put together a comprehensive housing supply plan, and that would do a number of things. One thing that I just would like to point out is that that plan includes giving new home buyers a tax credit to make it just that much more affordable, which can help help ease the burden of those higher interest rates during these times so that people can get into those new homes.
Heather, at what point do higher interest rates in and themselves become inflationary, or are we already there?
Well, listen, we have been in this situation for quite a while now, and the expectations of where interest rates have been baked into, forecasts and where people are thinking about the economy. And certainly this is challenging for folks making those big purchases or things like that. But we remain optimistic that because of the success in the economy, and, critically, we have made so much progress, and that very quick progress in the beginning, but we have seen, things like the gains in jobs and output, that we're starting to see those get down to that kind of pace that is sustainable. And so that's what we're looking for. And, here today, we're here to talk about the fact that, we have these numbers on inflation that beat expectations on the low side. That certainly it's ongoing good news and means that we're going to get that extra bit of breathing room in the economy to continue.
Well, as we think about the strength of the economy that you're characterizing and, say, the labor market specifically, we have seen a lot more analysis of the way in which migrants have contributed to that. The idea that they are actually playing a very key role in the strong job growth figures we continue to see every single month. But President Biden just signed an executive order essentially cracking down on those seeking asylum. Heather, how quickly do you expect that might actually show up in the data? What economic impact could it have?
So the president does not expect this to have negative implications on the economy. Certainly we have seen that, immigrants are an important part of our labor market. They add to the economy. They go out there and get those jobs and in all the different ways then add to the economy as they're buying things. But we also know that the economy is very strong right now in terms of the labor market, and we've seen an unemployment rate at or below 4% for over 2.5 years now, and so that certainly is an indication of the strength that there are a sufficient number of jobs out there for anybody who wants to go out and try to find something. That continues to be a strong labor market, even though we've had this immigration.
We're spending time with Heather Boushey live from the White House as we prepare for our special Fed coverage here on Bloomberg TV and radio. There's a big debate about to begin, Heather. We were discussing it before you joined us about potentially making the Trump-era tax cuts permanent. There's a big drive among Republicans to make that happen. And as we consider the potential impact of greater deficits on inflation, I wonder what you would see happening to our economy if that took place. These are set to expire next year. What would happen if they were made permanent?
Well, listen, here's the thing. We know that the kinds of policies that the prior administration put forward were supposed to lead to a ramp up in investment and productivity and, particularly in manufacturing jobs across the country. And that's not what we saw. In fact, President Biden's agenda has led to that kind of sharp uptick in investment, and not doing it through the massive tax cuts that were, not good for the economy, but actually doing it through, smart targeted policy that has led to real economic outcomes in communities all across the place. So as we're looking at this conversation about what should and should not expire, the president's been very clear. He continues to believe that no one making under $400,000 a year should see their taxes go up. But he also knows that we should not be just having giveaways for American businesses that are not tied to investment and growth and the kinds of things that really matter to our economy. So that, I think, is where the important real contrast is between that Tax Cuts and Jobs Act that only starved the government of the resources that it needed, and the president's proposals that have been put forward in a way that is helped to lower the deficit, but is also making those at the top pay their fair share.
All right, Heather Boushey, member of the White House Council of Economic Advisors, joining us from the North Lawn of the White House today. Thank you so much for being with us as we await less than half an hour from now the decision from the Federal Reserve, Joe. And of course, we are expecting that interest rates will stay where they are. The question is going to be, what happens in the dot plot? What signal do we get about how many rate cuts could come this year? And the question we all have here in Washington, could one of them come before the election on November 5th.
Yeah, that remains a big question. And of course, we'll be listening closely to Jay Powell in the news conference. All of that coming your way here on Bloomberg TV and radio. I'll point you to the late edition of Balance of Power. Kaylee and I will be back at 5 p.m. Washington time with a conversation with President Biden's chief economic advisor, Jared Bernstein. Kaylee, his take on what we saw at 8:30 this morning and are about to see in this Fed meeting.
Yep. Less than half an hour to go until the decision. Chairman Powell will take the podium shortly after that. So now we turn to a special edition of Bloomberg Surveillance with Tom, John, and Lisa.
Live from New York City for our audience worldwide, Bloomberg's The Fed Decides starts right now.
This is a special edition of Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz. Bloomberg Surveillance, The Fed Decides.
Starts right now on TV and radio for our audience worldwide. Good afternoon. 27 minutes out from that Fed decision, with equity markets at all-time highs on the S&P 500, breaking above 5,400 and positive on the session by 1 full percentage point. What a start to Super Bowl Wednesday. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. TK 8:30 Eastern Time. CPI coming out cooler than expected and igniting this equity market rally and taking the bond market with it.
I like what David Rosenberg said. He said just simple as this, eureka. It's finally the first visible sign for disinflation, the disinflation crew, that now's the time, and you see it in the market reaction.
Yeah, Mike Ape on the Bank of America agrees, Bramo. Expect more deceleration ahead. One giant leap for the Fed. More evidence the first quarter was an outlier. Q1 looks more and more like a head fake based on the inflation we've had so far.
One small step for the Fed, one large step for mankind at a time we're all looking for disinflation. When you look under the hood, this is the reason why people are getting excited about this. When you look under the hood, it was auto insurance cracking. It was shelter inflation that picked up, but a lot of people picked that apart and said that that was ready to go. Goods prices basically flat. Airfares, recreation, personal services, all of the prices on those things, at least the pace of increases declined. Now the question is, let's see Act 2. What is Jay Powell going to say to actually move the markets any further, other than just say, yeah, you see that? I mean, we can't declare victory, but yeah.
In about 25 minutes, you'll get a statement, some forecasts. 30 minutes after that, a news conference with Chairman Powell. Check out the price action. Let's start with equities on the S&P 500. We are positive, big time across the board. On the S&P through 5,400 at 1 full percentage point. In the bond market, the 10-year down 14 basis points. The 2-year down by almost 15. Tom, for 6 consecutive Fed days, the 2-year has rallied, and it continues today.
It's extraordinary. And the thing that's important, the mathiness I did on the Bloomberg terminal before we started, was to see, are we still in range? And I would say we are, but on a 426 10-year, you look at Ian Lingen at BMO Capital Markets, we're about a third of the way to his nirvana. We made it in, 2-3 cups of coffee. It's really moving quickly, but we're still in range. Will Jerome Powell take us out of the range and finally break through?
Yields down, dollar weaker. Lisa, euro dollar 108.39.
And now up we have Fed Chair Jay Powell. But before that, leading up to that press conference and the release of the decision, JP Morgan's Bob Michael will be with us, and Julia Coronado of Macro Policy Perspectives. They will be taking us up to that Fed rate decision at 2 p.m. Eastern. Then we will get the decision, and we will get immediate reaction from Mohammed El-Arian of Queens College, Cambridge, KPMG's Diane Swank, and Bank of America's Michael Gapin. And finally, after the press conference, we will be breaking it all down with Kathy Jones of Charles Schwab and BlackRock's Jeff Rosenberg, and we'll be seeing if bond yields are trading around like penny stocks once again.
We can start slowly. Bob Michael of JP Morgan Asset Management with us around the table. Bob, good afternoon. It's good to see you.
Happy to be here.
What are you looking for now? It feels like the CPI report wasn't the appetizer for the main event. It feels like that was the main course this morning.
Yeah, I think there was a huge sigh of relief that came out of the Fed in Washington. I think Jay Powell is now holding all the chips. He can point to the labor market and say, hey, we're still at about 4% unemployment. That looks pretty good. We're meeting our full employment mandate. And look at inflation. It continues to come down. That glide path is intact.
Bob, I've got to ask, and I'll ask this of all of our guests today, because to me it's the arch question, particularly after Lagarde and the ECB. Are they still slaves to Greenspans measured, where once they move, they have to move and be measured and be responsible to maintain credibility? Or can they actually pull off a pre-ex post rate cut, given all the noise that's out there?
I don't think they're committed to, once they start cutting rates, they have to go in a disciplined path, either every meeting, every other meeting. I think what we learned in 2015, they cut once, and then it was another year, but well, they actually hiked, and then it was a year before they hiked again. So there's a lot of distance between Fed policy moves now. They've got a lot of tools at their disposal. We still have to remember there's the balance sheet that continues to run down.
Right.
Honestly, how excited are you for this afternoon? And I understand that you have to say you're very excited. This is going to be a tremendous decision and the most interesting news conference that we've ever seen. But, you know, kind of to the point that John was making, did the CPI report kind of take the wind out of the sails? I mean, is there anything that he can really say to move the needle other than, yeah, we're sticking with this and don't ignore us?
Well, admittedly, I'm not as excited as I was at 8:29 this morning. So for sure, when you look at the complete picture of things, it's exactly what you see in a soft landing. On some days, like last Friday, you look at the data, you can identify parts of it which look like the economy's operating at too high a pace. And then when you look at today's data, you can look through it and find things that tell you actually things are slowing down pretty quickly. When you put it all together, this is what you get in a soft landing. And I think he's best to come in, deliver the statement, answer a few questions, and then get the heck out of there.
Well, let's see if he follows your recipe. As soon as we got CPI, I got a note from Neil Dutta of Renaissance Macro. They need to get on with it. And he said, you know, they're going to get behind. And basically nothing moves in this linear way. Would you agree that the best course of action would be to even open the door to a July rate cut?
Well, that's one of the things I do want to hear from him. I assume he's going to confirm that policy is sufficiently restrictive. I assume he's going to mention that the law of long and variable lags hasn't been repealed, and they have to be vigilant to that. Would I be surprised if they threw in a rate cut in July? Today, no. Do I think they're going to do it? I think there's less than a 1 in 3 chance they do it. I think they're very much on course for September. I think it wouldn't hurt them to see a couple months more data and then make the decision then.
So in 20 minutes, as you know, Bob, all we'll be talking about is the dot plot. And it's probably the first thing Mike McKee's going to really talk about with any detail. We're trying to figure out where that median dot for 2024 comes down to. At the moment, it implies 3 cuts for this year. Does it come down to 2? Maybe even 1. What are you and the team looking for when you get the statement of economic projections?
The dot plot will be great. 2 is pretty much the expectation. It's our expectation. If it's 1 cut this year, then it tells me they actually don't look at the data and then go back and revise their dots. That once they're submitted, that's it. And if it's 3, it tells me, well, actually, they do take a peek at the data, and then they have until 2 o'clock. Maybe they'll go in and revise some of their dots.
So you're saying that it should be 3? Based on the data that we've gotten?
No, I'm saying that it should be 2, but if it's 3, it's because there's enough of the group in there that takes comfort from the slowdown. Probably they parsed through a lot of the labor market data, and they looked at the household versus establishment survey, and they're putting a little bit more weight on the household survey. So I can understand how you could have 3 dots, but I think we're going to get 2 rate cuts.
Pause, what you just said. Do you think they put more weight on the household survey? Unemployment up to 4%. I just wonder what you think that means for their forecast, because right now they've got year-end unemployment of 4%. What's that coming up to in 20 minutes?
I think it will tick up to 4.1%. We spend a lot of time looking at the household survey. What jumps out at us is over the last year, the increase in unemployed is just over 500,000, and the increase in employed is around 300,000. So there's a weakness there that's not reflected in non-farm payrolls.
So 272,000 overstates the strength of the US economy, your view?
Yes, I think it's one metric of the strength of the labor market. There are a lot of other metrics to look at. I think when you look at the quits rate, you look at a lot of the JOLT surveys, when you look at average hourly earnings and how those are coming down, there's a lot of things in there to tell you that there is some capacity being built into the labor market.
That would be quite a statement if Chairman Powell echoes that in the news conference a little bit later on this afternoon.
It would open the door to a July rate cut. That is what I think. Because
you think
basically,
so?
Yeah. Well, at least it would raise the question of just how many rate cuts they could go for if they start to say, actually, we are seeing a deterioration in the labor market at the same time that inflation is coming in.
But
rapidly.
he doesn't need to do that. He could say for the 30th consecutive month, we've got unemployment at 4% or lower. Inflation's not at our 2% target. It's coming down towards it. It's not there yet. There's no reason to do anything right now. I'm going to the beach for the summer. Let's check back in September.
You're doing that, or Chairman Powell is?
Maybe we both should do that.
Maybe we should all be doing that.
Will you join us?
I'm happy to come, Bob, so long as you're paying for the house. Bob Michael at JP Morgan Asset Management is sticking with us. That decision is 18 minutes away. That would be quite a statement if he puts more weight on that and says it explicitly in this news conference.
Well, that would give some dovish fuel to the rally that we've seen in bonds, which has been what we've seen, frankly, in the past 5 times he's spoken.
Amazing. Make it day 6 potentially. Yields are down by 14 basis points on a 2-year. Every time they meet, this 2-year just rallies. And it's happened again for a 6th consecutive meeting. Coming up very shortly, we'll catch up with Julia Coronado of Macro Policy Perspectives. Your equity market at all-time highs. This bond market absolutely ripping. Live from New York. Good afternoon.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
The Fed's not going to move.
They can hold off.
Higher rates are working to bring down inflation.
The policy is working.
It feels like immaculate disinflation.
It is immaculate disinflation.
They're going to try to sound neutral.
They'll continue to say they're data dependent and that the data is murky.
Risks are skewed toward that one cut.
2 rate cuts.
1 or 2 times.
I don't think the market really cares whether we're going to get 1, 2, or 3 this year, as long as the next move is down.
The question is going to be September or December.
They're still going to be able to cut in September.
Cut in December. September and December.
September or December.
Trying to guesstimate that first move by the Fed, it's been a losing game. We tried, we missed. Others have tried, they've missed. The Fed's tried, it's missed.
Each individual Fed commentary will be far less important than the sum of all of their parts.
We're going to have to see what they say.
15 minutes away, we'll find out what they've got to say. That Fed decision just around the corner. Equities going into it, sitting at all-time highs on the S&P 500, on the Nasdaq. Quite a rally this morning and into the afternoon. On the S&P up by more than 1 full percentage point. On the Nasdaq up by 1.4. The Russell, the small caps up by 2.6. Thank you to the Treasury market. 2-year, 10-year, 30-year. Look at this for a rally. Yields aggressively lower. We're down by double digits across the board from the 2-year out to the 30-year. TK, the 2-year down 14 to 469.
Stay on this
30.
board. This is a really important board here on the 2-year yield to see it in 14 basis points. What's important here is everybody stews on this after the shock at 8:30 is the yield has moved further lower. John, it's out 3-4 decimal points, but nevertheless, there's a small oomph into this 2 o'clock decision here with the yield market betting lower yields, higher prices.
When this dropped at 8:30 Eastern time this morning, Lisa, we both said, let's see if it sticks. It's stuck all through the day.
This is the biggest decline in 10-year Treasury yields going back to December. We are looking at basically the biggest move since the pivot that Jay Powell put out there at the
Hey guys, just a quick update here. Intraday, the QQQ obviously tried breaking out. Now the thing about this pattern that's shaping up, still a viable head and shoulders that has obviously tried triggering all day. And then when you look at this, the Qs made an attempt at trying to put in a new high of day and got rejected. So this might be our first failed lower high attempt on the Qs. And what's interesting is this is now shaping up right ahead of Powell. So markets are still extremely elevated. S&P up 1, Russell up 2.6. Russell has triggered a head and shoulders that, technically a move to 205 shouldn't be of surprise. We are seeing the SOXS firm up. I'm still holding that one on the day trade side long off the 2190, but again, looking for more because it's just been floundering in this oversold condition, trying to build a bit of a stage 1 intraday basing formation that I think is very close to breaking out, but you've just had some exceptionally strong mega cap stocks through Microsoft, NVDA, and Apple. Those three behemoths have been single-handedly lifting this market higher and higher. A couple other things that I'm noting is the fact that oil is basically trying to form a bit of an inverse head and shoulders potential pattern on the 4-hour and 1-hour chart. Oil had that horrific downward collapse earlier on in the session, and now it's trying to chug along and recapture the majority of those losses. So if oil can basically come back down to this gap, that's a problem because it just shows you that there's a sheer amount of buying force underneath the energy market, and that's typically not going to be positive for the inflationary metrics in the next CPI print. So Powell is set to, the FOMC interest rate decision is expected to occur in a couple minutes, in about 10 minutes at 2 o'clock, and then I will be live streaming the FOMC press conference. So we'll certainly keep you abreast of what is going to transpire here. Again, QQQ sitting right on that neckline. And if you break this neckline on the Qs, this new neckline, you can see that it's a potential downward shift to about 472 on the charts. So I'm just going to mark that area, 472.80-ish. Let's just say if let's just say that Powell comes out dovish and expressing cuts and pumps the market. In terms of the upside resistance that I have, the upside on the Qs, I see 474.90 as the max upside. And then if Powell comes out swinging and crushing the market, it would not surprise me to see the Qs drop below 473 to 472. If things got really nasty, you have a 50% retracement sitting at 471.50. So again, the FOMC generally, once you get an interest rate decision, most situations you see the markets pump. But often that is the first move is the wrong move. There's about a 96% chance that if the markets drop, that's a good signal to buy the dip. If the markets pop, it's a good signal to short. It's basically doing the inverse of the first move. Jake Fowler, what are you thinking for SPX? SPX sitting right now at 54.30. SPX has triggered a head and shoulders, but just like the Qs haven't. So the Qs are the leading indices. So I mean, even though the S&P has triggered, the Qs are still technically holding up okay. But looking at the SPX chart here, it's definitely fairly extended in nature. So the SPX chart has triggered a little bit of a bearish formation, but it's still technically okay. I mean, it hasn't really broken down on the NASDAQ QQQ market just yet. So at this point, you can see the SPX is fighting that flat horizontal neckline. Some traders like to draw the neckline there, but considering that you've actually have a low pivot bounce zone here, the neckline probably should be drawn roughly around like that. Obviously, the markets are in a solid uptrend. S&P 500 is blistering here into new highs. A really big negative divergence on the weekly chart of the SPX. A sizable negative divergence. But at this point, the market is definitely in a solid uptrend and looking to press their gains on anticipation of Federal Reserve cuts. Now the question is, does the Fed remain a little bit more hawkish or do they remain dovish? Again, the US dollar index taking a pretty big fall today. Market participants in the bond market are certainly pricing in a little bit more of a dovish Fed as of today, with the 2-year down about 2.95%. Yeah, that's generally what the consensus is and considering we are in a very strong uptrend, there's going to be a lot of dip buyers waiting. So I mean, just looking at things here, if we look at the structure of the SPX, I'm just going to flip to the 10-minute chart here, just so we have a more condensed view intraday. Well above our prior day high, right? Well above the prior day high. So even if you just do a simple fib retrace, you can see the SPX has pretty much retested its first Fibonacci level. The QQQ has not tested its first fib level, so a clear relative strength in the Qs. If the SPX dips, where I think we could probably see a little bit of a likelier bounce, just want to see something here. In a market dip on the SPX, I'm looking at the 618 fib level, 5403. That's where I'd consider taking a stab at a bounce trade on the markets. It may get a bounce before that, but that's kind of my risk tolerance on the long side. We are seeing the SOXS quietly sneaking up here on the chart. So your semiconductor bear ETF. Quietly trying to build on top of this little bit of a breakout zone. So we are seeing semis move up. Paul's strategy here saying we're too far away from the daily 12 EMA on the SMH and SOX. In his opinion, a pullback closer to it is where he is gambling on. So looking at that 12 EMA on the SOX. Very interesting. It's going to be interesting stuff here, guys. It's going to be really, really interesting stuff here. Again, I think the market is a little bit ahead of itself. Well, actually a lot ahead of itself. But again, the market is the market and we have to trade what's in front of us. My expectation is for a bit of a pullback. I really don't see a 0.1% decrease in inflation enough to justify the Fed coming out dovish. But previous meetings, the Fed obviously has been dovish. And I will be live streaming the Federal Reserve FOMC Jerome Powell press conference. I will be live streaming that. Okay? So just a heads up. All right, guys, here we go. 46 seconds till the rate decision. 46 seconds. They're going to rip this market higher. Mindfulness meditation, potentially. There's a strong case for that. Stock's in a significant uptrend today. So 10-year going into this at 3.15 down. Whoa! Look at that drop. Boom. Whoa, 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 whoa. Look at that. Huge decline. That's it. Buying the dip is generally the way to go, but that's a hard candle down, guys. Just be careful. Just be careful. That's a hard reaction down. Dollar got a brief spike. Yields are moving up here. Whoo! Look at that. SOX is spiking. SOX is spiking here. The QQQ, just be careful of this dip, guys. That was a hard candle down. That type of candle formation. Again, my dip level is basically a starter position at around 472.60. I'd be interested. Here comes a buy the dip. Huge buy the dip. So dollar spiked, yields initially spiked, markets are settling in. That's still a hard down candle, guys. I would be very careful about buying this dip quickly. I'm looking at a target dip of this 472.40 area. Again, we came right back to break even on our QQQ short. I'm still long 21.90 SOX. Here comes the spike down. Let's see if we get a spike back up. They are trying to save this market. Again, if you bought that dip, you're in the driver's seat. I did not get filled. I had a lower level at around this 472.59 on the Qs. I'm still holding my SOX, but that was a big decline there. We are starting to stabilize. Dixie is still seeing a little bit of buying pressure. Bitcoin spiked down there. Markets are trying to settle here. The Russell 2000. I just covered my Russell short, guys, from 206 at 205, a full dollar on the trade. I covered my Russell. Look at the spike back up. Holy, the volatility is crazy, guys. Don't get chopped up. It's even too fast for the average human to trade. The algos definitely are making and chewing and spitting people up here. So again, that buy the dip strategy would have worked already if you picked the low, but honestly, I don't even think anyone was that fast to put in a buy order, and depending on your brokerage, that would have been a crazy I'm still holding my 2190 socks. Did cover my Russell at 205. 205 even, so made $1 on the Russell trade there. Still seeing the Qs trying to press here. We're still waiting for the Fed decision at 2, but that was in some insane volatility. Yep. Now, I still think we're going to go lower here, guys. And honestly, if we start triggering this head and shoulders, remember the downside's here, 472.76. I'm going to look for a cover on my QQQ short if we hit either this 472.30, anywhere in between 472.80 and this EMA. I'll look for a cover on my Qs, but right now the equity markets are trying to trigger a head and shoulders on the QQQ. They are trying to save it though. Dixie's at 104.50, spiking a little bit higher here. 10-year yield has moved up slightly. Tesla's still remaining strong. Apple, Microsoft strong. Google, Meta took a dump. Bitcoin took a dump. Let's see if Megacap Tech wants to see any sort of sell side pressure here. That was a big dip down. SOX is trying to spike higher here in the near term. This market, it's a tough one to go long off of this area, because if you try to tick it here, they could flush it down to this head and shoulders target. So it's a tough one to try to pick long. I'm going to wait off to the side. I'm not looking at really any longs right here. Still just going to manage my SOX short. I do think that we will see lower. NVIDIA breaking down, potential inverse head and shoulders failure on NVIDIA. Microsoft, Apple still strong. Google getting bludgeoned. Meta getting bludgeoned, guys. This is crazy. Powell's going to come and dovish and pump the market to the moon. That's your expectations. Mindfulness meditation. I don't know, man. I don't know. The markets have pumped quite extraordinarily. They've just erased a lot of short interest today. A lot of short interest has been removed from Apple. A lot of short interest out of the entire market. We'll see. It's going to be interesting. This is what makes a market, right? We all have opinions. I think we're going to keep going lower today. I think the Qs are going to probably trend a bit lower, but anything can happen. I do not have a crystal ball. Wild price action here in the markets. I'm still long SOXS, guys. My target, profit target, is selling half at 22.43 just for the day trade. Still managing my position. Dixie getting a little faded. Microsoft not budging. Microsoft is not budging. Qs are trying to get another stick up. If the Russell heads back to 206, I would short it again. The IWM. If the Russell heads back to 206, I will short the IWM. I repeat, IWM at 206, I will short it again. Managing my Qs still. Still holding my QQQ. Still holding my SOX. Still holding Tesla. Come on. Let's see what the VIX is saying. VIX just kind of flat right now. Qs are right at that neckline. So again, that's a whole host of volatility designed by algos to chop people up and spit them out. Crazy range there, guys. Crazy range. Look at the volume across the board on all assets. Insane amount. NVIDIA maintaining the neckline. Bitcoin testing 69K. You still have Meta basically flat. Amazon's negative. Google flat. So Amazon, Meta, Google looking to go to the sell side pressure. Microsoft, NVIDIA, Apple still remaining beasts on the session. Guys, the head and shoulders on the Qs on the 5-minute chart has triggered. I repeat, 5-minute head and shoulders, technically speaking, has triggered. So the downside of this pattern takes us here to 472.80. I'm looking at a QQQ cover right around this EMA, this 5-minute chart, EMA 113. That's my cover zone. It's probably going to coincide with this 382 retrace on the Qs. That's where I'm looking to cover. And then the crazy thing about that is if we flush into that area, there's a potential left shoulder here, a potential large head, and we could consolidate on POW and then trigger a larger head and shoulders formation. So right now the Qs are still up 1.2, but you are seeing some sell side pressure hitting the tape. Adobe getting hit really hard. GME under pressure. Look at SOX go, guys. Trimming at pre-market low here, guys. Half the position will move stops to break even. Look at the Qs coming down. Come on. Dixie's still trying to surge here. The Dixie is still... NVIDIA losing its neckline. So NVIDIA is now losing its inverse head and shoulders neckline. Not a good sign. Not a good sign. It's a potential failed pattern on NVIDIA. Let's see if they are shaking people out for a bigger pump in the upside. But so far, the equity markets have pumped off of CPI and they're dumping now on the interest rate decision. And we still have a 2:30 Powell press conference that is going to very likely provide other ample trading opportunities. And I will be streaming that. NVIDIA breaking down. Bitcoin losing 69K. Things are looking a little bit dicey here. Qs are maintaining structure under that, over that pre-market high. The Russell's below 205 now. So the Russell's coming in a touch more. QQQ trying to stabilize. NVIDIA getting a bounce. Tesla's trying to bounce. Microsoft still strong as an ox, not moving. Apple strong as an ox, not moving. You're seeing weakness in Meta, Google, Amazon, NVIDIA taking a bit of a beating. Bitcoin dumping pretty hard here. I repeat, Bitcoin dumping pretty hard, and Coinbase hasn't even moved. Guys, I'm going to take a short on Coin. I'm going to take a short on Coinbase. I'm eyeing up that. Let me just see where we're trading at. My charts are kind of lagging. All right, guys, I'm short Coin, 260.50. 260.50. This is a 1/4 position. High risk trade, 260.50. I'm short Coinbase. Ticker COIN, 260.50. Okay, I'm short Coinbase, 260.50. I will add to the position every 50 cents higher. So next add is 261. Guys, I just took my second entry on Coin at 261. Qs are firming up here. Bitcoin trying to stay steady. QQQ retesting that neckline. Next add-on Coin is 261.50. Fed is wanting higher for longer. SOX is starting to come down pretty sharply. Again, I still like the Russell 2000 IWM above 206 for a short. Coinbase, my average is sitting at 260.75. 260.75. Next entries at 261.50. Bitcoin's still trying to hold 69K. Amazon breaking down. Google coming in. Still seeing Apple and Microsoft holding steady. All right, guys, we're now green on our Coinbase trade. We are green on Coin, still holding SOX. Let's look at Coin. Let's see if Bitcoin wants to give it up. Again, I'm short Coin. Short Coin. I'm looking for a target of pre-market high I think Coinbase has a chance to hit pre-market high, just like the Qs have. Bitcoin still holding at 69K. QQQ still underneath the neckline. You did get a 10-minute close below the neckline. We're looking for a confirmed candle breakdown. Oil coming in a touch. Nat gas trying to move up a little bit. Russell's trading at 205.14. We still have more volatility in about 18 minutes, with Jerome Powell set to give his guidance to the market. We will be live streaming the FOMC press conference, so please tune in. Hit that like button. Yeah, VIX stuck in concrete because this is a fake artificial move, right? Whatever's unfolding right now in the market, I mean, you're not really seeing the VIX spike up. But the markets haven't really fallen. Alright guys, so we are still seeing the Qs trying to stabilize. Coinbase falling, guys. Look at this. Let's go coin. Let's go coin. Dump coin, guys. Dump coin. Let's go. Come on. Dixie's spiking here, guys. The dollar's wanting to press higher. So the Dixie just made a little bit of a new intraday high off of this rate decision spike. So that's telling me that, you know what? When the dollar had that initial spike higher, it pulled back. Now it's pressing even more. So that likely means if we get a new high past this candle, the equity market should come under some more pressure. Should. Again, we're short coin. We still have a short on the Qs. We have a long on SOXS. Tesla's still holding short, but been getting my face pummeled in on the Tesla short. QQQ still coming in. Amazon looking weak. Google coming down. Here comes coin, guys. Come on, coin. Come on, coin. Bring it down. Chop it down. Chop it down. Again, Bitcoin right now still holding 2.71% gain, but it did have a nice downward candle. Qs are still stabilizing here. So going into Powell, we have now triggered a head and shoulders on the 5-minute chart, but are they using that pattern to rope in people on the bear side before they give it a pump or a facelift on Powell? Time will tell, right? Time will tell. At the moment, we are seeing NVDA stabilizing, Google, Amazon still lagging, QQQ trying to firm up here. The Qs are trying to firm up. Going into the meeting, the 10-year yield was down about 3.11%. It's now only down 2.6%. Bitcoin's trying to recover here. Coinbase starting to move up here in fashion. Markets are looking like they're trying to push a little bit more. Qs are ripping here. Qs are trying to rip. Guys, I just added to my coin short 261.60. And my final entry is going to be at a new high of day. Around a 262.11 Pierce. Bitcoin's catching another bid. Qs are firming up here. Tesla's trying to push up. Bitcoin's triggered a mini head and shoulders on the 10-minute chart itself, which takes a downward shift and move to roughly about 68.6. But Coinbase and the Qs are trying to push up here. Russell's going at 205.55. SOX coming lower. Does appear they're trying to firm things up again. They are trying to firm things up here. Mindfulness meditation saying pump it. It could potentially be. It could potentially be. We're at a tricky point here, right? We're at a very, very sticky and tricky point. The neckline of the Qs is being tested at the moment. Again, if we hit 262.11 or higher on coin, I will look to add my final entry on the Coinbase short. QQQ seeing a nice push here. Bitcoin's trying to retest its neckline. Qs are above its neckline. They are trying to push this QQQ market higher. Everything is catching a nice little stick. Green shoots are appearing. Dixie's softening. Markets are trying to get back above that neckline on the Qs. Apple just made a new high of day, so that's bullish for the Qs. So the head and shoulders has been negated thus far. Qs are still looking quite firm. Coinbase is trying to push up. Alright guys, I just took my final entry there on coin. Final entry on coin 262.11. My average is now 261.56. Qs are still ripping here, guys. Bitcoin's trying to push. So really it turns out that as of now, the interest rate decision is a whole bunch of nothing. Down move, up move, basically back to where we started. So clearly an event-driven situation that is trying to chop people's contracts up. Alright, we're back in the green on coin. Seeing the Qs coming down. Amazon new low, guys. So Amazon's making a little bit of a new low in this interest rate decision period. Meta coming in, Google coming in, Apple, Tesla still strong. Dixie's still holding the majority of its pump. Coinbase coming in a touch more. We're green. SOX is trying to catch a nice little bid here. NVIDIA's seeing some sellers off the 125 area. I'm short coin. I am short coin off of 261.56. And I'm long SOXS at 21.90. And I'm short the Qs, but I've been short the Qs all day and that one's been ripping my face off. Just a little bit. I mean, I had a brief period to cover here. I was not fast enough to cover at the break even, but that's okay. That is totally okay. And I mean, we've seen scenarios too where they pump it up on CPI FOMC day, and then the very next day they could easily gap this market down. I have seen that, or gap it up. Time will tell. Yeah, Chris saying they're not cutting at all this year. This is so stupid how these games are played, more like sickening. Yeah, it's a lot of market manipulation, right? When you have trillions of dollars flowing through the markets, people are, money talks, right? Bullshit walks. That's the old saying. And people are trying to make money, right? So I definitely, think that there's a likely chance that they won't cut as well. I'm in that camp, especially if oil starts pressing here in the next couple weeks and breaks out of this falling wedge pattern. That will change inflation expectations. And I mean, you can get all pissed about the data and whatnot, about how they calculate CPI. We all know their CPI metrics are bullshit. When you look at your utility bills, grocery bills, housing costs, we all know the inflationary metrics are bullshit, but that's how the market moves, right? It moves off of these calculations, and that's why we just have to trade what's in front of us. But right now, mega cap tech, Apple new high of day, ripping. Meta weak, Google weak, Amazon struggling. NVIDIA is trying to firm up. QQQ just stuck pretty much before the interest rate decision where we are. Bitcoin still at 69.3. A little bit of a bounce on Bitcoin. Meta definitely putting in a bit of a bear flag. Microsoft now peeling away from the highs, guys. So Microsoft's starting to come in. Let's see if that money rotates out of the Qs. Amazon's struggling. I mean, Amazon's down 0.89% when the Qs are ferociously strong. Google also negative. Meta also negative. So again, you are seeing some weakness in this tape today. It's not all sunshine and rainbows with mega cap tech. Although you have outperformance in Apple, Microsoft, and NVIDIA, those companies' valuations are getting a bit saturated here in my opinion. QQQ trying to come back lower. Coinbase trying to push higher despite Bitcoin seeing a little bit of sell side pressure. Oil trading at 78.53. Six minutes till Jerome Powell. I will be doing the live stream, guys. I repeat, I will be conducting the live stream for Powell. I have the press conference pretty much just queued up here, ready to go, with Jerome Powell set to commence his speech very, very shortly. Please hit that like button, subscribe, and we'll see if we can catch some more trades here. Coinbase still pushing here. Despite Bitcoin not doing much. QQQ consolidating right on that neckline. Trader 586, this could be an island top in progress. Could be hours of a few days yet. Okay, or a few days. Bitcoin starting to sell off a little bit more. Amazon continuing to grind lower. Microsoft coming in from the 439 level. Tesla seeing a minor touch of selling off 179.80 area. Nat Gas retesting its hourly chart neckline. WTI crude seeing some minor selling. Russell 2000 still weak. The Russell's actually not recaptured most of its dip. So the IWM still putting in a little bit of a bear flag now on the 5-minute chart. The IWM did hit that downside target of 205 and then some. Nat Gas starting to rip here. Just give me 1 second, guys. All right, guys, we're seeing the Qs starting to rip here. Qs are definitely starting to rip. QQQ ripping here, guys. Qs are starting to rip. What's interesting is Bitcoin's coming down hard, but Coinbase is still ripping here, guys. Bitcoin coming down hard right now, but Coinbase is still ripping because the Qs are strong. Tesla making a new high of day, Apple at the highs, Google reversing. Some strong trends occurring here in the Qs. We have 1 minute till the presser here. And I will be queuing you in to the live stream once it starts. I'm still maintaining my coin short because I'm seeing Bitcoin coming under pressure here. So we'll see what happens. QQQ trying to go for the new high of day here. Powell's comments does matter. In the very short term, he can influence markets in a very big way. Very big way. SOXL moving higher, yep. You know, that election thesis is not a guarantee. We have seen collapses before elections, during elections, after elections. It's not a guarantee. Not a guarantee. I would not base just your trading on that metric alone. All right, Powell's coming out. I'm going to cue you guys in.
Of the American people. Our economy has made considerable progress toward both goals over the past 2 years. The labor market has come into better balance with continued strong job gains and a low unemployment rate. Inflation has eased substantially from a peak of 7% to 2.7%, but is still too high. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. I'll have more to say about monetary policy after briefly reviewing economic.
Big decline coming in.
Indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.3% in the first quarter. Private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, grew at 2.8% in the first quarter, nearly as strong.
We're now green on coin. Let's see if we can get some more action.
Growth of consumer spending has slowed from last year's robust pace.
Bitcoin dumping.
Solid. And investment in equipment and intangibles has picked up from its...
Let's go, guys. Coinbase is dumping here.
Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2.0% over the next 2 years. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 218,000 jobs per month in April and May, a pace that is still strong, but a bit below that seen in the first quarter. The unemployment rate ticked up, but remains low at 4%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years.
Seeing a Dixie spike, guys. Dixie's moving higher.
Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market have returned to about where they stood on the eve of the pandemic, relatively tight but not overheated. FOMC participants expect labor market strength to continue. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.2% at the end of next year. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in April. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The Consumer Price Index, which came out this morning and tends to run higher than the PCE price index, rose 3.3% over the 12 months ending in May, and the core CPI rose 3.4%. The inflation data received earlier this year were higher than expected, though more recent monthly readings have eased somewhat. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.6% this year, 2.3% next year, and 2.0% in 2026. My colleagues and I are acutely aware that high inflation...
Guys, Microsoft's starting to break down. I think they're going to take this market down. Seeing some weakness creeping back into Microsoft, mega cap tech. Apple still strong. Dixie spiking.
Guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As labor market tightness has eased and inflation has declined over the past year, the risks to achieving our employment and inflation goals have moved.
Big breakdown in the Qs.
The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence.
Our coin trade's looking juicy. Our SOXS trade is looking beautiful. Come on, chop the Qs down.
That greater confidence. The most recent inflation readings have been more favorable than earlier in the year, however, and there has been modest further progress toward our inflation objective. We'll need to see more good data to bolster our confidence that inflation is moving sustainably toward 2%. We know that
the Dixie's spiking here, guys, 104.58.
Could result in a reversal of the progress that we've seen on inflation. At the same time, reducing policy...
The market does look heavy. Bitcoin's coming down. That's looking heavy.
Economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook.
Take a look at our SOX long, guys. It's printing. 22.43 is my first trim on SOX. SOXS, still holding coin, Tesla, Qs. Come on down.
Appropriate path for the federal funds rate. based on what each participant...
This dot plot is pretty important, but it can change from meeting to meeting. Markets are spiking off of it.
...projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.1% at the end of 2025, and 3.1% at the end of 2026. But these projections are not a committee plan or any kind of a decision. As the economy evolves, assessments of the appropriate...
Huge spike back up.
...adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we're prepared to maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we're prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We'll continue to make our decisions meeting by meeting, based on the totality of the data and its implications for the outlook and the balance of risks. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you, Mr. Chairman. Steve Leisman, CNBC. Just wondering if you could walk me through the committee's average inflation forecast. Core PCE is now forecast to be 2.8% by the year end. It's already 2.75, and after today's number, there were several forecasts on the street that it would be 2.6 at the end of this month. Does that tell you that the average official expects no further progress in inflation, and in fact that it's going to get worse? And if you have this wrong, doesn't it mean that you could have wrong the outlook for rates there?
Yeah, so what's going on there is that we had very low readings in the second half of last year, June through December, really. And we're now lapping those. So as you go through the 12-month window, a very low reading drops out and a new reading comes in. The new reading gets added to the 12-month window. So it's just a slight element of conservatism that we're assuming a certain level of incoming.
Markets trying to break out here again. Apple new high of day. Microsoft curling up.
Not great numbers. And if you put that on top of where we are now, you get a very slight increase in the 12-month reading. Now, do we have high confidence that that's right? No, it's just a kind of conservative way for forecasting things. If we were to get more readings like today's reading, then of course that wouldn't be the case. So it's just a forecasting device. I think. Let me say that we welcome today's reading and hope for more like that.
But if it comes in, just to follow up, it comes in the way you forecast it, it would seem strange for you to be cutting rates at all in context of a rising core PCE. Thank you.
Yeah, no, I mean, I think what we said is that we don't think it'll be appropriate to reduce rates and begin to loosen policy until we have more confidence that inflation is moving back down to 2% on a sustainable basis. And that's the test we've applied. I don't know that this rules that in or out. I mean, really, it's a forecast, a fairly conservative forecast, month by month, that would lead to slightly higher 12 months rates by the end of the year. If we get, better ratings than that, then you will see that come down or remain the same. If you're at 2.6, 2.7, that's a really good place to be.
Nick Temeros of the Wall Street Journal. Chair Powell, if I look at the rate projections, I see 15 of the 19 that are anticipating either one or two cuts this year, fairly evenly split between the two. And so I wonder if you could explain a little bit more the nuances or the differences there. Would 2 or 3 more inflation readings, like the one that we saw this morning, make a September interest rate cut possible?
So as far as the SEP part of that is concerned, as you know, I talk to all of the other participants on the FOMC every cycle, and we talk about their summary of economic projections and the their dot plot and everything. And what I hear and see is that people are looking at a range of plausible outcomes, and in many cases,
Definitely a nothing burger so far. Trend does remain up, but still extended and elevated.
to write down the most likely one, so they do.
The thing about the trend, though, is it's not all of the stock market participating. It's a lot of selling is occurring under the hood. It's just Apple, Microsoft, NVIDIA, Tesla, some of your mega cap tech just lifting things. I mean, there's still some weakness in the market. Names like Adobe, Intel, been faded sharply. You know, you still have weakness in Amazon, Meta.
To a particular rate path. It's actually just their forecast, and it's a combination of their forecast and their own reaction function. But again, everyone would say that this is very data dependent, and I don't hold it with high confidence. And I think if you're looking for and don't really think that they're not trying to send a strong signal that this is what I think is the right thing.
Looking a little bit heavier here.
To data. In terms of future meetings, we haven't. We don't make decisions about future meetings until we get there. I think there's
a really big divergence right now between the Qs and the S&P. The S&P is actually breaking down here because there's a lot of selling under the hood, testing pre-market high on the S&P.
I'm not going to be specific about how many because, really it's going to be not just the inflation readings, it's going to be the totality of the data. What's happening in the labor market, what's happening with the balance of risks, what's happening with the forecast, what's happening with growth. You look at all of that and you ask, are we confident, have we reached an appropriate level of confidence that inflation is moving down sustainably to 2%? Or alternatively, do we see really unexpected signs of weakness in the labor market that would call for a response? Which is another thing that could happen. But again, we don't see that. And we see today's report as progress and as building confidence, but we don't see ourselves as having the confidence that would warrant beginning to loosen policy at this time.
And if I could quickly follow.
What's interesting is the Dixie's quietly been moving up since he's been talking.
Interest rate projections.
Look at the breakdown. Here we go on coin, guys. I'm looking for a cover around 257.50 on coin.
But it does happen. It just is, data came, I think it happened a few meetings ago. So when that happens, when there's an important data print during the meeting, first day or second day, what we do is we make sure people remember that they have the ability to update. We tell them how to do that. And some people do, some people don't. Most people don't. And I'm not going to get into the specifics, but you have the ability to do that. So that what's in the SEP actually does reflect the data that we got today.
Here we go, guys. I think we might break down. The market's it's looking heavy. We've tried an attempt at breaking out. Coin's coming down. Bitcoin looking heavy.
First level translation.
Dixie made a new high since we've started this Fed rate and FOMC press conference. Dixie just made a 104.60 tap, pressing higher here. Coin's coming in. Bitcoin's looking heavy. Come on. Let's see if they can.
Hi, Chair Powell, Janelle Marte from Bloomberg. As you noted, the labor market is now in many ways back to where it was before the pandemic. I wondered if you could comment on how officials are viewing that. So do you think that there still needs to be more cooling in the labor market to bring inflation all the way down to 2%? Or is there any sense that maybe the labor market is more vulnerable now to higher rates now that many of those imbalances have eased?
Sure. So by so many measures, the labor market was kind of overheated 2 years ago, and we've seen it gradually move back into much better balance between supply and demand. So what have we seen? We've seen labor force supply come up quite a bit through immigration and through recovering participation. That's ongoing.
Bitcoin losing 69K again.
Is in prime age labor force. In terms of on the demand side, we've seen quits moving down. We've seen job openings moving down. We've seen wage increases moving from very, very high levels a couple of years ago back down to more sustainable levels. We have seen unemployment creep up now 0.6 over the course of a year or so, very, very gradually. So you put all that together, what you have is still low unemployment, still 4% unemployment, historically low. But it's moved up a little bit, it's softened a bit, and that's an important statistic. But more than that, you've got strong job creation. You have payroll jobs still coming in strong, even though there's an argument that they may be a bit overstated, but still, they're strong. So that's what we see. We watch the labor market, of course.
Guys, the Russell's breaking down here. It's right back down to the lows on the session. The Russell is near the lows on the session. That's not a good sign for risk.
Carefully for signs of something more than that, but we really don't see that.
As a quick follow-up, the surveys that make up the jobs report are showing different tales. There's been some divergence, especially we saw in the last report that we got on Friday. So how do you interpret that, and how does it change your view on the labor market?
So sometimes you can't reconcile the differences. You just have to look at it and try to understand. And that's why it always makes sense to look at a series, in 3, 6, and 12 months of things rather than just one report. But you're right to point to the last report where there were job losses in the household survey, job gains, big job gains in the establishment survey. So, we're left with ambiguous results, and we have to deal with that uncertainty around data. Nonetheless, the overall picture is one of a strong and gradually cooling, gradually rebalancing labor market. Job openings, while they've come way down, are still, greater than the number of unemployed people. The jobs workers gap is still a significantly positive number, greater than it was before the pandemic. So overall, we're looking at what is still a very strong labor market, but not the superheated labor market of 2 years ago, or even 1 year ago.
Thanks, Chair Powell. Neil Irwin with Axios.
Guys, Bitcoin's still selling off new lows in this FOMC meeting. Coinbase going lower. We're in the money. Manage this trade. If you're looking to trim, I'm not here. I'm waiting for more price action, lower price action.
On what changed in attitudes on the committee over the last 3 months to see a much shallower path of rate cuts this year?
Yeah, the big thing that changed was the inflation forecast. So the inflation forecast moved up several tenths for the end of the year, and as I mentioned earlier in the, what did we take away from this?
Guys, I just trimmed half of my coin moving stop to break even. Beautiful little trade there.
And what we took away from that was that it's probably going to take longer to get the confidence that we need to begin to loosen policy. So the sense of that is that rate cuts that might have taken place this year take place next year. There are fewer rate cuts in the median this year, but there's one more next year. So you really, if you look at year-end 2025 and 26, you're almost exactly where you would have been. Just it's moved later because of that progress. Now you get different data today. So we'll have to see where the data light the way. The economy has repeatedly surprised forecasters.
Keep your eye on SOXS. It's tapping my target of 22.43 around that area. It did briefly touch pre-market low, which was my trim target, but considering, I think I'm going to hold SOXS day trade a little bit longer here. Still holding coin, Qs, SOXS. Looking like it wants to break out here. Pre-market low is my next target.
The long-run interest rate forecast moved up a bit. I wonder if we should read that as a sign that you think that policy is not sort of as restrictive as we previously expected. How should we interpret what that means about how the committee views its current policy setting?
So two things about that. One is this. You're right, it did move up, but I want to remember to point out that long-run neutral rate of interest is a long-run concept. It really is a theoretical concept, can't be directly observed, and what it is the interest rate that would hold the economy at equilibrium, maximum employment, and price stability, potentially years in the future where there are no shocks. So it's a little bit, it's not something we observe today. Today we've got a very specific economy with all kinds of shocks we're still getting over from the pandemic. So it's I don't think that the concept of R-star, it's a very important concept in economics and in what we do, but honestly, it doesn't really get you where you need to be to think about what appropriate policy is in the near term. But back to your original question, people have been gradually writing it up because I just think people are coming to the view that rates are less likely to go down to their pre-pandemic levels, which were very low by recent history measures. Now we can't really know that. That's an interesting dispute and discussion to have now. But ultimately, we think that things like the neutral rate are driven by longer run, slow-moving forces.
Guys, profit target hit on SOX. I just trimmed half, moving stop to break even. Nice little trade on SOXS.
Experiencing a series of persistent but ultimately temporary shocks. That's been the debate, and we can't know. But in the meantime, we're making policy with the economy that we have, with the distortions that we have. And I also, to your other point, I think it is the case that as time has gone by, the question of how restrictive is policy has become one that everyone's asking, and we're asking it too. And my answer.
Market's breaking down here, guys. S&P, Russell breaking below pre-market highs. QQQ being defended there.
I think for the reasons I talked about at the last press conference and other places, I think the evidence is pretty clear that policy is restrictive and is having the effects that we would hope for.
We won't hit 27 today, but SOX could definitely try to hit 30 bucks.
Tipping to one cut this year and acknowledging further progress on inflation as kind of a mark to market on the level of restrictiveness that you need, that you in fact have concluded that you weren't quite there yet?
I'd be reluctant to try to draw that conclusion. I think this is about, looking at the incoming data and asking how much progress are we making on inflation and how is the rest of the economy doing? Is the labor market still...
Guys, I'm getting ready to cover my QQQ short. If we flush into this EMA, 472.75, it's an upsloping moving average, so right around there I'll take my common shares and cover them. Still holding my SOX, still holding Coin and Tesla. Coin is just printing for us. SOX, we did extremely well.
Today's thing, and we think, well, that's a good reading, and we hope we get more like that. And in the meantime, we're asking, is our policy stance about right? And we think yes, it's about right. We're prepared to adjust it as appropriate, but we think we're getting the things that we would want to get, broadly speaking, and that's why we've been at this policy right now for almost a year.
So just to follow up on that, I think one curious thing here is you've got now this restrictive policy in place, and virtually
Bitcoin continuing to fall
all of this year. You've got growth that stays above long-run potential throughout the forecast period, unemployment that never goes above the long-run estimate, right, of 4.2. So this isn't a story of slack improving inflation. So where's the improvement in inflation coming from that it's going to pick up pace so much in 2025?
Well, it's been coming. Where's it been coming from? We'll start with that. Clearly, a lot of some of what we've been getting is just the reversal of the unwinding of the pandemic-related distortions to both supply and demand, and that is complemented by and amplified, supported by restrictive monetary policy. So those two things have been working together. We've also had a very positive supply shock on the labor side, and also you get a positive supply shock when the supply conditions unwind and return to normal. So you've had above trend potential growth and high growth, and yet you've had the benefit of inflation coming down, really fast actually last year, and we'll see what the rest of this year brings. So these dynamics can continue as long as they continue. Ultimately, the question is are you down to demand? And we don't know that though. We're look at today's report. If we see more like that, we can't know what the future holds, but in the meantime, we've made pretty good progress on inflation with our current stance.
Mike. Michael McKee from Bloomberg Radio and Television. The base case of the committee seems to be that there is going to be at least one rate cut this year, but your growth forecast doesn't see any slowdown in the rest of the year, nor does the unemployment forecast see any significant weakening of the labor market. And your inflation forecasts basically average out to no change. So if at the end of the year there is no change from conditions now, why would you anticipate cutting rates? What would be the point for a rate cut?
Well, we think policy is restrictive, and we think ultimately that if you just set policy at a restrictive level, eventually you will see real weakening in the economy. So that's always been the thought, is that, you know, since we raised rates this far, we've always been pointing to cuts at a certain point, not to eliminate the possibility of hikes, but, you know, no one has that as their base case. So no one on the committee does. But so that's you know, that's how we think about it, and that's what we've been getting. That's what we've been getting is good progress on inflation, with growth at a good level, and with a strong labor market. Now, ultimately, we think rates will have to come down to continue to support that, but so far they haven't had to, and you know, that's why we're watching so carefully for signs of weakness. We don't really see that. We kind of see what we wanted to see, which was gradual cooling in demand, gradual rebalancing in the labor market, while we're continuing to make progress on inflation. So I mean, we're getting good results here.
Well, to follow up, is there any kind of concern for the housing industry or financial stability, banks, in leaving rates where they are for too long at this point?
On housing, you know, the housing situation is a complicated one, and you can see that's a place where rates are really having a significant effect. I mean, ultimately, the best thing we can do for the housing market is to bring inflation down, so that we can bring rates down, so that the housing market can continue to normalize. There will still be a national housing shortage, as there was before the pandemic. There will still be one, but the distortions that we see now with lock-ins and things like that, you know, low mortgages. In terms of banks, the banking system has been, you know, solid, strong, well-capitalized, lending. You know, we've seen good performance by the banks. We had the turmoil early last year, but, you know, banks have been focusing on bringing up their liquidity, bringing up their capital, and having a risk management plans in place. So the banking system, you know, seems to be in good shape.
Thanks. Chris Rugaber at Associated Press. I was wondering if we can, on inflation, if you can tell us a little more about where you see inflationary pressure in the economy. You mentioned labor markets coming into better balance, and inflation expectations appear to be well anchored. You're seeing, you know, anecdotal stories of the large chains like Walmart and Target are announcing price cuts. McDonald's announcing a $5 meal deal. So, you know, people may still be unhappy about prices at the grocery store, but it doesn't seem like there's a lot of inflationary pressure left in this economy. I wonder if you could tell us more about it.
I think it's true that inflationary pressures have come down, but we're still getting high inflation readings. So, you know, and I think you can see it in various places. You know, in some parts of non-housing services, you see elevated inflation still, and that's probably to do with. It could be to do with wages. Goods prices have kind of fluctuated. There's been a surprising increase in import prices on goods, which is kind of hard to understand, and you know, we've taken some signal from that. But you know, and of course, housing services, you're continuing to see high readings there. To some extent, that's you know, catch-up inflation from earlier pressures. But I mean, overall, you're right. Inflationary pressures have come down. As I mentioned, the labor market has come into better balance. Wages are still running, you know, I would say, above a sustainable path, which would be that of trend inflation and trend productivity. You're still seeing wage increases moving above that. We haven't thought of wages as being the principal, you know, cause of inflation, but at the same time, getting back to 2% inflation is likely to require return to a more sustainable level, which is somewhat below the current level of increases in the aggregate.
Rachel.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. There's obviously a lot of focus on how many cuts could be expected this year, but can you give us a sense of what one cut by the end of the year would actually do to the economy, what you think would be a meaningful difference if there was a cut by the end of the year, or even two?
I think if you look back in 5 or 10 years, and try to pull out the significance to the U.S. economy of one 25 basis point rate cut, you'd have quite a job on your hands. So that's not how we look at it. You know, really the whole rate path matters, and I do continue to think that when we do start to loosen policy, that will show up in a significant loosening in financial markets.
QQQ trying to go for a new high of day.
What it prices in, I have no way of saying. We're not at that stage, so I don't know what we'll be thinking about at that time. But it's a consequential decision for the economy, and you want to get it right. And fortunately, we have a strong economy, and we have the ability to approach this question carefully. And we will approach it carefully while we're very much keeping an eye on downside economic risks should they emerge.
And you've been talking about this clear sense that it's just going to take longer to have the confidence that's needed for rate cuts. Is there something about what happened in the first couple of months of the year that you're seeing differently now with more time or hindsight? Do you still characterize it as expected bumpiness or something more lasting that is affecting your policy for the rest of the year?
We you always want to avoid the tendency to dismiss the parts of inflation that we don't like and just make it go away. But we had a quarter where inflation was running higher, and yes, I could stand here and say it's stuff we shouldn't have taken signal from.
Yep, ARM almost at all-time high. ARM almost at all-time high.
And so if you have a quarter where it's higher, we tried not to take signal from the first couple of months, but we got a third month and we said, okay, the signal we're taking is that we think it's going to take longer to get confidence that inflation is moving sustainably down 2%. That's what we said. I think that was the right thing to do. I still think that's the right thing to do. Now we have today's inflation reading, which is very different, very much more positive. We're going to have to see what the trend is, what's going to be the data going forward. We're looking for something that gives us confidence that inflation is moving sustainably down to 2%. And readings like today's, that's a step in the right direction. But one reading isn't. It's only one reading. You don't want to be too motivated by any single data point.
Jolene. Hi, Chair Powell. Thank you for taking our questions. I'm Jolene Kent with CBS News. What's your message to Americans who are seeing encouraging economic data but don't feel good about this economy?
I don't think anyone knows, has a definitive answer why people are not as happy about the economy as they might be. And we don't tell people how they should think or feel about the economy. That's not our job. People experience what they experience. All I can tell you is what the data show, which is we've got an economy that's growing at a solid pace. We've got a very strong labor market with unemployment at 4%. It's been a long time since we've had a long stretch of time with unemployment at or below 4%, very long time. We had a period of high inflation. Inflation has come down really significantly, and we're doing everything we can to bring that inflationary episode fully to a halt and fully restore price stability. We're confident that we'll get there. And in the meantime, it's going to be painful for people, but the ultimate pain would be a period of long period of high inflation. It is people who, lower income people who are at the margins of the economy who have the worst experience, who experience the most pain from inflation. So, it's for those people, for all Americans, but particularly for those people that we're doing everything we can to bring inflation back down.
Big level for the Qs, hitting double top. Either we break out or get harshly rejected back down to the lows. And likely they could push us back down to pre-market high here if this turns into a double top rejection. You don't want to lose this little trend line here again on the Qs. This needs to be defended here. Again, I still have an upside target of 475.90 as the measured move. But definitely extended.
The 2%. And when we are, then we can look at loosening policy. So,
still observing the Dixie holding the majority of its gains from this rally. Yields have also moved up.
Whole economy to all Americans for a long period of time. We had that period for a very long time. We very much want to get back to a place where people can not think about inflation. It's just not a concern in the everyday economic decisions that they make. We were there for a long time, and our goal is to get back to that place. And we've made good progress, and we're in the phase now of just sticking with it until we get it done.
Claire.
Claire Jones, Financial Times. Just drawing on the change in the statement on there being modest further progress on inflation. Halfway, through the year and after today's CPI release, what have you and other committee members found that has been particularly encouraging to you? And just in terms of the conservatism, how much of that is about stickiness in shelter inflation in particular? Thank you.
So encouraging has been that growth, the growth clearly that we had last year, particularly the second half of last year, and we continue to see still strong growth, or solid growth this year. That's been very encouraging.
Microsoft new high day.
There was a real concern about, very much slowing growth and a recession. Many forecasters had that, and that's not what happened. Instead, the U.S. is anyway, and it's in sharp distinction with many other advanced economies around the world. So that's been encouraging. I would say that today's inflation report is encouraging, but it comes after, several your reports that were not so encouraging. You ask about. Your second question was really about shelter inflation. So I think if you go back a couple of years, we know that there are renters, and then there are people who own their houses, and we have OER, which is owner's equivalent rent. And so when market-based rents go up sharply, as they did at the beginning of when the economy reopened, they really went up sharply. Those play into rollover rents much more slowly for existing tenants than they do for new tenants, and so we found now that there are big lags. So there's sort of a bulge of high past increases in market rents that has to get worked off, and that may take several years. Nonetheless, as long as market rents are going up at relatively low levels, and they still are. This is just going to happen. It's just going to happen more slowly than we thought. We also do sort of this thing where we impute rental value to owned homes, and that's many countries around the world do that. Some do it differently than us. It's something that the price experts have regularly looked at. It is not something that we're the only country that does. And it's not something we're looking at changing or would look at changing, anytime soon. But it's true. It's one of the very hardest things in inflation and in prices is how to think about, the services that someone is getting by living in a home that they could rent, but they're actually living in it. And some countries choose to just ignore that. But that's not how we do inflation here. We do it the way we do it, and we've been very transparent about it.
Yeah, Microsoft is absolutely flying here. Apple trying to put in a new high a day. QQQ still trading at double top, but trying to test a breakout. Looks like it probably will do so here.
Edward Lawrence with Fox Business. Thank you for taking the question, Chair Powell. So I want to go back to jobs and the consumer. The last jobs report showed that over the past year, 630.
The only concerning thing is that the Dixie keeps moving higher and higher here, not really fading. So the markets are pushing higher. Dixie's also pushing higher. Yields are also pushing.
Pressure points will signal to you that the slowing economy could maybe break companies in terms of hiring or break the consumer in terms of spending?
So, we monitor all the things you mentioned and more. What we're seeing is basically spending was going up faster than disposable income during big parts of last year rather. And so what that you'd expect to see is people spending more on their credit cards. That has been happening. Credit card balances have been going up. Credit card defaults have been going up. They're not at high levels. Remember that after the pandemic, people were cooped up. They couldn't spend money. They couldn't go out to spend money. They could spend money from home. But households were in very, very strong, historically strong financial shape. They've now worked off a lot of that. So we're watching that carefully. And what do we see? That's what we see. We see the same data that everybody else sees, but you've still got household sector that's in pretty good shape. But nonetheless, it's not in the kind of shape it was in a year or two ago, and we're carefully watching that.
So how close then are we to that point where the consumer can't continue to spend as it's spending, or companies can't hire like they're hiring?
Consumer spending is still growing. It's not growing at the pace it was growing at a year or so ago, but it's still It's still growing solidly. And by the way, other parts of the economy are picking up. Spending on equipment and intangibles has picked up quite a bit in the wake of all the construction that we saw of new tech plants. So overall, the economy is exhibiting solid growth, and something around 2%, which is a good pace of growth for the U.S. economy. But you're right, though. We do see the same thing other people see, which is increasing financial pressures on more lower income people, and the best thing we can do is to foster a very strong jobs economy, which we think we have done, ultimately to get inflation under control, because those people experience inflation, very directly, very painfully.
Take care, Paul. Take care. Yeah, I'll be swinging my socks regardless of what happens here. Holding a day trade and swing, still green on the day trade.
Victoria Guida with Politico. You've mentioned that an unexpected weakening in the labor market would bring rate cuts sooner. And I was just wondering, can you talk a little bit about what that would look like? Is it more of like a quicker pace of people losing jobs? Is it more the level of the unemployment rate if it were to start to go above 4.2 or something like that? How are you thinking about what you're looking for to see the job market unexpectedly weaken? When I say unexpectedly, the first thing is more than kind of is in our forecast or in common forecasts. So something more than that. But we'll be looking at everything. The labor market, has the ability, has the tendency sometimes to move to weaken quickly. So waiting for that to happen is not what we're doing. We're watching very carefully. We're looking at the balance of risks. I always point out the balance of risks. So. And also the fact that we look at all of the whole situation. So, a decision to begin to, loosen policy could have several reasons associated with it at a given time. But I would just tell we monitor all the labor market data, and if we saw troubling weakening more than expected, then that would be something we'd consider responding to. But we look at the broader context of what's going on too. So something like negative payroll numbers would be.
I'm not going to. I can think of things that many things would make it on that list, but I don't think I'll utter them here.
Thank you, Chair Powell. Simon Rabinovich with The Economist. May I ask, you mentioned with the slightly higher PC readings earlier this year that it wasn't 1 or 2 months, but 3 months that tipped you to be a bit more cautious in the rate outlook. Should we take from that it looks like May will be quite good for PC as it was for CPI? Does that imply that kind of 2 more good months would reinstill the confidence that rate cuts could be coming sooner than you currently project?
I don't actually have that kind of mechanical thing in my thinking. I get that, as many good ones as we had bad ones, but no, it's not like that. It's going to be the totality of the data. The labor market data.
Google's absolutely flying here. Microsoft flying. Apple trying to put in a new high of day. QQQ's trying to break here.
2%. And I don't want to try to give you specific numbers of things because that points to dates, and I just don't think we're not at a point of being able to do that.
Kosuke.
Thank you for doing this. I'm Kosuke Takami with Nikkei. I would like to know about the impact of stronger dollar on U.S. economic growth and prices. And I have no doubt that the market should determine the exchange rate, but Japan and some emerging markets are suffering from the strong dollar. So I want to know if it is having a positive impact on U.S. economy in total. Thank you.
So we don't. Actually, it's our finance ministry, the Treasury Department, that has a responsibility for thinking about and if it sees fit, doing things about the level of the dollar. So for us, it's just another financial variable. And you're right, the dollar has exhibited some strength over the course of the last year or so because the U.S. economy is very strong. We don't think of it as benefiting or hurting the U.S. We don't manage the level of the dollar. That's not our job. It's not. And for our economy, what we're trying to foster is maximum employment and price stability. And we feel like we've made good progress on both of those goals over the course of the past year.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you would cut rates before inflation falls to 2%. You're forecasting inflation to end the year at 2.8% on core PCE, or at 2.8%, of course, on core PCE. Right now, you said the inflation forecast is conservative and that if you got 2.6 to 2.7 on PCE, that would be a good place to be. You also indicated the job market has mostly normalized. So why not cut rates this summer just once? You're well above neutral, to try to preserve the soft landing rather than risking waiting too long in the quest for confidence for inflation.
You know, so we're well aware of the two-sided risks here. Let me just say, we understand that if we wait too long, that could come at the cost of economic activity, of employment, of the expansion. We understand that if we move too quickly, we could end up undoing a lot of the good that we've done and have to then start over, and it could be very disruptive. So we're extremely aware of both of those risks and just basically trying to manage them. And what we said is that we don't think it'll be appropriate to begin to loosen policy until we're more confident that inflation is moving down to 2% over time on a sustainable basis. That's kind of been our test. Or there's another test, which is an unexpected deterioration in labor market conditions. So I think that's the right way for us to think about it. That's our dual mandate there. And
Coinbase is about to stop me out on the runners.
We have a strong economy. We've got
break even on the second
growth.
half. Coinbase just stopped me out on the break even second half.
Strong growth rate for our economy. The labor market continues to print jobs at a pretty high rate. Unemployment's still low, so we have the ability.
Guys, what's interesting is with the rally in the Qs and the S&P, the Russell really hasn't been participating since we've been in this little bit of a move. It's all mega cap tech. Google, Meta, Amazon, pretty much trying to go from red to green, all mega cap tech.
We understand that that's the risk, and that's not our plan, is to wait for things to break and then try to fix them. We're trying to balance these two goals in a way that is consistent with our framework, and we think we're doing that.
Evan.
Thank you, Chair Powell. Evan Reiser with Market News International. You have mentioned before the framework review process will start in the latter half of the year. At this point, do you have any specific time frame for the start of that? Who will lead it? Will it be you or a committee group of your peers?
QQQ continuing to squeeze. Look at the blistering rally. Again, participation coming back in from Amazon and Google. The Russell's not moving at all. Small caps are not participating in this rally. It's all your Magnificent Seven: Microsoft, Google, Meta, Amazon, NVDA. Russell still stuck at 205. NASDAQ now up 1.74%. Big discrepancy between the Qs and the SPY, about a 0.5% change. The Russell's still lagging immensely, guys. Again, a fleet of safety. It feels like everyone's just piling back into mega cap tech. Valuations are getting a little stretched in some names, but massive liquidity in Apple, Microsoft, NVIDIA today. I do see that inverse head and shoulders on the SOX L, but just keep in mind, technical patterns at all-time highs have a much higher probability of failing. And we have not confirmed the technical pattern yet. It's just a breakout today.
Test, or alternatively, we see unexpected weakening in the labor market. So those are two different tests. I would say, we're not looking at any one price in any one sector and saying that's the one. We don't target housing prices, for example, and we don't target wages. We target aggregate prices and overall employment. So
But if housing prices remain sticky, could that slow down the pace of rate cuts?
I think you'd look at we'd be looking at the aggregate numbers and asking ourselves what's going on here with inflation at the aggregate level. And of course, if any price that contributed to ongoing inflation would matter. Any price that contributed to ongoing disinflation would matter too. But I wouldn't single out housing as having a special role there. Thank you very much.
Make sure you're trimming there, mindfulness. If you're in profits, make sure you trim some of your day trades. All right, the Fed meeting is now over, so we're hitting the final 42 minutes here. 38 minutes. The Fed meeting is now complete. Let's see what happens from this point. Again, I don't like the fact that the Russell really stayed underperforming. The fact that the Russell had no real rally despite the Qs and S&P pushing higher and higher, it still makes me concerned for this market. You're not having the risk assets perform in the face of this market. Look at the QQQ sell here, guys. QQQ coming in, retesting the prior high pivot, back test zone. This is your breakout. This is your breakout back test. So buyers need to step up here or else this could be a huge failed move. Look at the selling. That's a big candle down right there. And again, the Russell has not participated in the rally, guys, which tells me that there's still a lot of weakness inside and underneath the hood of this market. They're disguising the selling through mega cap tech, semiconductors, and just like that, Qs are coming back in. SOX is pushing up. Apple, Microsoft seeing some selling. Crazy volatility. Good call there, mindfulness. You traded some nice longs there. Let's see. Hopefully you're able to trim and pull some profits off of those day trades, because the market could easily just reverse here. The way the Russell's moving here, again, looking like it's trying to head to the lows. Not a good sign. Dixie's still pressing for new highs on the session, or at least from our FOMC rate decision. So that Dixie still hasn't given up much of its gains, despite some dovish comments. And look at the selling coming into the Qs. We'll see if they want to defend it. We're basically right back in the wedge. Kind of a nothing burger at this point right now. So, I mean, really, if you pulled profits, excellent job. I know we caught a couple shorts, but Qs are coming in. Look at some bearish engulfing candles on some of these mega cap charts now. Things are looking heavy, guys. Things are looking quite heavy. Russell new lows. This is what I'm saying, that Russell 2000 is telling us that something still nasty is brewing. Investors don't want risk. They want balance sheet strength. They want Apple. They want Microsoft. They want the Googles, Metas, because their balance sheets are strong in the face of some potential weakness. Look at the Q sell, guys. Holy moly. Just like that, right? You're reversing that whole entire breakout up move. That's a failed breakout, guys. That's a failed breakout. They could try flushing this all day for the rest of the day. What a sell. He's right. What a sell in the SPY. NQs and Russell. Russell new lows. QQQ coming in. That's one nasty 10-minute bearish engulfing candle on the Qs. I'll tell you that much. Bitcoin coming lower just like that. Powell press conference ends. Dixie's continuing to spike here, guys. SOX S is still moving up. I'm still holding my QQQ short. Still holding my SOXS long. We're seeing the Qs falling pretty precipitously here. Getting a really hard sell side candle. Russell continuing to go lower. Again, the discrepancy between the SPY and the Qs is fairly large, showing yet again complete saturation in mega cap tech. And mega cap tech, the moves recently in Apple and Microsoft are so bloated, making them insane valuations for I know they're quality companies, they're not going anywhere, but when you look at a few different baskets measuring commodities to tech to small caps, tech to bonds, market's still extremely, extremely expensive from my standpoint. But you can clearly see a huge divergence with that recent rally in the Qs, putting in new highs, all-time highs, new highs on the day, and the Russell just floundering and breaking down. One big chop fest in the market, and this is how algos are designed to really push and test people to the limits. I mean, how many people were covering their shorts? Boom, boom, boom. And then they rip it back down on them, and now people are trying to get back in their shorts. I mean, just wild price action. And guys, I think the Qs can break pre-market high. I really do. That's a hard sell. Look at the Russell at the lows, guys. Dixie spiking. 10-year yield only down 2%, so it's rallied 1.1% off of the lows on the 10-year yield. So again, you're seeing the yield spike. VIX is getting a nice little spike. I'm seeing a lot of the financials getting faded here. A little bit more weakness creeping into the S&P. You've had the XLF now go negative, guys. The financial ETF has now gone negative. That's not a good sign. When yields are still soft, dollar's still soft. Look at the sell side pressure coming into the markets, guys. This is looking nasty. This is looking nasty. GME heading to the lows. Yeah, everything's going down right now, guys. Everything is falling sharply. Look at that. Just like that, right? From a crazy bull move to now a extreme bear move. And this is what I said. Like, patterns have a very statistically high probability of failing at the all-time highs. SOXL looking like a daily chart inverse head and shoulders. Still holding structure, bullish structure, and the pattern's still there. Look at this. We're now in the money on our QQQ short. Been waiting all freaking day for this thing to come down, and now we're finally seeing some positions turn around the corner here, and the Qs can sell off pretty much all day, guys. Don't be surprised. The inverse head and shoulders on the SOX gives us upside to about 23. Had a chance to cover there. I'm still holding my Qs. I'm not covering. I still think this market's bloated, heavy, bit of a failed breakout. Dixie's moving higher. Yields are bouncing. Small caps near the lows. I mean, they're really, really selling that. That 10-minute engulfing candle just wiped out the last, basically for the whole day on the Qs. If you look at this 10-minute engulfing candle, that's a freaking nightmare candle for the bulls. You've literally engulfed everything on the Qs in 10 minutes. Your whole day. Let me just hide these things here. Whoops, sorry about that. I go to the regular trading session, pretty much from this 940 high, we've almost engulfed all of the price action. But don't be surprised if we go lower. That's just one sell candle, 10-minute basis. Dixie's still moving, NVDA breaking, Tesla breaking, Apple breaking. Whoa, whoa, whoa. So again, the importance of not getting too overconfident in the trade on the bullish side, because if you didn't take any profits, now look where we are. Basically trying to break down on the Qs, and there's quite a bit of downside that could ensue here, guys. There's quite a bit of downside that could really come into fruition. This type of candle formation, I'm not really liking it, especially when I look at how the Russell's moving, how financials have moved negative. Again, I still see a 618 potential retest. We'll see what happens here. They're just chopping people around. All sorts of crazy, crazy price action here. You've got a mean, nasty, hourly reversal signal on the Qs. A really, really nasty signal. Coinbase got wrecked. Qs are still coming. Russell's still coming. Don't be surprised if they keep flushing this thing, guys. Do not be surprised if they keep flushing this market. We are extended beyond belief. Apple, you don't see Apple up 7% and then another 5% often. That's like telling us that, people are liquidating other sectors and just moving into the behemoth. SOX S, look at our SOX S long, starting to move even higher here in the face of things. A little bit of an inverse head and shoulders breakout. Come on, Qs, chop the Qs down, chop it down, chop it down, chop it down. Qs are trying to be defended at pre-market high, but the SPY and Russell are bleeding, guys. The SPY and Russell are really, really bleeding here. Not a good sign for the equity markets. Yeah, I'm positioned net bearish, net short on this market. Now, I do have some long exposure in some individual tickers, but I'm net bearish. I'm net bearish. I mean, I'd highly encourage you to look at all the semiconductors. Go through your SOX, go through your SMH. Add up all the market caps of all of these semiconductor companies and compare it to the compounding annual growth rate of what the sector is supposed to be going through. And it's a little extreme. We've pulled forth a lot of potential earnings and gains, I think. You know, a lot of these stocks in the semiconductors can't keep growing at the rate they're growing in terms of their stock price. And then you factor in Apple too, Microsoft, Meta wanting to get in the game. I mean, I know they're here to stay. AI is not going anywhere. It's certainly going to enhance our world as we know it. But everything has to be within reason. The rubber band can only be stretched so far. There's no panic selling. No, this is a technical sell-off. This is technical price action, people taking profits. You know, you have a really, really strong weekly negative divergence on the S&P and the Qs. Yep, AMD going negative on the session. There you go. Good observation there. I'm seeing a lot of red on the screen now. And with financials going negative, XLF, you still have 1, 2, 3, 4, 5, 6 sectors in the S&P green, but yet we're putting in new all-time highs. And Qs are putting in new all-time highs. It's just showing you things in the mega cap tech land are getting very expensive, very saturated. And I mean, on a technical basis, you look at some of the charts, extended. Fundamental basis, you look at some of the valuations, extended. You know, sure, we're going through a bit of a inflation regime where maybe we never get back to 2%, so therefore stocks can have higher earnings and higher multiples, but it's really just been mega cap tech that has performed. Russell's still significantly underperforming. Qs are consolidating at pre-market high. Oil seeing a little bit of selling. Dixie's still holding near the highs of the session, guys. So the Dixie is still holding. Russell's at 203.54 on the Russell, guys. 203.54. And look at that Dixie reversal. I mean, making a strong rebound off of the lows. Should apply more pressure to these equity markets. What's the volume on the Qs today? Let me just double check that. 26.9 million shares on the Qs so far today. On the SPY, we're trading about 39.9 million. It's fairly light volume today. Fairly light volume today. Nothing crazy. Qs are seeing a little bit of accumulation here, but I do think we break this area. Again, I'm still holding my QQQ short common shares, which we're now just basically flat on. Again, yields are moving, guys. Yields are moving up. 10-year yield only down 1.86% when it was down 3.11. SMCI has gone negative. You have Meta negative. Amazon negative. Qs are getting a nice little bid here. GME going lower now, trading at 26.80. Wow, GME looks cooked, guys. GME looks like it's a little bit cooked here in the near term. Unless Roaring Kitty comes out with something crazy, but GME is looking a little bit gnarly here. QQQ getting a really big buy the dip. Big stick back up. Defended at pre-market high. Big bounce coming. Strength back into Meta, Google. Big bounce in the Qs. Bitcoin at 68.5. Chris is saying, Ram's asking TC, you see the market dumping by this Friday? Dumping, strong word. I mean, I do see some sell side hitting the tape. I really do. You know, we're just very extended. So I do think the markets can correct and see some selling, but we're still in a strong trend. I mean, it's tough, right? It doesn't have to just completely fall. There's a lot of buy the dip, but yeah, we're into really, really solid resistance here on the Qs. I mean, even if we look at this QQQ on the daily chart, you know, look at this parallel channel that we're trading into now, where we had a nice peekaboo breakout above it, and we're at the top of this channel. You know, there's some clear technical resistance. And then you look at, and this is a long-term channel going all the way back to your 2023 September high pivot to your 2023 October low pivot, and we're now at the very tippy top of the range. You know, the top of this range is right here at this 474.35, so extended for sure. You know, even the NDX chart has had a blistering breakout to the upside. And really, I said, you know, there's a chance that we can blast through this resistance. I remember discussing this in last night's video with members. I said, you know, that we're at resistance, but if we get through this channel, the next stop is going to be this channel on the NDX. And then even if we get through there, then you have an additional trendline resistance going way, way, way back on your chart. That confluence is right around the 19.9 level. So again, markets are hitting technical resistance, especially the NASDAQ and tech equities. And you look at how extended Apple is now on the weekly chart. You know, 1, 2, 3, 4, 5, 6, 7, 8 consecutive weeks of upside on the weekly chart. A weekly RSI of 72, daily RSI of 80. I mean, very, very extended in here. Very extended. And I mean, what's really changed about Apple? Not too much, other than potentially some more data that they're willing to share and spy on with OpenAI. Who knows? But GME getting dusted, guys. GME is getting dusted here. Coinbase got wrecked. Bitcoin coming down. Yeah, I think that's a good plan, Chris. A nice little gap down on GME. That could work out. Look at this fade on the Russell. I mean, still holding up 1.36%, but big reversal from the highs, right? But the Qs are still strong at the moment. Again, we don't want to get, even though I'm net bearish, we don't want to get beared up too quickly. I mean, the market's still pulling back from all-time highs. Whenever you get all-time high pullback in indices, you will often see a buy the dip hit the tape at some point. GME now down to 26 bucks. Down on the session almost 15%. Interestingly, coming up into a potential bounce level on GME here. But I'm just worried that they keep flushing this market because of how weak the reversal in small caps have been. Again, I would not be shocked if they keep flushing this thing into the close. And what's crazy is, I mean, we just loaded up on some nice little Apple put play. QQQ looking to break a little lower here. Dixie still holding and maintaining structure. Look at the Russell. They're trying to flush the Russell. So we're basically break even on our QQQ short. I still think we could get a move. We have about 18 minutes left into the close. I could still see a move happening down to 471. This 618, kind of right around this low pivot at 930. I could still see a move. I'm still holding my Qs, my SOX, my Tesla. Bitcoin dumping. Nice trade on Coinbase. Everyone should have caught that one. GME got annihilated there. Oil taking a bit more of a sell side pressure day. Qs are still being defended here. Intraday action under pre-market high though on the Qs. There is a report that the amount of premium being sold in GME could be Keith. Interesting, interesting. Could be. Could definitely be. But a full round trip on GME. I mean, from the high pivot around 33.75 to the low now down 25%. That's extraordinary. Puts on that name would have absolutely printed. So again, really looking at things here, not really impressed with how financials have done. They've gotten faded. Your staples are down 1.14. Utilities, healthcare negative. Communications under pressure through Meta, Google, and a few other names. NVDA looking like it's forming a bit of a 5-minute bear flag here into the close. Tesla really coming down at 177.50. I'd like to see the Qs get flushed here. That would be ideal. If they flush the Qs here into the close, that would be absolutely ideal. SOXS continuing to grind higher as stocks come down. Bitcoin testing 68K at the moment, guys. Apple really selling off here, guys. Apple really selling off. So it was a nice little entry on our Apple put play, guys. We pretty much picked the exact high on our Apple $200 put. QQQ, we're now in the money again. So nice little session so far. I mean, we printed in the morning. Been waiting on these Qs. Our semiconductor entries off of the lows this morning. Already both in the money with members, but looking for a lot more downside in the equity markets. We're still extended beyond belief. And just the amount of sheer buy-side pressure in Apple, Microsoft over the last few sessions should be concerning. Again, Apple up 7% and then another 5% today. You don't see that often, and when people are piling back into mega cap tech, becoming more saturated, it's a little concerning. Dixie quietly creeping higher. Interestingly enough, Google, Meta have been holding some strength here into the close. I wonder what the Bloomberg channel is saying. I haven't even checked to see what the news is pumping now. All right, guys, I think the Qs are going to go through another little flush here. Still a very strong day, even though we've seen some late day selling here. Very strong day for the equity markets, mega cap tech, individual names, very strong day. Not all mega cap tech has performed today, with the QQQ up 1.2%. It's very odd to see Amazon struggling, Meta struggling. Google's firmed up here into the close. Apple really starting to come in. Hitting a high of around just above 220 on Apple, and now starting to test 214.10. Google's starting to rip. NVDA catching a bit. Bitcoin's dumping here, guys. BTC is dumping sharply. BTC had a huge dump there. Anyone still holding coin, well done, because Bitcoin just took a big shit. Look at that. Full round trip on BTC, guys. I would not mind if this collapses down to that prior day low. QQQ getting a sizable push back up. Big bounce in the Qs here late into the close. Coinbase and crypto under pressure. Some strength coming back into Meta and Google. So XLC seeing nice rotation here late into the close. Marijuana stocks still holding some slight green price action. GME is trying to see a nice sizable bounce off of the lows here. Final 11 minutes here in the session, guys. Final 11 minutes here in the session. Let's see if they want to flush this QQQ. They're certainly hitting crypto. Look at this capitulation candle on Bitcoin. I mean, wow. Let's see if the Qs want to head back down to the lows here of this little sell range. $51 million on strike premium $20 calls. Has to be, yeah. Yep. NVIDIA about 2.2 million to the sell side at the moment. You are seeing it bounce here into the close. Bitcoin going lower, guys. This is great for our BITI. I don't mind this at all. I do not mind that at all. Great for our Bitcoin short. Apple, Microsoft trying to get a little bit of a bounce here. Qs are still being defended at that pre-market high. 473.50 is your pre-market high on the QQQ. 473.50. And honestly, the way Bitcoin's selling off now, it could have a flush here in the next couple days to about 63K. If Bitcoin loses its 50-day moving average at around 66,000, things could get nasty for it real quick. Nice bounce in the Qs. Russell. Everything seeing a little bit of a late day bid here except for crypto. Bitcoin's still flushing here. Bitcoin has now made a full round trip after being up a couple percent. Now it's down. You still have Coinbase up 4.68%. MicroStrategy up 3.23%. Guys, I might try to swing a coin put here into the close. Let's just see what we're looking at. Might swing a Coinbase put here with Bitcoin losing its positive price action. VIX moving lower. Yeah, the UVXY, that's what I trade. That's down on the session about 3.21%. I mean, you still have the indices very strong, right? Q's up 1.3, Russell's up 1.7, SPY up 0.89. It's still a strong rally day today. SOX is up 2.5%. So, I mean, the VIX right now, yeah, is not really performing. All right, final 6 minutes here. Let's see if they close us below pre-market high or above pre-market high on the Qs. I'll flip back to a shorter time frame here just so we can see some moves. So bulls are defending this pre-market. Look at this pre-market high. It's been a brick wall today. Bounce, bounce, bounce. That pre-market high on the Qs has been a brick wall. Wow. Semis right back down to the lows. 22.06 on the SOX. Intel getting a huge boost here into the close. Oil, nat gas still kind of just staying stuck in their same range. Full round trip on SOX. Holy. What crazy price action in this equity market. Unbelievable price action, eh? Dixie still closing well off of the lows. QQQ trying to push back up into its little bit of a wedge pattern zone. And then we still have some influence on the semis, guys. Broadcom here, set to report earnings, and it's going into the session off of a strong gap up. So AVGO set to report earnings here. Going into the session strong and firm. This has a huge weighting in the SOX ETF. So I mean, it's important to watch. It's important to watch. Yeah, if you get a positive report there, mindfulness meditation on AVGO, then that should help lift your SOX position. So, I mean, if you get a positive print on AVGO, it will apply more upward pressure to the semis. Very big weighting in the SOXX. Wow, Google made a stunning reversal, back up, now up 0.89%. So it seems like a bunch of the liquidity that came out of Apple over the last 40 minutes went right into Google. Kind of an inverse move on the charts when you look at the two charts. NVDA strong close, Google strong close, Meta strong close, Apple a little bit of a weak close, but still a strong day for Apple. Microsoft holding steady into the close, Bitcoin weak close, Amazon strong close, NVIDIA good close. Tesla a little bit laggy and weak. So going into earnings, Broadcom is expecting 12.05 billion in revenue. Yeah. It's always in our humble opinion. We have to stay humble. I mean, we're all gonna be wrong, we're all gonna be right. No one's perfect. Other than the JP Morgan trading desk. Alright guys, that's the market close. Equity markets are closed. QQQ finished up 1.31% on the session. Nice job trading with us today. Good job on uranium. Good job on the SOXS position on the day trade front. Nice job on Coinbase there off of that FOMC move. Overall, still going to swing my QQQ short position overnight as well as Tesla. That one did come in. But other than that, it was a decent session for us. We were able to catch some longs and some shorts in the overall market. I am going to see how Broadcom reacts here. Again, expectation from a few viewers here about a 10 to 20% gap up. You know, if you gap up, say 10% in this name, puts it at well above 1600. So we'll have to watch and see what transpires here in Broadcom because it's a very important metric to the Qs, the semiconductors. But overall, a decent session for us in the live day trade room again. We'll see if Broadcom wants to make a move here into the close. I'll stay on a little bit here for the earnings. Yeah, I mean, I see a resistance trend line on Broadcom's weekly chart that if it does hit that 10% gap up, we're going to get a nice, it hits that trend line with sheer conviction. I mean, the level that I'm looking at on the weekly chart here of Broadcom is interesting here. Fairly interesting. So you have two real trend lines that I'm watching on AVGO. So we'll continue the earnings period here. We'll continue the stream for a little bit. Not too sure what time this earnings report is set to take place. Anyone have a calendar, earnings calendar in front of them? So we do have AVGO set to take place here. Qs are seeing a little bit of selling in the pre-market or the post-market here. Sorry guys about the noise there. Just dropped my phone. Q's seeing a little bit of softening in price. Again, Broadcom's a very expensive institutional stock. It typically beats on earnings on all fronts. Very, very strong name. Very high priced equity. The only negative aspect for Broadcom that I see is that it's got a weekly RSI divergence shaping up. Bit extended. Haven't really checked at its valuation. Let's see some. So its market cap heading into this is 692 billion on Broadcom. $692 billion. In terms of Broadcom's 1 week performance, it's up 11.1%, 1 month 10.9, 3 month 18.4. It is trying to move up here in the pre-market or post-market. Chris asking, you think anything left in SunPower or played out? It's still holding its 7-day moving average. So, I mean, there's still some bullish momentum there behind the name, but it's definitely getting a little bit long in the tooth here. It's had several attempts at breaking out to fill that gap fill at 437 that I'm eyeing, but hasn't been able to do so. So, I mean, it's getting a little bit stretched and long in the tooth. A little bit stretched and long in the tooth, that I don't even know when their earnings release is anymore. I mean, I had it that they reported on May 1st, and they missed on both fronts. So it shows on my screen that SunPower reported on May 1st. But that was interesting. Just waiting on Broadcom's earnings here. AVGO still looking. I'm looking at some of these stats, and I mean, heading into the meeting, Broadcom is pretty much its most expensive it's ever been. PE sitting at around 54.16. Again, that's the most expensive it's been in quite a long time. Price to sales sitting at 17.5. Price to cash flow 36.17. But they've been growing their earnings pretty consistently. And they've really been pushing on their semiconductor solution, infrastructure software. And again, because it's an expensive institutional semiconductor play, it does have influence on other names like NVIDIA, AMD, SMCI, the likes, pretty much the whole sector. I think it boasts almost a 6% weighting in the SOX. I have to double check that, but I think it's between 6 and 7%. Let's see what type of action we get here. Let me check to see what time that their earnings are expected to come out here. So the last three earnings report they've... Whoa, sorry about that, guys. I don't know what the heck's going on with my laptop again. Another restart. Weird, weird, weird. Alright guys, I'm going to have to call the stream to an end. My computer's being a little bit glitchy here, but I'll update members in the pre-market. Thank you all for tuning in. Great Great job trading FOMC. Nice couple winners in our pocket today. It was a pretty big chop fest, so awesome job. But we'll see you tomorrow on the charts, and pay attention to what Broadcom does there, because it will influence semiconductors tomorrow. On that note, thank you all for tuning in. We'll see you on the charts a little bit later. Cheers, guys.